Hello everyone, good morning, good afternoon, good evening to all of you. Welcome once again to this live analysis. स्टार्ट करते हैं आज का सेशन. फिलहाल के देखोगे क्रूड ऑयल नेचुरल गैस को. क्रूड ऑयल एक हल्का सा गैप डाउन ओपनिंग हुआ है परसों. मार्केट हल्का सा सेल ऑफ में आया था, रेंज के अंदर ही चला गया था, हल्का सा गैप डाउन हुआ है. लेट्स सी क्यों स्ट्रेट बनता है. तो नेचुरल गैस परसों अच्छा था, काफ़ी सेल ऑफ आया, फिर बाइंग आई, एक रेजिस्टेंस फिर से था, उसका ब्रेकआउट हो गया था, ऊपर रेजिस्टेंस से एक सेल ऑफ आया था, हल्का सा गैप डाउन वही चल रहा है, नीचे रीटेस्ट करता है तो देखते हैं बाइंग का प्लान रखेंगे नीचे. लेवल फिर से रिमूव कर देते हैं. लास्ट ट्रेडिंग सेशन है, कल और परसों मार्केट वैसे भी क्लोज है, फ्राइडे सैटरडे और संडे, तो थोड़ा सा ध्यान से रख के ट्रेड करना. 12:30 लंदन सेशन ओपन होगा. एंड के बाकी 12:30 लंदन सेशन ओपन, 5:30 न्यूयॉर्क सेशन ओपन, देन 7 PM यूएस मार्केट ओपन. 6 PM पे डेटा भी है बट वो टेंटेटिव लिखा है सब जगह, बिकॉज यूएस गवर्नमेंट शटडाउन हो गई है, तो जो डेटा हैं वो इम्पैक्ट करेंगे, या तो वो आ भी सकते हैं, डिले भी हो सकते हैं, रिवीजन भी हो सकता है, और हो सकता है कैंसिल हो जाए. तो 6 PM और 7:30 पे डेटा है गोल्ड और सिल्वर के लिए. लेट्स सी आता है नहीं आता है डेटा आज. इंपॉर्टेंट है सर्विस पीएमआई का और एम्प्लॉयमेंट चेंज का डेटा. मेरी वॉइस आ रही है तो लेट मी नो इन द कमेंट बॉक्स. ठीक है, आई थिंक आ रही है वॉइस क्लियर. ठीक है, तो एक बाइंग का ट्रेड यहाँ पर नेचुरल गैस में, वो जो परसों ब्रेकआउट हो गया था, क्लोज होते होते ओपन इक्वल टू लो कैंडल बना के, ये वाली कैंडल ओपन इक्वल टू रेजिस्टेंस पे था, ये ओपन इक्वल टू लो बना के ब्रेकआउट कर दिया था इसने. सो वी कैन एक्सपेक्ट रीटेस्ट फ्रॉम दैट पर्टिकुलर. एंड लेट्स सी उसके बाद नेचुरल गैस के अलावा क्रूड ऑयल में भी देखते हैं. क्वेश्चन हो तो कमेंट बॉक्स में पूछ लेना. और कोई मेजर न्यूज़ तो है नहीं. इंडियन मार्केट भी देखोगे तो थोड़ा सा पॉस ही है, साइडवेज कह सकते हो. निफ्टी फ्यूचर, बैंक निफ्टी फ्यूचर दोनों ही मॉर्निंग पे हल्का सा गैप डाउन ओपन जरूर हुआ था, हल्का सा, ज़्यादा नहीं. निफ्टी फ्यूचर थोड़ा बहुत नीचे गया बट साइडवेज चला गया. ऊपर रेजिस्टेंस है, मैंने परसों ही बताया था आपको, वहाँ पर अभी भी हिट नहीं किया है, टच करने अभी तक आया नहीं है प्राइस. आ जाता तो बेटर रहता. के ऊपर 25,080 के आसपास मेजर रेजिस्टेंस है, बट अभी तक नहीं आ रहा है. सेम बैंक निफ्टी भी था, बैंक निफ्टी भी हल्का सा गैप अप, फ्लैट ओपनिंग, देन मोमेंटम बाइंग साइड पे, देन ये भी साइडवेज चला गया. तो इंडियन मार्केट तो साइडवेज है. बाकी गोल्ड देखोगे रैली करके थोड़ा सा पॉज लिया अर्ली मॉर्निंग आज जब ओपन हुआ था, उसके बाद साइडवेज ही चल रहा है. तो ऑल टाइम हाई हिट किया था कल. कल मतलब लास्ट ट्रेडिंग सेशन पे, कल यूएस मार्केट तो ओपन ही था, तो वहां पर शाम को डेटा आया था, उसके बाद कंटिन्यूसली फॉल किया बट अगेन वही रिकवरी कर गया. तो ऑल टाइम हाई की ओर दोबारा जाता हुआ. लेट्स सी रीच करता नहीं करता. इंट्राडे में तो साइडवेज ही है. फॉरेक्स के अकॉर्डिंग रेंज बाउंड। कि मॉर्निंग पे क्रूड ऑयल ओपन तो सपोर्ट पर ही हुआ था। मतलब सपोर्ट के हल्का सा नीचे गैप डाउन ओपन हुआ था, अपसाइड गया, रिकवर कर गया है, तो इट इज स्टिल ऑन सपोर्ट। सपोर्ट ही मान के चलेंगे इसको अभी भी। हल्का सा नीचे आता है प्राइस क्रूड ऑयल का तो एक बाइंग का ही प्लान करेंगे। सपोर्ट होल्ड करके बैठा है अभी भी। ठीक है, बाकी ये जो गैप डाउन हुआ है वहां पर जो परसों वाला सपोर्ट था, याद होगा परसों भी एक सपोर्ट था वहां पे। मोस्ट प्रोबेबली दैट एक्ट लाइक एज अ रेजिस्टेंस, क्योंकि ये भी गैप डाउन ही ओपन हुआ है सीधा, तो सपोर्ट का ऊपर भी ब्रेक डाउन हो गया है। देखना पड़ेगा ये किस तरह से रेजिस्टेंस की तरह काम करता है। ये परसों वाला आपका सपोर्ट था, याद होगा। यहाँ पर कई बार मार्केट सपोर्ट लेके चला गया था, सीधा गैप डाउन हुआ है तो इट एक्ट लाइक एज रेजिस्टेंस नाउ, क्योंकि सपोर्ट का सीधा ब्रेकडाउन हो गया है तो ऑटोमेटिकली वो रेजिस्टेंस बन जाता है। कि जिस तरह से मॉर्निंग पे सीधा गैप डाउन ओपन हुआ था, यहाँ पर देख पा रहे होगे सपोर्ट के नीचे ही ओपन हुआ, हल्का सा नीचे आया फिर ऊपर गया फिर हल्का सा ऊपर क्लोज हुआ, धीरे धीरे करके रिकवर कर गया लेवल के ऊपर। तो अब समझ लो इस पे जितने बायर हैं सब आ चुके हैं यहाँ पर क्रूड ऑयल में। ज़्यादा देर अब यहाँ पर सपोर्ट को भी होल्ड नहीं करना चाहिए, तो ऊपर जाके वहाँ से सेलिंग अच्छी आ सकती है, क्योंकि डीप लेवल से बाइंग आ गई है, समझ जाओ यहाँ पर क्रूड ऑयल में अब। ऊपर वाले जो रेजिस्टेंस थे वो सारे, वो तो मेजर रेजिस्टेंस है, वहाँ पहुँचेगा तो देखेंगे। ये भी हो गया टेस्ट, नाउ इट इज वीक। एक बार यहाँ से रेजिस्टेंस लिया, सेलिंग आई, दूसरी बार ऊपर से, इस पे नहीं रुक सकते अब। तब तक अब प्राइस वापस 5490 के ऊपर सस्टेन नहीं करता, इट इज़ नॉट अ बुलिस, कहीं से ये बुलिस नहीं है फिर तो ये। ये ऊपर से सेल कर देंगे इसको। ये ऊपर वाला एरिया रीटेस्ट जोन है, ध्यान रखना, दैट इज अ रीटेस्ट एरिया। और एक रेजिस्टेंस भी है थोड़ा सा ऊपर 5525 30 के अराउंड, तो देखते हैं ये रीटेस्ट पे रुकता है या रेजिस्टेंस पे रुकता है क्रूड ऑयल। ठीक है, ये भी आपका एक रेजिस्टेंस जोन है नियर बाई में, ये तो रीटेस्ट है खैर। वो ऊपर वाला रेजिस्टेंस मान के चलना, ये रीटेस्ट हुआ आपका, दैट इज रीटेस्ट अबव लेवल इज अ रेजिस्टेंस। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। रीटेस्ट से थोड़ा सा कम क्वांटिटी में ही सेल करना, ठीक है, क्योंकि ऐसा भी हो सकता है कि ऊपर वो रेजिस्टेंस लेने चला जाए, इवन दो रीटेस्ट भी ठीक ही है, लाइक क्यों, बिकॉज दैट वाज अ स्ट्रॉन्ग सपोर्ट एरिया और सीधा गैप डाउन हुआ है तो ब्रेक डाउन हो गया एक तरह से उस सपोर्ट का, इट कैन एक्ट लाइक एज अ रेजिस्टेंस एज वेल। बाकी नीचे, इसके नीचे और सपोर्ट देखें क्रूड ऑयल में तो 15 में टाइम फ्रेम पे, लेट्स सी इसके नीचे अगर सस्टेन कर गया 5400 के नीचे तो फिर और कहाँ तक गिर सकता है।
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Stephen Carroll.
And I'm Caroline Hepker.
UK counter-terrorism police have named a British citizen of Syrian descent as the perpetrator of an attack on a synagogue that killed 2 people. 35-year-old Jihad al-Shami carried out the attack on Heaton Park Hebrew Congregation Synagogue in Manchester yesterday. Al-Shami entered the UK as a young child and was granted British citizenship in 2006. The Prime Minister, Keir Starmer, called the killings a terrorist attack that attacked Jews because they are Jews.
On behalf of our country, I express my solidarity, but also my sadness that you still have to live with these fears. Nobody should have to do that.
Keir Starmer also promised extra protection for Jewish communities across the UK. 2 men died and 3 others sustained serious injuries during the assault on the temple, where worshippers were gathered for Yom Kippur, the holiest day in the Jewish calendar. Police said the attacker drove a vehicle at people outside the synagogue and then attacked them with a knife before being shot dead by officers. He wore a vest that police said had the appearance of an explosive device, but was later found not to be viable.
Now, in other news, Munich airport has suspended flight operations after several drone sightings affecting thousands of passengers at Germany's second busiest hub. 17 flights were grounded and 15 arrivals diverted to nearby cities. It follows similar incidents in Denmark and Norway. Recent incursions into European airspace have prompted European leaders to discuss building a drone wall. Here's Danish Prime Minister Mette Frederiksen speaking at their summit in Copenhagen.
We have to build a much stronger European defence and, of course, also respond to hybrid threats that we face. One part of this response will be to strengthen our defence against drones, to increase our own drone production, and it has to be in very close cooperation with you in Ukraine.
Danish Prime Minister Mette Frederiksen speaking there alongside Ukraine's Volodymyr Zelensky. Several incursions into NATO airspace last month were attributed to Russia, though it remains unclear if the events in Oslo, Copenhagen and Munich are connected. Moscow has denied all accusations of breaching the alliance's airspace.
US President Donald Trump is weighing slashing thousands of federal jobs. The news comes ahead of a meeting with his budget director Russell Vought as the White House pressures Democrats to end the government shutdown. Press Secretary Caroline Leavitt told reporters the cuts will be focused on agencies that don't align with the administration's values.
It's likely going to be in the thousands. It's a very good question, and that's something that the Office of Management and Budget and the entire team at the White House here, again, is unfortunately having to work on today. These discussions and these conversations, these meetings would not be happening if the Democrats had voted to keep the government open.
The White House's Caroline Leavitt speaking there. Her comments came after the president described on social media what he'd called Democrat agencies, most of which are a, quote, political scam. The Congressional Budget Office estimates that about 750,000 employees are being furloughed during the shutdown at a cost of $400 million per day in lost compensation.
Bridgewater Associates' flagship macro fund climbed 26.4% in the first 9 months of the year on the back of tariff-fueled market uncertainty. Bloomberg understands that the hedge fund is now on track for its biggest gain since 2010. Hedge funds have posted strong gains this year, aided by surging US shares and volatility in bond and currency markets.
The launch of Boeing's latest plane is set to be delayed. The hold-up could result in billions of dollars in extra charges. Bloomberg's Tiwa Adebayo has more.
Already 6 years late, Boeing's new 777X won't join its fleet until 2027. Bloomberg understands that some of the manufacturer's biggest customers are already making plans for a further delay. According to analyst estimates, the cost of this latest setback could run from $2.5 billion to as much as $4 billion. The jet is of major strategic and financial importance to the firm, especially as part of its battle with rival Airbus for a bigger slice of the lucrative long-haul market. A Boeing spokeswoman declined to comment, citing a quiet period ahead of earnings. In London, Tiwa Adebayo, Bloomberg Radio.
Italy has approved a budget that cuts the deficit to 3% of GDP this year, bringing the country within the EU's fiscal rules for the first time since 2019. The deficit is projected to shrink to 2.8% in 2026 and keep falling in the following years. The plan opens the door to Italy exiting the EU's budget monitoring regime, which could then allow Prime Minister Giorgia Meloni space for tax cuts and more defence spending. Pictet's fixed income strategist Laureline Renaud-Chatelain told Bloomberg Radio that France and other European countries have lessons to learn from Italy.
There is this commitment at the political level that they want to put in some reforms, that they don't want to estrange themselves from Europe, even though you have this populist vibe a bit still from Meloni. But I think overall what we've learned is really political stability is very good for business. It's very good also for markets. And I think that's also a template that maybe we will need to have in the rest of Europe, and in particular in France.
Pictet's Laureline Renaud-Chatelain speaking. As uncertainty over France's budget continues, French Prime Minister Sébastien Lecornu is holding meetings with lawmakers from different parties today as he tries to build support for a spending plan.
Those are our top stories. On the markets, the MSCI Asia Pacific Index is up by 0.4% today. We are seeing Japanese shares powering ahead, up by 1.7%, largely being lifted by technology shares. European stock futures are higher, 0.2% at the moment for Euro Stoxx 50. The dollar is trading 0.1% stronger. The euro is at 117.17 against the dollar.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Stephen Carroll, and this is Bloomberg.
Exclusively with McKinsey's global managing partner Bob Sternfeld earlier today, and he talked about what really his clients are keeping an eye on. Here's a portion of that conversation.
You know, one of the things that I've learned is this journey on continuing to find best talent and diversify that is one that you never really get there on. Mm-hmm. And so when you pull back, it's great to pick individual marks. But in the last 4 years, we've doubled the number of women partners in McKinsey. Mm-hmm. We've reached parity for the first time in our inbound hiring. And we're taking our own medicine, and you've seen some of this from the work we've published, to identify where the broken rung moves. Mm-hmm. You know, now we're focused on sponsorship in the middle tenure years, mm-hmm. to ensure that you have disproportionate odds of success going forward. And everybody should have sponsorship, by mm-hmm. the way. But we're really focused in on that to ensure that we don't slip back or lose ground. So we're accelerating around our advancement in women, but I think we could do more. I think we could go faster.
Overall, with regards to your total employee count, are you still looking to trim headcount, or are you adding?
You know, we've always been adding, mm-hmm. right? Despite what you read. McKinsey's made up of two sets of folks. We have some folks that you probably are thinking about, which are our client deployed people that go out to our clients. They live there, you know, most of the week and help drive the change that's enabled. And that's about half of our population. Mm-hmm. The other half provide support to those folks, usually from remote locations. And you know, we have two different things going on at the same time. Mm-hmm. We're continuing to add folks who are client deployed. And we see an ever-increasing need of that, and we're aggressively in the market right now looking to expand that. But we are rethinking our center-based operations by leveraging all of this new technology. Mm-hmm. And my suspicion is going forward, we will continue to look to ways to change that model, and that we will upskill folks more. We'll probably have fewer folks in the non-client deployed areas, but they will be leveraged by today's technology and AI. And that's what you see going on around us, where we've figured out a way to continue to grow this body, but we're looking to optimize this body. And so I think we can do both at the same time.
How have you employed AI and some of these new technologies so far? And I mean that more so, not just on what's going on in the back office, if you will, but also for the client-facing employees.
Well, you know, I'd maybe start with the client. And so let's start with what's going on in enterprise, both in America and around the world. And, you know, I think we are facing almost a gold rush type of mentality about the pace and scale of technological change that we're seeing around us. Things are moving really fast. And I do think that there's wonderful promise associated with this. But it's going to be hard to get there. And I think we're not talking yet enough about how hard it is to really change enterprise, to rewire enterprise, to realize the value from this new technology. And so what we're seeing in our own proprietary research is no different than some of the other public reports around this. Enterprise spend on technology is up, but real value delivery is yet to be had. And when you get to that, some of the underlying causes are, you got to think about domain-specific applications around this. And what matters in a bank is different than what matters in a semiconductor company. Got to think about changing the org model. You know, what does the org model look like in 5 years' time? And what does that mean for the skills profile as you think about the skills that employees need to be able to leverage this technology? So that's going on in our clients. It's no different than in ourselves. You know, we're a 40,000 person organization spread across the globe, and what we're finding is, one, how do we think about the highest application areas? And I mentioned our knowledge centers are one of the biggest areas that we're applying this technology. But how do we also arm those client-facing consultants with tools that make them, I like to call it, make you superhuman, not superfluous? And because I often get asked, and maybe you'll get to this, you know, I get asked by a new young hire, is AI going to take my job? Right? Is this going to work me out of a job? And I say, well, it depends. You know, if you define your job as it is today, probably. Right? But if you use this as a moment to figure out what are all the things that AI can do, and then you use the time that is freed up to go help solve even more complicated problems with the client, no. Because this is a belief that, look, there'll always be something more complicated. There'll always be something more aspirational that our clients want to tackle. And so we're on this race to figure out, how do you redesign work as you arm people with these new and amazing tools?
How much is this discussion of AI dominating the requests that you're getting from clients for help right now?
If I looked at the two biggest topics worldwide, and it varies based on where you are in the world, you've got a great appreciation for this, but the two biggest ones are technology writ large, which AI is at the center, but I widen it to technology. That's about 40% of the work that we're doing right now worldwide. I'd say quickly followed with, in some way, shape, or form, how do I make my organization more resilient, given everything that's going on in the world? And a belief that resilience is going to matter because I will withstand future shocks. So I need to innovate with this technology, but I need to make myself resilient at the same time. Can you help me with both of those?
Are clients generally constructive about current conditions right now, not just here in the United States, but around the globe? I mean, there's been a lot of geopolitical shocks, obviously a lot when it comes to various policies coming out of the US government as well as Europe and now over in Asia. Are they comfortable with where we're going?
You know, I think the role of a CEO is not necessarily to ever be comfortable and in any context. And, you know, and if you're an investor and you find a really comfortable CEO, that may tell you something, right? You know, and so there is this idea, I think, a role of a CEO is at one point is to be aspirational. How do you set an aspiration for change? And And back to the technology point, I think you do see a lot of excitement that, although it may be hard, the potential for these new technologies to transform who I am exists. Drug discovery, radically shortening the cycle times, amazing customer experience, you name it, right? But on the other, that the world is getting to be a more volatile place on any dimension. You talk about a bit of government policy, but it's not the only variable in this. How are the economies performing, the role of government, demographic change that you haven't dealt with, you kind of name it. And so a belief that I need to change my organization model to be able to do two things at the same time. And I like sports, right? I can't just play defense. If I just play defense, I'll be able to withstand the shocks, but I'll come out average. I can't just play offense. If I play offense, I might win, but I might blow myself up. So how do I play offense and defense at the same time with a recognition that I'm going to have more things thrown at me going forward as a matter of course, that things won't go back to normal, that we're in a new normal now.
It's
and
a
how
new
do I
normal.
navigate through this?
It's also a bit of a chaotic normal, and I'm wondering if that's actually helped McKinsey's business.
The first thing I would say is I think that idea of more chaotic depends on where in the world you sit. If you talk with CEOs in Brazil, they might say, to your point, it's been chaotic for a long time, and we just have the muscle to navigate through, whether it's inflation, whether it's a pandemic, et cetera. Like, this is the normal of operating as a CEO in Brazil. I think it is a bit different operating in the US and in Europe. And so that idea of more volatility going forward, I think, is now sinking home in some of the largest economies. It's lonely, I think, particularly as a CEO right now, on how do you navigate through this, because you have a lot of different stakeholders. You might have a board that is really focused on, are you sure you're doing everything you can to protect the institution? You might have employees that say, what's the security for me? You have a different interaction with governments around the world, and their involvement or not with your business has changed. You have technology providers saying that, are you really moving fast enough on this technology? And then you have this belief of, look, I was brought here as CEO for a reason, which was to lead us in a way that is going to differentiate myself from my competition.
Next Fed meeting, I would love to see the official government data that would come out about the labor market.
So there tends to be a focus on official government data, though we certainly use data from private sources as well. So, for example, the ADP report that came out yesterday, people would certainly look at it, but they'd put much more weight on the employment numbers coming out of the employment situation report, which comes out on Friday in normal circumstances. But when there's a government shutdown, you have to rely on whatever data you can get your hands on. So I think we're in a period where more reliance on private data is going to be necessary until the shutdown is over.
And you look at the different pieces of private data that we are getting. You mentioned the ADP report that showed that private companies shed 32,000 jobs in September. You had interesting reports coming from Challenger today. You also had a separate report from a company called Revelio Labs, which I admit I'm not too familiar with, showing that the economy actually added jobs in September. So it feels like they're all telling different stories. And in your experience, I mean, how good of a picture can you cobble together of how the economy is actually doing from these different private sources? How does that typically compare to the official government data?
So it's certainly not optimal, particularly given that the U.S. economy in the first half of the year weakened relative to the second half of last year. So we already have consumption that's grew in the first half of the year only by 1.6%. That was roughly half of what it was the second half of last year. We have government spending that's also being cut back. And it looks like the consumer is pretty weak. So a number of the conference board came out earlier this week. Consumer confidence was weak. So we already know that consumption probably won't be all that strong. And then we're going into a shutdown where certainly government workers are not going to be interested in spending very much money because they don't know when they're going to get paid. And on top of that, there's a threat that a number of the government workers are also going to be laid off. So there's a good reason to believe that consumption is going to continue to be weak. Certainly, if there are both a shutdown and layoffs, government spending in the second half of the year is also going to be weak. So you already know that there's going to be a relatively weak economy and that more than likely labor markets are going to be weaker than we want. The problem for the Fed is that we're also seeing that inflation is going up. So the PCE, which is what the Fed tends to focus on, particularly the core PCE, was up a little bit, is at 2.9%. If you look at both private and the Fed forecasts, the expectation is that we'll end the year over 3%. That is higher than the Fed would like. It would like a 2% inflation rate. So it's still a difficult meeting for the Fed because it probably has a weaker employment report if we actually were to get one. And it also is a situation where the inflation data we've had to date, on top of the fact that we know that the tariffs are beginning to flow through to final goods, is an environment in which it's missing both of its mandates and has to trade off those two challenges.
I am curious about what the discussion ends up being. I know we're still a long way from the next Fed meeting. We still have like 4 weeks or so before we get there. But if you go into that meeting with the shutdown, and when you were Boston Fed president, I think you went through at least 2 or 3 government shutdowns, certainly the 2 that we had in 2018. And that was a time where, if I remember correctly, the Fed was raising rates and trying to make a decision about whether to continue to raise rates. So how much does the impact of a shutdown or the speculation about a shutdown affect the policy decision making?
Well, you know that it weakens the economy. It means that GDP for that quarter is going to be weaker. And if you're at a turning point, like possibly we are now, it runs the risk that we make a mistake. So let's say that you do a 25 basis point cut because the labor market's weak, even though inflation's a little bit too high. If this employment report would have indicated that payroll employment was declining substantially and unemployment was going up rapidly, that might be an environment where you'd be seriously considering 50 basis points. I think given that inflation's high, it's pretty, and with the data only being the ADP report, it's pretty challenging for the Fed to make a big move without better knowledge. So there's greater uncertainty, but there's uncertainty on both elements of the dual mandate. I think that the Fed will be pretty tentative at this next meeting if we're in an environment where there's still a shutdown.
I am curious about how much federal employment actually affects our economy. When we use this number of 750,000 folks being furloughed, and of course we're now learning based on news reports that some of those jobs could be actually permanently reduced. I know that's still less than a quarter, I think, of the total federal workforce, but there has to be some sort of tentacles that come out of that affects the broader economy. Is it material?
I think it is material. So certainly the federal workers are going to cut back on their consumption patterns, whether they don't know exactly who's going to be laid off, if anyone's going to be laid off. They don't know how long they're not going to be paid for. But it's not just the government workers, it's also all the government contractors and the private sector employees that now are not also going to be paid by the government. And some of those cutbacks presumably are for the public sector, but there are also maybe cutbacks in contracting to the private sector. So there's a reasonable chance that this is more extensive. And given that the economy already was weak, I think it does risk, depending on how it's handled, having a more severe outcome than would be desirable. So the risks of a recession definitely go up, When you have a shutdown, you have less information. And if the economy already was in a possible turning point, it could be a serious mistake to allow the shutdown to continue for a long period of time.
Away from the open in Hong Kong, you're watching.
Things are looking a lot better, and the AI investments are a big part of that story as well. So we really got to it's almost like feeding on itself. It's a positive cycle. One thing leads into another, and it's very difficult for people to be concerned about economic numbers or the lack of when you have such a fundamental story as this driving all sectors of the market.
Yeah, forget a U.S. shutdown, forget even just overall all these concerns about valuations and the like here right now, Mark. It brings to light what to look forward to. I mean, you've been focusing a lot on dollar yen. Japan, obviously, we have a leadership sort of race this weekend as well. We're also expecting to hear from the governor of the BOJ, Ueda. What are you looking out for in terms of what are going to be the next guideposts for dollar yen?
It looks as though everything is teed up for the Bank of Japan to be able to raise the interest rates, which they've been trying to do for some time. They've been looking for the window. It looks as though the LDP leadership race is now falling into position for them. So investors are assuming that Koizumi and Takaishi will be the two front runners. They may need to go to a runoff. They're not expecting a big surprise from that point of view. Sensibly, both of those candidates have been leaving monetary policy to the Bank of Japan, so that helps Ueda as well. The Tankan report came into place just as he really needed it to. Other members of the Bank of Japan have been supporting his view that it's about time for the central bank to get on with raising interest rates again. So everything is coming into play. The yen is showing a little bit of strength here, but nobody is really expecting this to be a cycle where the Bank of Japan raise rates and continue to do so rapidly thereafter. It's probably going to be a rate increase and quite a long gap. If you look at the track record under Ueda, usually it's several months before they're able to do it again. So that means we'll probably see modest appreciation for the yen. That will help equity market. They don't need to be too concerned as they were in the middle of last year when there was intervention and a rate hike at the same time. We're not going to get that kind of a mess in the Japanese equity market. So they can refocus on the themes which are driving there. Japan's on a reasonable footing economically. Interest rates, even if they raise to 0.75, by global standards, that's still very low anyway. So we're probably going to get more of the same. Continuation, politics, a bit of a sideshow for investors, but AI themes, a stable and relatively weak yen, all in general helping to support the Japanese cause. And people, the JGB yields at the very long end of the curve look as though they've peaked out. The Bank of Japan is also doing its part. It's making sure that where it's trimming purchases, that's at the short end. That's not really affecting the 30, 40-year sector. So overall, everything has a pretty decent background to continue to do well for Japanese assets.
Mark, thank you. Mark Cranfield there, MY strategist, wrapping up the week for us here on what has been a very, very strong one in terms of tech momentum. Let's continue with that here as well. We're seeing that in some of these Japanese chip makers here this morning, but really globally, you've seen when it comes to semiconductors, have seen their market value soar as investors rush to get exposure to AI. Now, this rally has added, get this, $200 billion in just one session alone to the combined market cap of the Philly Stock Index Semiconductor Index, which is a gauge that tracks Asian chip stocks as well. Certainly what you're seeing is continued upside. Let's bring in Charlotte Yang. She's with us right now. How long can this run kind of continue?
Yeah, so far looks like no signs of abating. You're seeing the AI trade continues to power on for the chip makers, and you're seeing investors from Seoul to New York, piling into the sector. Looks like every AI headline is able to spark a wave of euphoria. With OpenAI's 500 billion valuations, and also their partnership with the Korean chip makers, and the staggering number you just mentioned that we're seeing more than 200 billion added in the latest session alone. I mean, there are some concerns with valuations. One would point to the Philadelphia Semiconductor Index that's now trading at 27 times. That's already near the high of 2024, and also 19 times for Asia gauge. But and there's also that question with all these spending on data center infrastructure. But so far, the AI services have not become mainstream, and there's no commercialization, that kind of monetization aspect yet. But so far, for trading wise, seems like there's still that fear of missing out dominating the same. So sentiment will continue, but so long as and until we have the next earnings test to have some sort of reality check. Looks like so far the momentum is still very strong.
Yeah, and I think investors are now, well, they're certainly buying the theme, they're buying the play, they're buying the index. But within the index, there are some valuation sort of discrepancies in place. And the reason I bring that up is Alibaba has now emerged as certainly a very real play on this because of also the discount it's trading at compared to its peers.
Yeah, so for years, I think nobody was so interested in Alibaba's cheap valuation, given it's always cheap, right? But now, given how it's the whole conversation with Alibaba I've been having with people has completely changed. 3 months ago, you're talking about delivery competitions, e-commerce market share losing. Now it's all about AI and how it's a full stack AI investment so uniquely positioned in China. So the rally has gone very hot, more than double this year. But the bull investors are looking at a few points. So you have the positioning wise, while onshore investors love Alibaba, southbound holding has reached 11%. International investors, as of end August data, they're still underweighting Alibaba about 1.5 percentage points versus MSCI China weight. And that shows the potential of dry powder coming. And valuation wise, it has sharply re-rated over the past months. By 22 times, it's not that outrageous when you compare it to U.S. peers. And also even Hang Seng Index is on par, and it's also below Alibaba's own peak of 29 times. And as U.S. tech giants, they keep hitting fresh highs. Alibaba is still more than 60% below its own record, and Tencent is also approaching its own record high soon. So I think with that, there's a lot of data points that kind of give investors that conviction that there's more to run. And not to mention that in China there isn't that many tech giants that has the infrastructure, the will to spend, and the ambition to leading AI.
Yeah, investors are starting to, in the very early phases of rediscovering Chinese tech, and now there's an AI component to that. Charlotte, thank you so much. Charlotte Yang there, our Asia Equities reporter. In fact, just on that note, let me just show you a very brief chart on this re-rating in shares of Alibaba. Can we get that up, guys, if we can, please? Let me just have a look at what that is here very briefly. If I could ask my producers to bring up. Thank you so much. Baba is now back. So we're up 200% on price from the bottom. But that's only been enough just to show you how undervalued shares were. 200% only takes you back to the average as far as this is concerned. So there's room to run. This is, I guess, to Charlotte's point, one more thing to note here.
Yeah, far from the peaks, as she says. So, is there that room for catch-up still here and get back to those glory days? That certainly is one thing for Alibaba. We're also watching what happens in Japan. So the BOJ Governor Ueda is now speaking in Osaka in a meeting with business groups. So talking a little bit more about inflation. So he sees that price increases could last more than expected, and prolonged inflation could weigh on consumer spending. So it sounds a little bit hawkish here, but I'm taking a look at dollar-yen, and we are actually seeing some weakness here on the back of some of these comments, Dave.
Yeah, I mean, on the surface, that does look hawkish. You're correct. I'm just looking at my pricing now on my screens, whether that's affecting expectations around the BOJ. Of course, there is also the elections this weekend, which, by the way, yes, that is on the political side of things, but that's fairly split, and that could determine the path of interest rates as well when you look at how hedge funds are betting around that. Okay, BOJ meeting is on October 30 at the end of this month. We're looking at currently a 63% probability of that. But it does sound, of course, he is talking about the economic case to do so. Dollar-yen, though, going the opposite way as expected. JGB futures on your screens right now. A little bit of upside there. Plenty more ahead. This is the China Show.
In the last few months, there has been a lot of uncertainty, both on the geopolitical and obviously for the economy with the tariff. There's been a silver lining, especially in this region, around these events. Currency and bonds have been attracting a lot of attention in terms of performance. In general, it's been a pretty good performance for equities. And going forward, I will definitely remain positive around the Asian assets.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Okay, it's a word now, Dave. Uptober. I'm going to make it cool.
What? October.
Now, our very own Anthony Stevens has been writing about this, right?
October.
October, not October, right?
Yeah.
Because of all this sort of AI frenzy and the like.
I like
We're
that.
going to make October cool. We're watching, of course, those tripling names, of course, in Asia this morning after, of course, this whole AI rally extended on Wall Street. And this really following that Bloomberg scoop, right? We're talking about OpenAI, that valuation reaching $500 billion. Let's bring in our Asia tech correspondent, Annabelle Jewellers, on this crazy number that we're seeing when it comes to this deal.
It is a crazy number, and as Mark Cranfield was just saying, it's a number that really gives a boost to lots of different companies. I mean, it was a secondary sale within the company, so employees were allowed to sell their shares to investors or their stock, and yeah, at a valuation of $500 billion. At $500 billion, you're ahead of SpaceX, for instance. This is a valuation we're mooting for Tether as well, we're hearing from sources, but certainly at this point, it seems like OpenAI could be the world's most valuable startup. And it's so crazy when you think about just a few weeks ago, we had that persistent concern being raised once again that the spending on AI, particularly in the US, was being overdone. The ROI wasn't there just yet. But again, it's managed to ignite or reignite that tech rally again. So the NASDAQ, for instance, you saw rising overnight, second straight record. But also in terms of what was really gaining in that, it was names like NVIDIA, Broadcom as well. It's the chip-linked names. And when you take a look at what's again moving in the session so far today, there are standouts so far in Taiwan today, and of course Taiwan is a very semi-heavy index, but still names like WeWin, for instance, they manufacture, they supply the servers and cloud infrastructure that rely on advanced chips. I mean, you can see that gain there of nearly 10%. You've got names like MediaTek, for instance, Alchip, they provide silicon designs and manufacturing services. So again, it's very broad-based. And you see the same story being repeated over in Tokyo this morning as well, with trading underway. Leaders like Sumco, for instance, that manufactures silicon wafers for semiconductors. Tokyo Electron, we know, of course, is a major chip equipment manufacturer. Nitto Denko, chemicals that are used for semiconductor manufacturing. Rome as well, another chip-linked name. So again, it's that semi story that continues to be very strong in the session so far today.
Belle, thank you so much. Annabelle Jewellers there on the latest on the AI frenzy taking place. Just make note, of course, Korea is closed today, but you are seeing that expressed really in a very big way in Taiwan and also in Japan. We're also watching Tesla suppliers, speaking of Japan, in Japan today after the automaker slumped on Wall Street. This even after, of course, posting this record quarter of vehicle sales. Linda Liu is with us right now to help us understand why Tesla shares fell despite what seemingly were very good numbers.
Yeah, well, I guess investors realize that there's actually a lot of challenges that's going to be facing Tesla in the months coming ahead. Obviously, this bump in deliveries came because of the Trump administration pulling out this $7,500 in EV credit. So consumers, who's interested to buy an EV are rushing in, driving up the deliveries. But obviously going forward into the next quarter, that's not going to be around anymore.
Tell us about the company's challenges moving forward.
So not only is this EV tax credit, that's helping to drive so much of the sales not going to be around anymore, the Trump administration is also, considering cutting emission rules that have been so instrumental in helping EV makers like Tesla and others to sell their vehicles and being able to promote their offerings as more environmentally friendly. So if there's no rules like that in place anymore, a big driver for EV purchases for legacy automakers like GM and Ford to produce more EV models, that driver could be gone. And I think that's going to be casting a negative outlook for the wider industry.
And this disadvantage the company further as it competes with Chinese rivals, for example, like BYD.
Yeah, it'll be interesting to see how this competition plays out. Over here in China, the biggest EV seller, BYD, actually suffered a slight slump in its monthly deliveries for September. So BYD is also facing its own challenges in its domestic market, where it's taking on dozens of other brands, and the competition is only getting about to get more fierce. So Tesla, I think, and BYD and other Chinese rivals will be competing not only in China but in other markets such as Europe. And it's interesting because in Europe, BYD started to outsell Tesla for the first time. So we're going to continue to monitor to see how this rivalry is going to play out.
Linda, thank you. Linda Liu there joining us here on Tesla and the like, and this fierce EV competition in China as well. Your pre-market is looking like this. Hang Seng looks set to drop based on just price action. The early get-go here, we're down about 1/5 of 1%. We'll see how Alibaba does as well. Jivan, this is what we've been talking about here, right? We're flat when it comes to
there's no trading in bonds today. But just in case you're curious, where they last traded, 187 is the yield.
From a few days ago. Plenty more ahead. This is Bloomberg.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Some stocks to watch at the open, and it's Baba. Oh, there you go. Happy Friday.
Do you know what? Okay, here's the thing. Do you know what Baba means in Tagalog?
No.
Down.
Oh.
Which is interesting, right? Not that this is a play on linguistics, but yes, it's the opposite of what it means in Filipino.
I'm trying to think what it means in Chinese. It's just Baba.
Baba.
Like
Papa.
Like, like dad.
Need a papa.
There you go. Continue to see strength here. It's random talk on Fridays. Here
there's
you
no
go.
news, though.
There's no news. It's quiet. And, Alibaba, we continue to see it. It's just like this FOMO trade really around this stock here right now. Right? If you take a look at, how cheap or undemanding it is in terms of valuations compared to the likes of NVIDIA, all these U.S. tech darlings, certainly there is maybe some room for it to run. Baidu, though, perhaps maybe a bit of profit taking here today. We're watching some of these, Hong Kong style retailers, right? So we had the retail sales volume actually beat expectations, right? Not much movement when it comes to the likes of Chow Tai Fook and the rest here. But certainly that is a uplifting, or at least a more upbeat sort of print there when it comes to the retail side of things.
It was a good number.
No, it was.
3.2%. I know that doesn't sound like a lot. I know that's mid-single digits, but that's actually coming in, I think, well above estimates. And also within that, right, so the reason why we're looking at jewelry. So the category of jewelry, watches, and clocks, up 14%. So if you're curious about, what's driving that. Sujin Gold, of course, it's a gold play, and of course, that went public this week. Plenty more ahead here. We're going to have a deeper dive into things like rare earths, copper, and gold coming up next. Good morning. Welcome back. You're watching The China Show. Equity markets are moving to the upside. A fifth day of gains on a benchmark basis. No mainland China yet today, so no stock connect, lower on volumes. I was told to mention that F1 is taking place in Singapore. Coming through. We don't have an F1 here in Hong Kong, although we might have a T1 later today. That's according to the Hong Kong Observatory, with the weather coming in. So a standby, I believe. So I think brace is the... Watch the weather forecast.
Okay, Singapore, you win.
Yeah.
This weekend. Gosh. Can't beat that, right? F1.
No.
Over a T1.
Well, we have a better winter here, slightly. Unless you walk into a mall in Singapore, then where it does feel like it's proper. You're in Finland in some cases, right?
All right. Why are we spewing all this nonsense, right? Because there's not much going on. But yes, we have to talk about markets overall, because it seems like when it comes to the tech sort of things, that is continuing for another day, right? This October, we're trying to make October cool. Yes, because of this whole AI buzz. So, I don't care. I guess the investors at least don't care about this U.S. government shutdown, delaying data, no jobs report likely on Friday in the U.S. we've kind of brushed that aside in some ways. But really, we're focusing on things like, how did OpenAI get a valuation of $500 billion in this recent deal? That's enough to really trigger, once again, another rally. But there you go. HS Tech, though, at least today, for the broad stage, is actually lower. But, take a look at Alibaba, right? If you're talking about AI, this continues to be a FOMO trade. We're at $185 here, upside about 1% here. Baidu's heading the opposite direction, though, so we're down some 2% for both of those sort of tech darlings here. But we are seeing the rest of the tech space is quite quiet, right? Meituan, Xiaomi are flat. Tencent is slightly up this morning. So certainly that's going to be one thing to watch, right? How long can this whole AI trade continue, given the valuations when it comes to AI? As Dave mentioned, we're not quite even close to the peak, but we're even just approaching the mean, right? So, maybe there is some more upside to come for that stock in particular. MSCI China is slightly to the downside here, but keep in mind when it comes to Asian stocks broadly, it's been a good week, right? In fact, we're heading to a fourth straight week of gains in the last 5 on the optimism really around tech globally. Let's take a look when it comes to Cathay. There's been some analyst upgrades. This one from on Cathay here. This is from JP Morgan. So they're talking about cheap valuations. Take a look at the dividends. That's certainly one to watch here. But then again, look at that price target of 9.10 on your screens, right? Still lower than what the current level is. So despite this upgrade to neutral, they're still expecting possibly more decline on the shares as well. HK Steel. So watching some of these steel miners, the ones that are listed in Hong Kong from China. So there's been EU really proposing some tariffs that are really kind of mirroring what we saw in the U.S. when it comes to cheap imports from China, right? So they're talking about 50% tariffs for steel imports and the like. Not seeing a whole big movement when it comes to some of these steel miners here this morning. But we're tracking still gold, the copper plays, and Zijin Mining certainly is the big one to watch. And really what we've been seeing in Zijin Gold since this listing, right? It's been a bumper few days, certainly. But this is Zijin Mining shares, though. We have continued to see the shares go vertical, Dave.
8,000%. Not bad, actually.
Yeah.
Yeah, since 2003. Yeah, quite an upgrade. Quite an upgrade there. I mean, the reason that's also important, right? So we talk about this Zijin Gold story, the play on gold assets outside China. And of course, when you talk about Zijin Mining, people immediately think of gold, which is obviously one of the plays, but it is also a copper mine. And of course, when you look at copper, which has somewhat given us something to talk about again recently, copper's actually set for its best week in about 6 months, best year in 4 years, and the rally looks likely set to continue in copper prices when you look at some of the supply disruptions currently in the market. Let's get an outlook on copper, gold, and everything in between. Joining us here on set is Maddie Zhao, B of A Global Research. She's their head of APAC Basic Materials Research. Maddie, happy Friday. Good morning. Nice to see you. Can we start with copper?
Yes, of course.
Copper's okay. Okay. Markets looking at these operational disruptions in the 3 biggest mines. Yeah. How much of that do you think is already in the price? Because I know you guys are still bullish on copper prices.
Yeah, sure. So after the Grasberg's incidents, our global team actually upgraded copper further. We are now expecting copper prices to be 11,500 on average next year, and then further go to 13,000 in 2027 as well. That is because we will see probably the biggest deficit in the past next year. In the next year of nearly 400,000 ton of copper, because all these 3 mines are not going to resume normal production at least until mid to late next year. And of course, just now you talk about AI as well. Copper is a very important area in the AI and also powering AI. And then we are expecting the copper demand mainly driven by the grid, by the AI and also data center, and also by the transformer as well. And we are still expecting copper demand to grow at 2 to 3% next year. So we don't think the rally has already finished. We think it's probably just midway on that.
So you think this rally is not just supply-driven and more on these disruptions? You actually do see a demand story there as well, longer term?
Okay. Actually, this year, copper and gold have been our top pick among our coverage. And for copper, I think this year, even before this accident, has been our top pick, mainly driven by our expectation of power grid investments. Power grid actually accounts for 40% of copper demands in China now. And then if you add up the transformer, the AIDC, that's totally around 50%. Of copper demand. And China copper demand has been growing at about 5% year to date as well. And China is more than half of the world.
what's the best equity play on copper and or gold?
Yeah, so the areas under our coverage is like Zhejiang mining, the one that you just mentioned, China Moly, Shandong Gold on the gold side as well. And we are very positive on gold. We target gold prices to be 4,000 this year, but it's nearly there already.
Yeah.
When we target
Time to update that.
Yeah, when we target at the beginning of the year, we didn't expect that it will be achieved so fast.
Yeah.
Yeah.
What's driving that? Is it just? I mean, there's so many factors. Whether it's the Fed cutting, dollar weakness, central banks are still buying. What do you think are still going to be the key factors that are going to be driving that gold price higher?
I think in the next 12 months is probably the weak U.S. dollar, potential further rate cuts. It's from the macro perspective. Secondly is probably still the political risk on that as well. And I think the thirdly is also government and ETF buying. We actually continue to see China government buying for the central bank reserve. Currently, China's reserve of gold is only accounting for 6.5% of its total reserve. Global average is 18%. So you still have room to go. Not to say that insurance companies are also instructed by the government to buy, to use 1% of their assets to buy gold. That's actually equivalent to 5% of global gold demand if you're buying within 12 months. So you still have a lot of catalysts for gold.
That's a lot, 5%, if it's only 1%.
Yeah. No, I mean if they buy it within 12 months, because they didn't give a timeline how long they can buy it.
Right.
But if they buy everything within a year, then it's 5%.
Okay, that's quite a big catalyst. Can I ask you about, not specifically about Zhejiang Gold, but it certainly opened up this window for a lot of
share sales
in the region. Should we expect more fundraising in the equity market on the back of this very successful one, I should note?
I think so. I think we continue to have a few companies that potentially looking for H-share IPO as well for the gold and for the metal side as well. That is because probably the very strong gold prices as a big support as well. And then also with the success of Zhejiang mining and Hong Kong, China to attract more of a global money as well.
Can we talk a bit more about battery materials and the like? That's also part of your coverage here. You're expecting things to still remain quite tight. What are you foreseeing?
Yeah, sure. So we upgraded lithium around 2 months ago when CATL suspended its mines. And we have been seeing lithium supply and demand turning into deficit since 3 months ago as well. One of the key reasons is because demand has been very strong. We actually see battery demand in October going to go up another 10% month on month. And then also the power storage, the ESS. ESS year to date, I think installation in China is up more than 30%. Export is nearly doubling. So a lot of this very strong ESS demand together with the EV battery demand are pushing on the destocking for lithium as well. And even potentially with CATL coming back, we still see the lithium much tighter than before. I think the last point is, apart from CATL, the other 6 or 7 mines that are still potentially under the government check, they're supposed to submit document end of September. And then if they don't meet the criteria, there's a further potential suspension as well. And this 7 mine accounts for 4% of global supply.
Okay, yeah, I think the last time we were having this conversation was around, of course, late September was the one to watch because of the 2 mines out of CATL. I guess very simple question: what's your outlook for lithium prices, and all things equal, if things remain relatively shut as far as those mines are concerned?
If these mines don't shut down, we will expect lithium prices to be about 80,000 RMB next year. That's our base cases. But of course, if all these 7 mines got suspended, again, that take away about 4% of global supply, then we'll probably see lithium prices back to 100,000.
Anti-involution, we talked about it briefly when we started to see a little bit more disruptions, but how do you see this all playing out in your coverage?
Yeah, so anti-involution is still very slow. I think government are still taking it slowly, given the time for each industry to come out with its own plan. For example, cement and steel, they still allow you to time to do capacity exchange in cement. So we haven't seen major capacity cuts yet, while cement probably they need to cut next year. So by the end of this year, they need to finish the capacity exchange. While on the other hand, this lithium thing is basically just need things to do it more legally. And then also, I think government is talking about like the copper refining. So we recently also upgrade some of the copper refining names as well, given the refining margin TCRC has been on historical low in the past 20 years as well. So if we are doing some measures on helping this supply, that would probably help it back to the break-even points.
Yeah, I think we did see for the first time in some time the industrial profits numbers start to turn positive, right? Do you see momentum there? Was that a function of anti-involution for that month? And do you see what's the outlook for profits?
Yeah, so I think on the positive side, anti-involution basically helps a lot of the sector get exposed, right? For example, polysilicon, for example, steel, etc. But on the other hand, if things don't take it slowly, i.e. if we do it too aggressively, it might also hurt demand as well, right? If your raw material prices hike so fast, that will hurt some of the industrial demand. So I think that's one of the reasons that government wanted to do it slowly, gradually, give you some time, and then each industry to come out with its own detailed plan rather than cutting together on one angle. Yeah.
And you add that to tariffs, right? When we have the EU joining the likes of the U.S., at least they want to, in imposing steel tariffs of 50%. Does that put a cap on where steel prices are going to go?
I don't think that would be very important. Well, it matters because currently China has been exporting at around 110 million ton annualized number, which is more than 10% of our production. But the export to EU is a very small amount. We don't export to US much, and to EU is also very small as well. I think the China steel mills are looking at Southeast Asia and also looking at like Africa and South America as some new areas to export as well. And I think now one of the key reasons to export is not to make more profit. It's basically just keep domestic inventory low so that whenever demand is okay, they can actually hike prices domestically. So export is basically as a balancing factor, and they're looking for new destination.
All right, Maddie, thank you so much. We covered a lot. Maddie Zhao there, co-head of China Equity Research and head of APAC Basic Materials, Oil and Gas Research at BofA Global Research. Well, we're going to dip into some live pictures out of Singapore here right now. The Milk and Asia Summit in Singapore is undergoing once again, where our colleague Haslinda is moderating a panel on the global investment outlook. Plenty more ahead. This is Bloomberg.
You've, in private credit, in the United States anyway, you've removed an intermediary that is an investment bank. The investment bank is there to make fees and to distribute broadly syndicated loans to the market and not really do any diligence on distributing those broadly syndicated loans to the market, and then those get securitized.
This year's Global Markets Conference theme is MEGA, Making Europe Great Again. But the conversation is broader. We're in Hong Kong to hear perspectives from the US, China, Japan, as well as Europe. What we're seeing is clients diversifying their counterparties. BNP Paribas is headquartered in Europe, but we've been in APAC for 160 years. We're optimistic about working with our clients to turn these global perspectives into real, actionable, and relevant strategies for growth.
Welcome back. You're watching The China Show. Now, Beijing has given a very stern warning to the new U.S. envoy here in Hong Kong not to interfere in China's internal affairs. That's after the Consul General reportedly invited prominent former opposition figures to her inaugural reception. Let's bring in Stephen Engel, Chief North Asia Correspondent. Steve, okay, we got to unpack this. What do we know?
Yeah, well, we do know that the new Consul General who took her post here in Hong Kong in August was summoned to the Ministry of Foreign Affairs Commissioner's office here in Hong Kong, that's Cui Jianchun, and essentially was given a stern representation and explicitly laid out what the Ministry of Foreign Affairs calls the 4 nots. They said the 4 don'ts. Actually, I looked on the website there, but translated essentially 4 knots. And I'm not talking about rope knots. It's the do nots.
Do nots.
Right?
Red lines.
Drop the K.
Yes, do nots. And that is essentially don't meet with former opposition leaders of the protest movement in Hong Kong. And there were a couple of people who were invited, and by all accounts, they did attend, and that includes Anson Chan. I wouldn't necessarily call her a pro-democracy leader from the protest, so I have to be very careful with how I describe her. She's a former chief secretary in Hong Kong under Chris Patton, but she was also has been an advocate, of course, for more democracy in Hong Kong.
Yes.
Right? That's a good way of putting it. Emily Lau surely is a proponent of democracy. She was the former chairwoman of the Hong Kong Democratic Party.
Yeah.
She was also there. She has told Bloomberg that maybe China overreacted a little bit on this case of summoning Julie Ede, who is the new consul general. Emily Lau says Hong Kong is an international city and we should be free to interact with each other. If we have committed an offense, they can arrest us. That is in line with how Emily Lau has always carried herself in essentially standing up for what should be the rights of an international city like Hong Kong. So I'm not trying to blow this story out of proportion or anything like that, but it's an interesting indication of Beijing's unwillingness to have any flexibility on this subject. When she's taking over the post, has an event, and then invites people that, of course, have been on a watch list, if you will.
At a time when we're seeing these U.S.-China trade talks continuing, and it seems like things are looking at maybe possible breakthroughs, right, from what we heard from Besant at CNBC, and it's almost like when they talk about soybeans, that's like the new rare earths for China here.
Yeah, that's right. I mean, soybeans has become a political issue at home, no doubt, because the Chinese have not bought any in this current harvest, and it's already a month long. And if you look at the harvest is a month long, 4 weeks in, and it probably will be another 4 weeks until Xi and Trump meet. So if Trump is right in that China is not buying any soybeans as a negotiating tool, well, if that's the case, then that's not going to be resolved for another 4 weeks, 8 weeks into the harvest. So it might be a wash on soybeans, and that's causing political trouble at home in the Midwest and other places where they grow soybeans. They are upset because anywhere between 30 to 60% of America's soybean crops traditionally are sold to China. So it's become a hot button issue in the United States, despite the fact that the Trump administration is talking about giving financial aid, from dipping into the tariff pot and paying those farmers. That being said, you're absolutely right. Besant is optimistic that there could be a big breakthrough in talks with He Lifeng, his counterpart, which are slated, we don't know the date, for a fifth round, probably around the time of the Xi-Trump meeting on the sidelines of APEC. But again, that kind of pushes the whole soybean issue
further down.
Further down. And is that really going to be some leverage for the Chinese? It is right now, but can you get a deal done before the Xi-Trump meeting?
All right, Steve, thank you. Steve Ingham there, our chief Malaysia correspondent. Of course, as we count down to more talks between U.S. and China, of course, APEC is certainly the next one to watch. Plenty more ahead. This is Bloomberg.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level, being open to comments, feedback, discussions. There's always this back and forth workflow. Sometimes conversations with different people might open up ideas to explore.
Embrace a growth mindset. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Right, so welcome back. Let's get back to a story we were talking about earlier here. This profit warning from a major U.S. chip industry name about restrictions and what that means, restrictions to China, what that means for the business in that market. Bell is here with us to talk us through this. Yeah, what do we know about this, Bell?
Well, I do want to apologise first to our viewers, but I did mistakenly have AMD on my brain earlier when I was talking about this, and I did, of course, really mean to reference Applied Materials, which is the key story here today. So Applied Materials, it is the largest maker of chip equipment in the US, and this is a company that actually gets a pretty hefty chunk of its revenue from China. Now, what's happened is that they've issued a filing to regulators in the US saying that they're going to be getting a pretty hefty revenue hit over the coming fiscal year. So fiscal year 2026, it ends in October of next year. But essentially, the company is really facing extended restrictions because this week we saw the US Commerce Department Bureau of Industry and Security issuing a new rule that ramps up essentially the range of products that companies face restrictions on when going to places like China. And so that is going to have a really big bearing on Applied Materials. As a result, you can see there how it traded in after hours, but it did slump down as much as 6%. You can see its peers, Lam Research, KLA as well. I mean, they also felt the brunt of this. But actually, it's interesting because I've been taking a look at Applied Materials suppliers in Asia, and actually these are listed in Tokyo, but aren't really seeing the same sort of negative reaction. They're managing to trade a little bit higher. So it is that sort of broader chip story we were talking about earlier, but there's still a lot of optimism around the space in general.
All right, Belle, thank you. Annabelle Jewelers there clarifying that for us. In terms of what we're seeing and other stories that we're tracking for you, Bloomberg's been told that Boeing's 777X jet is now slated to fly commercially for the first time in early 2027 instead of next year. That sets the stage for potentially billions of dollars in accounting charges. And sources say customers, including Lufthansa and Emirates, are not expecting to fly the plane until 2027. The jet is already 6 years late and has major strategic and financial importance to Boeing. And Japan is reportedly days away from running out of the Asahi Super Dry, the country's most popular beer. The Financial Times is reporting that retailers are racing for empty shelves. As soon as this weekend, the shortage comes after a cyber attack hit Asahi's operations this week. The company said the disruption is limited to Japan, though. But yeah.
That's okay.
Things going dry.
That's about it. I was going to go into panic mode. It's only in Japan.
You're still okay for this weekend, Dave?
Yes, yeah. Well, I've stocked up. It's good news though for people suffering with gout. You really need to be.
You can take a break.
Yeah, keeping that uric acid under control. That's hard to imagine. Like that's a very strange story, a reality to be faced with. Just
because of a cyber attack, yeah.
Because of a cyber attack,
which is not the first one either, yeah.
What's good for you anyway, just to moderate your alcohol intake, give or take.
It takes a cyber attack, I think. You got to reflect on yourself. But
if you are forced to.
But yes. Very interesting story.
Life choices. There.
Yeah, we're watching travel, okay? So if you can't drink, you can travel potentially. Take a look at what we're seeing when it comes to
Don't go to Japan, though, if you're looking
travel
for
stocks. There you go. We're slipping. So there's initial Golden Week numbers, right? Yeah. So according to the travel ministry for the first 2 days, Citi says was actually weaker than expected. We take a look at overall passenger throughout the volume there. So yes, might be not as good as what investors had expected there. So a bit of slippage.
A powerful pitch can unlock transformative growth. Having at least 1 million pre-launch equips companies with a 25% higher likelihood of success.
You're coming from a world that is quite far separated from venture capital. Building up the skills was an important part of that journey. Not just my own area of physics, but things on the business side.
The right expertise can move your business forward. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios. To find out more.
Happy Friday. Welcome back to the China Show. Here's a look at the HSI a half hour into the session. And yeah, we're losing a little bit of momentum here today. HS Tech, broadly speaking, is lower. So that's what we are seeing. Also, H shares are down about 0.8%. Looks to be still a pretty decent week, though, given all this AI optimism, momentum around the likes of Alibaba. That still continues to be a good story, though, today as well, Dave.
Yeah, I think when you have a look at how Baba's doing right now, it's moving against the grain last we checked. Yeah. I think you're getting an upgrade almost on a daily basis on the stock price itself. And also we're looking at, now do we have the other one? Can we look at, that doesn't look like Alibaba to me. Let's have a look at where we are with Samsung, please. There we go. So Samsung, of course, Korea is closed today, but you do get that ETF that trades here in Hong Kong. That's really on the back of the chip story that Yvonne just talked about there. Baba's still on the way up.
Yeah.
Japanese chip makers on the back of the, OpenAI. That's the latest story. And shrugging off the applied materials warning that we just talked about in the last hour. So Japanese chip makers, Advantest and what have you in the whole cohort coming up on your screens very shortly. I think we glanced at that already a bit earlier on. And of course, the chip story in Taiwan also playing out in a very big way today.
Yeah, I mean, it's almost like it's the one thing to watch, right? When you don't have U.S. government data coming through, there's no jobs report in the second day of this government shutdown. So maybe you can brush those concerns aside right now and focus on this theme, right? Because there you go. Look at this, right?
Why not?
When you take a look at the whole supply chain right now in Taiwan is doing this, there certainly is a lot of optimism around this whole AI investment cycle. So that certainly is one to watch here today. When in the absence of news, this is the one that really is shining a little bit brighter here today. We're watching Bitcoin as well, right? Yeah. So we've talked about 120,000 for Bitcoin. There you go. We're staying above those levels here. We're coming off a little bit, but we are seeing some pretty punchy moves in some of these crypto stocks today. Let's talk about what's been going on with chips, right? Because globally, we've been seeing the value, market value really soar as investors rush to get exposure to AI. The rally is pushing tech stocks to all-time highs right now. Let's bring in our Asia equities reporter, Winnie Xu. She's with us now. Talk a little bit more about the drivers behind this rally.
Yeah, it really is. This global AI rally just doesn't seem like it's going to stop anytime soon. And, right now it seems to be what we've been hearing is that investors' mood is really this fear of missing out. And we can see that just by seeing how investors are really brushing off these macro concerns, whether it's whether it's the U.S. government shutdown or, some of the weaker economic data that's coming through. But every of these small positive news is able to push stocks higher. And that happened yesterday with SK Hynix up some 10% and Kospi to its record high. And just today, right, then we have things going on in Japan with the deal between Hitachi and OpenAI and also Fujitsu with NVIDIA, both pushing the stocks higher. So now we're waiting for Sam Altman to visit Taiwan, and we see expectations being baked in with the Taiwanese stocks as well.
Well, what I'm waiting for is someone to tell me what the risks are.
Yeah.
Yeah. So actually, when I had a chat with JP Morgan Asset Management the other day, Kerry Gregg, he was telling us how his biggest risk that he's seeing right now in markets is actually not these geopolitical risks or political uncertainty we're seeing, but actually the potential of disappointment that might come through the earnings when it comes to the U.S. mega techs, because there is so much expectations being baked in right now, and we are at valuations at a relatively stretched level. So if we cannot see these being translated into the actual revenues, then we might actually see a sell-off, which is what we actually saw them being the first to be sold off back in April. So that's kind of the risk that we're watching there.
Is AI the only thing people are chasing right now? What else is hot? Are they going elsewhere?
Yeah, so that's a very interesting one, because you would think that AI is this big hot topic that we're all chasing. But when you look at something that has been relatively boring for a while, but recently quite hot, is the gold miners.
Oh, yeah?
So gold is up over like 40% or something. And I was just looking at the MSCI gauge for gold miners. It's up more than 100%. So it's really outperforming these AI or tech themes. And we are hearing that investors are expecting more upside to come for these gold miners as well, just because how gold is continue to rise and continue to be favored by investors, given these geopolitical uncertainties and the hedges that they want against some of the riskier assets.
Yep, Winnie, thank you so much. Winnie Xu there on AI and gold, really two that have delivered quite a bit of
alpha this week. Okay, so Winnie actually just brought up a very good point there on, I think Carrie Craig, who joined us earlier this week, talked about this, right? The risks of the AI rallies, you have to watch for the earnings because valuations look fairly stretched.
Yeah.
I think have been fairly stretched anyway. Well, this one is...
That was a firm zoom.
Yeah, there. Look at this.
Yeah.
So 32 on NVIDIA, Amazon. And we have a great story out in the terminal today that talks about how if it's Alibaba that you want, there's a valuation discount there. That's the sort of low-hanging fruit. And you can read about that story, of course, on your Bloomberg terminal today.
Yeah, I mean, there's still a lot of questions on how rich of a valuation can you give to Alibaba when, yes, there's a lot of hype, there's a lot of interest in this whole full stack AI ecosystem, but we haven't really quite seen it generate revenues yet. So certainly the ROI is still kind of the question mark still as well. Let's bring in Sylvia Cheng, Global Multi-Asset Strategist at JP Morgan Asset Management. As we wrap up this trading week, it's interesting, right? It seems like investors are still leaning towards risk right now, despite that we're in this kind of vacuum when it comes to U.S. data. Is that the right sort of call?
So I think overall, if you look at the global backdrop, we still expect global growth to be pretty solid. We actually think next year we see global growth going back to trend, and also the policy environment pretty supportive, right? Easy monetary as well as fiscal policy. So we do agree with that pro-risk stance. In terms of data vacuum, I think probably short-lived. Obviously, depends on how long kind of the both parties will take to come back to the negotiation table. But we don't think the impact on markets or the economy would be too significant.
Yeah, I mean, so far it's been a non-event. I mean, if you didn't follow that news, you wouldn't know it's actually happening. Yeah. The fact that there's a shutdown ongoing. So you mentioned you're overweight risk still, overweight equities. Is that almost purely AI? Like, what within equities right now should we be paying attention to?
So we actually overweight equities across a number of markets. So in the U.S., obviously, the overall valuation we talked about is a bit high, but we still believe in tech, and also we like financials as a quality cyclical exposure. And we also like Japan and Chinese equities globally as well. Yeah.
How do you look at this whole AI trade here right now, right? Because we're talking about valuations, and certainly they're not demanding in China compared to the U.S. per se, but a lot of these services have yet to go mainstream. We're not seeing that impact on earnings so far. So how should we be looking at this rally now in AI?
So I think actually if you look at the U.S. market, a very interesting point is if you look at the mega tech companies, their valuation compared to history actually is not that demanding, but the rest of the market is actually more expensive. So actually from a relative perspective, I think there's probably still more room for them to go. Clearly earnings will be important. Carrie already talked about that. We need that to come through. ROI really is a key driver here that we really need to see that.
You mentioned the easing out of the Fed, I assume is what you were alluding to earlier, is one of the assumptions we can make. How important is that for this risk rally? In other words, if we see markets somewhat price out cuts that are priced in, do you think that might cause some wobbles in this market, or is that going to be largely uneventful if we see that happen?
I think probably largely will depend on what's happening with financial conditions to some extent. Okay. If we are pricing out cuts, probably more likely to be in 26 because of stronger growth. I don't think the market would worry too much about that. But if the Fed is turning more hawkish, kind of not really based on fundamentals, then that will be more of a worry.
Can you tell us a little bit more bonds, right? Because we continue to see treasuries are actually continue to rally in some ways, right? Can I still look pretty big on duration right now when it comes to this bond market?
So our thinking is that we will have a modest long in U.S. duration, but our focus is more in the belly of the curve, 5 to 7 years. We think there is room for the front end to come down further, but because our optimistic outlook for U.S. growth, we think the back end, probably the room for them to moderate further is pretty limited right now.
Could I ask you more about Japan? You mentioned Japan as one of the overweights in equities. There's an election this weekend, and people seem to be very bullish around the structural story in Japan. How do I need to be looking at risks, political risk within this market that's really done very, very well?
So I think for us, we definitely agree the structural setup is more positive, looking at corporate reforms. And also we think some of the structural labor shortage is actually pushing capex and also that wage growth as well. Okay. So that's really the underpinning of the positive story. Clearly, short-term worries about political uncertainty. I guess the risk will be whether this will linger on, whether this will trigger a lower house election. And also there's still uncertainty about the tariff impact on Japanese economy. But I think it's really a trade-off between near-term concerns and more long-term structural story.
But still net bullish?
Yeah, net bullish.
Okay.
Yeah, I mean, is that going to be the next catalyst, though, this new PM? Because it seems like the contenders, or at least the ones that are the more front-running ones, are leaning more towards growth-focused policies.
So I think actually if we think about it's going to be LDP no matter what, right? We're talking about different candidates within LDP, and given they are running minority government both in the upper and lower house, they need to be a bit more expansionary than what they have been before because they need to cooperate with opposition parties. So that's really what we're kind of banking on, that expansionary fiscal policy.
I was having a conversation at the bank, I think about 2 or 3 weeks back, and I was asking, so clearly they didn't know where I worked. And I was asking the people they were advising me on to do something, and I'm like, what's the risk? And jokingly they responded, the risk is not investing. I can't seem to find anyone who can identify what the risk is to this bull market. Yeah. I mean, there could be none. The tail risks could be not as priced, probably.
But the conditions are there.
But the conditions are there.
But they can't name a trigger on what's going to lead to some sort of correction. Yeah.
Well, my question is how useful is it to start looking at hedges and defensive strategies amid this low vol environment, or is the opportunity cost to do so still quite high?
So I think clearly if we look at the volatility environment, taking out hedges now is more kind of cost efficient to some extent. Obviously market, if we look at overall valuation levels, pretty extended wherever you look. Obviously relative basis, China, Japan are cheaper. I think that there's still risks. If we think about risks, if inflation turning out to be hotter than expected, Fed can't ease as much, right? And there is a labor market weakness going on, even though we don't think it's really kind of increasing recession risk. But what if it's more sustained than what we're pricing in right now? So I think still downside from that.
What if? That's a big one. Sylvia, thank you. Have a good one. Sylvia Sheng there, global multi-asset strategist at JP Morgan Asset Management. Right, just ahead here in shows, we talked about Japan there. We'll get to you a preview of what's coming up, of course, in the weekend. Top contenders within, of course, as Sylvia was pointing out, the same party. It's still the LDP. We're now courting the opposition to help advance policy initiatives. The shaky grip on power is coming up in focus next. This is Bloomberg.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups come into the market to seek for new funding.
The best thing is to feel it and see it.
Southeast Asia is at a crossroads. In a global power struggle over tech, trade, and influence, will the region be able to chart its own course? Hear from top CEOs and key policymakers as they shape the region's economic future and redefine growth on their own terms. The Bloomberg Business Summit at ASEAN. Join us.
Well, Japan's ruling party votes for a new leader tomorrow, with the winner set to become the country's second prime minister in just over a year. Now, investors will be watching for any signals on fiscal and monetary policy. Let's get to our Japan politics and economics reporter, Sakura Murakami. She joins us now from Tokyo. Sakura, it's great to have you. So, we've been anticipating this for weeks now. How are things shaping up?
We don't have a clear winner quite yet. Obviously, we've been talking about Sanae Takaichi, a kind of right-winger politician, and political scion Koizumi potentially taking the lead. But we do also have a new dark horse, Yoshimasa Hayashi. He's the current chief cabinet secretary. He's coming up in the polls. He's also looking quite popular. In the end, there'll probably be a runoff between the top two contenders, and it's all looking quite fluid, murky. We're not entirely sure yet, but we will definitely have a new LDP leader by tomorrow, so that'll be something to look forward to.
You know, the calculus for markets goes beyond just simply, obviously, the first thing is who wins. The next thing is, could there be any new power sharing agreement that could be likely? What does that eventually look like as far as the coalition is concerned between different parties? Sakura, what does that look like currently?
So that will probably be one of the first things that the new leader will have to work on. There's been talk of passing a supplementary budget by the end of the year, and with a minority in both the lower and upper chambers for the ruling coalition, they will have to work with opposition parties. And all of the candidates have been open to some sort of cooperation, some sort of new power-sharing arrangement with the opposition, but they have been very coy and shy about specifying who really they want to work with. There have been rumors. For example, Koizumi is known to be quite close to the Japan Innovation Party. Takaichi is considered kind of trying to maybe butter up the DPP, but we'll be seeing more of that in the coming weeks.
Yeah, we're just talking to our last guest about how the next leader could be a potential catalyst for Japanese markets in particular. What can we expect from the new leader in the coming weeks?
With the various contenders, it's hard to know for sure. But I think one of the things to look out for is obviously the coalition, the new power-sharing arrangement that we may see. Also, further down the line, we'll probably be seeing a lot of diplomacy initially. There's ASEAN, there's APAC at the end of October. There's also Trump's potential visit to Japan, and that will be one of the first times that the new leader will probably meet with Trump. Obviously, before that, there's also the vote, and the vote tomorrow is for the leader of the LDP. But they still would have to go through a parliamentary vote in mid-October. In mid-October to actually be voted in as Prime Minister and succeed the current Prime Minister Ishiba. So there's still a lot on the calendar, and there'll still be a lot of fluidity in the coming weeks.
Yeah, Sakura, that happened to me too. I had to check the calendar. It is, of course, already there. How quickly time flies. Thank you so much, Sakura Murakami there, our Japan politics and economics reporter, giving us a preview of this weekend and the likely scenarios over the coming weeks. Right, now, still on the story here, so hedge funds in Japan, or looking at Japan, or playing Japan here, are employing this a range of tactics to make money, certainly, from this too-close-to-call leadership field. Let's bring in our FX and rates, senior FX and rates reporter, Ruth Carson, joining us right now to talk us through. So, Ruth, talk about hedge funds. They can get creative, but what are some of the top strategies these funds are employing ahead of what's happening tomorrow?
Yeah, and this is the thing. It is such a close election. It's a knife's edge election. So sometimes with these things, you really have to take some risk off the table. And that's what we're seeing. The hedge funds that we've spoken with, some of them are really hedging their bets. Some have bought gold, for instance. They've closed their short yen positions. Others are going, you know what? I'm going to build up a buffer of cash so that when the election is clear, when the winning candidate becomes clear, and should shares rally on that, they will take it as an opportunity to short. So there is a range of strategies being employed, and it kind of attests to the situation about how much of a coin toss it is as to who the winning candidate will be.
Yeah, as you mentioned, gold might be the one thing. Tell us more about what these funds are doing to hedge their positions if they get things wrong.
Yeah.
Absolutely. And it's ironic in a way because the yen is often seen as a haven, yet it is at the epicenter here in many aspects because it is a Japan vote. So some hedge funds that we've spoken with have actually taken a longer term view. If the event risk is really, really hard to decide on, some like Atom Capital in Tokyo are actually taking the opportunity to go, you know what? I'm going to shut out the election noise. Instead, I am going to look at all the factors, macro, geopolitical risks, etc., as well as the Fed, that's going to be influencing the Bank of Japan's monetary policy path. Because in many aspects, that's the cleaner play. It could be a rates play, or in fact, a stocks play as well, whether it's opportunities to short or to buy. So some funds are going down that route.
All right, let's talk about how markets are positioned, because that likely determines, of course, what the reaction function is likely going to look like. Ruth, what does our reporting show in terms of how people are positioned around the currency?
Yeah, and this shows you how split markets are in many aspects. We all know that dollar yen's been in a range 147 to 149 for the past 2 months even. So one way to look at it would be to look at CFTC data, and it's quite telling. On the one hand, you've got asset managers that are buying the yen. On the other, you've got hedge funds that are net short the yen, so they're bearish on the yen. And that spread between those that are buying and those that are selling is now at the widest point since 2007. So we're talking global financial crisis levels. So maybe Monday will change things, or next week when we get clarity. But yeah, it just shows you how fluid the situation entirely is.
Yeah, and it could go either way. All right, Ruth, thank you. Our senior FX and rates reporter, Ruth Carson there. We got plenty more ahead. This is Bloomberg.
Welcome back. Indonesia's Vice Minister of Trade says Jakarta is seeking to improve relations with both the U.S. and China. Dia Roro St. Wijaputri told us that more about these trade negotiations, what's going on there with these conversations with Washington, as really her country seeks these exemptions for key exports like palm oil, like coffee, and also rubber.
Yeah, so I mean, it's always good to be optimistic, right? It's hard. I mean, everything that is happening is hard in itself, not only for Indonesia, for countries across the world. And so I think the outlook that we're trying to do and to have is to have that optimistic outlook, to see that, look, America, the U.S. has been a great trading partner for Indonesia. They are the second export country, and also, if I'm not mistaken, the fourth import country for Indonesia. Their positioning for us is very important, and we want to continuously maintain those good relations.
Southeast Asian economies, especially emerging economies in Southeast Asia, are currently really concerned about China dumping cheap goods into the respective markets. Where is Indonesia on that?
Okay, so with the case of China, again, China is our largest trading partner. It's our first exporting country. It's our first importing country, right? So we're always engaging with China. We see this as being a great trading partner. In terms of the goods coming into Indonesia, as you say, we have a mechanism also in place. So in the Ministry of Trade, we have the anti-dumping committee, and China is open for discussion with respect to this. And again, this also entails the types of conversations and the cooperation that we want to continuously build with China. I was at the AEM, the ASEAN Economic Ministers meeting just a few days ago. Very hectic, but very productive. We also, on the sidelines, spoke to China, and we wanted to see how we can better kind of improve our bilateral relations and trade going forward. And again, about these concerns were also addressed.
So the numbers are not showing just yet, as in the impact on industries like textiles. Has there been, any implications on I guess, small and medium enterprises in the country?
So one of the things that we'd love to see is that industries in Indonesia continuously thriving, irrespective of everything that is happening. We have anti-dumping measures that are currently in place in Indonesia. So that is there, right, by the governments, and the government is there to kind of support the local businesses. But also industries have their own role, share of roles to contribute to the Indonesian economy.
Right, if that version catches you wanting, there's plenty more. The full version's coming up in the next hour of Bloomberg Television.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders say decisions made on their own usually turn out to be poor.
When we go into a new region, networks matter, experience matters. Culturally, there are a lot of differences from region to region. We are just trying to find the right partner. Somebody reliable, somebody that is as invested as we are.
Widen your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
All right, close to 11:30 in Tokyo. Japanese markets are heading to that lunch break in just a moment, and we continue to see a pretty decent rally in Tokyo here today. Nikkei 225 up 1.5%. Topics as well. I think there has been some interesting calls from analysts there, bumping up their price targets for year-end as a countdown to this LDP leadership race, saying that this could be the next catalyst, really, for Japanese stocks. If you take a look at, this shift, maybe potentially to pro-growth policies like cash handouts, tax cuts, for example, that certainly is why there is reason to still be long this market. 147.64 for dollar-yen, Dave.
Yeah, I think JP Morgan, as Ivana was pointing out, they're raising their topics target for the year, and as Rie Nishihara, who I think is probably joining shows next week. Anyway, the target there is on the Nikkei is 47,000. It's bumped up from 42, and on the topic it's from 3 to 3.3. That's out of JP Morgan. Right, just very briefly, we'll look at Hong Kong benchmarks about an hour into the session. So that's what you get when a lot of the volumes in trading really comes across the Stock Connect. On a day when the Stock Connect is not connected, you have mainland shut, you do get volumes falling substantially. We are down on price. Hang Seng Tech 1.5%. It has been a very good week, of course, for tech itself. Very briefly, across the sectors we're tracking today, obviously it's still IT and chips, hardware. Some of the plays in Taiwan, for example, IT's up 1%. The benchmark is up again for a 5th straight day. So we are going into this weekend. And what U.S. shutdown? Do we need a job support? I mean, we probably do. It's probably better if we have it. But it doesn't seem to be disturbing markets right now with this AI trade managing to offset all ills in these markets. Okay, let's have a look at some headlines around the world this morning. India and China will resume direct flights. It's after more than 5 years that as the two of the biggest economies, world's biggest economies here, seeking to rebuild political ties. India's largest carrier, Indigo, says it will resume flights to China starting October 26th with daily service connecting the eastern city of Kolkata to Guangzhou. Air India is also expected to resume flying to mainland China. Okay, now China has warned the top U.S. envoy in Hong Kong not to interfere in the country's internal affairs. The warning comes after the Consul General reportedly invited former pro-democracy politicians to her inaugural reception. Now, the head of the Foreign Ministry, Hong Kong office, says that a U.S. diplomat should avoid meeting what it calls anti-China individuals.
All right, let's pivot slightly within geopolitics, Dave, and really talking about a battleground that's largely unseen, but increasingly critical. We're talking about undersea cables. And this is, as you can see with this globe here, and really it just looks like yarn around a ball, right? This vast yet vulnerable web carries almost all of the world's internet traffic. You're talking about some of the big tech companies in the U.S. like Meta, Google, the like, that take up almost more than 70% of the capacity there. It's the backbone of everything from AI to financial markets to military coordination. But we're starting to see diverging paths of these two major cable systems. You just show how connectivity and how aligned things used to be, really aligned with strategic national objectives. Now, you take a look at what's marked in orange, right? This is the China-backed peace cable. This is where you see others in blue by the U.S. And increasingly, you're starting to see these interconnected cables splinter. And that's really become a focal point of geopolitical tensions because you see the U.S. in some ways trying to shut out China from their networks. And China itself is also building its own so-called digital Silk Road. Now, last February, we certainly saw a bit of tension here, right? A Chinese-owned vessel was accused of intentionally severing lines off Taiwan's southwest coast. Now, Taiwan says it does actually suffer 7 or 8 of these breaks every year, Dave, with the majority linked to China. So, yeah, it's a very interesting piece. Feel free to check it out. The animations are amazing on this Bloomberg
Absolutely
project.
Fascinating story there. In fact, for more on this, let's bring in Belle, who's here with us to talk us through this. Certainly, we should be talking more about this, Belle. I mean, it started with this recent incident that Yvonne is pointing out, but how do we need to be looking at risks to this if we are that vulnerable to these disruptions here?
Yeah, I think that incident that Yvonne just mentioned there illustrates the story really well. So just to sort of recap some of the details, it happened in February this year off the coast of Taiwan, and there was a cargo ship, Hong Tai 58. It was actually registered to Tokyo, but it was crewed by Chinese nationals, including a Chinese captain. And so the Coast Guard in Taiwan spotted this cargo ship off the southern coast, and it certainly broadcast warnings about it, asking it to move, but still the vessel stayed for at least 2 days. And it was only after it departed that they did some investigations, and they discovered, the Taiwan Coast Guard, that essentially this cable had been disrupted. So the damage to it, I mean, it certainly severed communications between Taiwan and one of its offlying or outlying islands as well. From the Taiwan side, they said that this was an act of sabotage. They were very clear about this. And, of course, you can extrapolate a little bit further. I mean, if China were to take Taiwan in an act of force, a lot of military strategists and war gamers will talk about the need for China to essentially disrupt communications networks, and severing subsea cables would be a way to do that. From the China side, they said this was essentially an overreaction. This was a simple maritime incident, but it still did lead to an unprecedented jail term for that Chinese national, the captain of the ship. And again, it just puts the spotlight on why protecting subsea cables is such an important and formidable task.
Yeah, and tell us what's needed for that, right? Because it seems like it's not just to protect it, but, you know, from the U.S. and China's perspective, is to control some of these cables.
Yeah,
now.
I think that's sort of the way it's developing, and you referenced it there as well. There's sort of significance of this. I mean, you're talking about subsea cables. It's 97% of international internet traffic that's flowing through these subsea cables. It's very, very significant, and it's becoming even more significant as we ramp up communication through AI, for instance, and you have more of a need for these subsea cables. But you were talking about, yes, where they're most vulnerable. Of course, they're most vulnerable in shallow waters, for instance, landing points. But at the same time, they're also vulnerable in the way that you were referencing there about how they're becoming increasingly bifurcated. Yeah. So when it comes to manufacturers of subsea cables, there's 4 main ones, one from China, one from the US, a French company, and one from Japan as well. When it comes to how investments were thought about in decades or years past, it was a consortia that would usually be led by telcos that included US and Chinese names. But you were talking about those 2 different cables. You have the peace one from China, you have the US one as well. They're essentially kind of connecting similar points, but they're bypassing regional rivals. Yeah. They're stopping in places that are their allies as well. So yes, it's that increasing bifurcation. Whereas you said Washington is shutting China out of its networks, and China wants its own digital Silk Road as well.
Yeah, and I would imagine this becomes more a commercial issue when you talk about big tech, and they're getting more involved because this is literally what runs the internet and literally what keeps commerce and everything that we do, our lifestyles, online.
Yeah, exactly. And big tech is just continuing to have an even bigger presence in this. I mean, we talk about sort of the AI stack, and subsea cables are becoming a part of the overall AI stack and a key part of AI infrastructure. But you mentioned earlier, and just to say it again, a decade ago, so 10 years ago, you had names like Meta, Microsoft, Google, Amazon. They were less than 10% of subsea capacity. Today, they're at more than 70%. So it's a huge increase, and it's leading big tech to actually start to create their own undersea cable network. So Meta, for instance, has a project going on right now that at the conclusion will make it the world's longest subsea cable network at more than 50,000 kilometres. They're financing that. And there's a concern that we hear from strategists and analysts, and ASPI is one of those from Australia, for instance, a think tank in Australia, but they say that you're really creating a situation now where you're very vulnerable because you're going to have single points of failure failure, essentially, in the system. And yes, I mean, subsea cable attacks, they happen. There's around maybe 200 a year. Some of it maybe is just damage. But some of it also, even though it's hard to prove, is likely espionage, sabotage, disruption as well. So there are big concerns. And I think a retired military general from Britain put it to us really well in the piece. But he said, you know, in the Second World War, we talked about roads and bridges that were being bombed. In a coming conflict, you can't be surprised if cables become targets as well.
Enough undersea fiber that can go to the moon and back twice. That was what I read in that piece.
Yeah, fascinating
Amazing.
story.
Annabelle, thank you. Annabelle Drew is our Asia Tech correspondent, bringing that story to us. Of course, if you're a subscriber and want to rewatch that interview or this hit that we talked about, this story, you can check out our TV function, TV Go. You can become part of the conversation, send us instant messages, and really watch how this whole intertwining of undersea cables and really what's at stake here. Fantastic piece. Check it out at TV Go. Some corporate news this morning. LG Energy will start sending South Korean workers back to the U.S. for essential business trips less than a month after hundreds were detained in a visa crackdown. Now, it follows confirmation from a U.S.-Korea working group on the validity of visas and travel permits. Almost 300 Koreans were detained last month at a Hyundai LG battery plant in Georgia, marking a low point in relations with the U.S. Bloomberg's been told that Boeing's 777X jet is now slated to fly commercially for the first time in early 2027 instead of next year. Now that sets the stage for potentially billions of dollars in accounting charges. Sources say customers, including Lufthansa and Emirates, are now expecting to fly the plane until 2027. Now, the jet is already 6 years late and has major strategic and financial importance to Boeing. And Japan is reportedly days away from running out of, the Asahi Super Dry, the country's most popular beer. The FT is reporting that retailers are bracing for empty shelves as soon as this weekend. And the shortage comes after a cyber attack that hit Asahi's operations this week. Now, the company says the disruption is, though, limited to just Japan.
Yeah, there we go. Okay. I think I saw a graphic of Blackpink, I think, are endorsing Asahi, right? Or
seen them on buses.
Yes. Okay. There we go. I'm not imagining it.
Not just you.
Okay. Okay. So I'm like, where did I see that Asahi? Apart from obviously in my fridge. Yeah. It's all around the transport network here. That's just to say that takes us back to the visa story. We talked about LG there. We talked about Korea visa. K is the segue here. We're taking a look at what's trending in China right now. You have state media defending this new visa program to attract global tech talent after online posts expressing worries about losing jobs to foreigners, and certainly comes as official youth unemployment jumps to a 2-year high, almost 19%. Min Lo, our China correspondent, is here with us to talk us through what concerns people have specifically about this new K visa.
Yes, as you said, one of the big issues is that youth unemployment is very, very high. We're talking about nearly 1 in 5 young people in urban areas unable to find jobs. And so they're up in arms about this new visa, which many people say is too loose, the requirements there, because it is meant to attract STEM graduates from renowned universities, and anyone who meets the criteria with a bachelor's degree can apply. And so on social media, and you can see this chart, it shows you the youth unemployment rate is at the highest level since 2023, when there was the gap there because the government was revamping the methodology for collecting the data. And on social media, people are saying that, there are already so many graduates in China, including master's graduate, because when people have no jobs, what do? They continue studying. So there is that education inflation going on. There are 12 million new graduates entering the job market now. So they're saying bachelor's degree is too low a requirement for this new K visa. And it's also not clear what exactly constitutes a renowned university as well. And then other people are saying that the English language advantage that foreigners have, that gives them a leg up over most local graduates in China as well. And still others are saying that it's an issue of foreign nationals getting special treatment here and being treated better than the Chinese nationals.
Okay. That certainly is the worries among the public. Tell us a little bit more about what the government has done. They've responded. They're just defending still this program. What are they saying?
Yes, well, the Chinese Foreign Ministry has said that they will be releasing more information about this new visa through foreign embassies and consulates. But the party newspaper, People's Daily, has published an editorial to try to defend themselves and really talking about the advantage of this policy. A part of it is juxtaposing against the U.S. policy here and saying that China still is opening its doors to foreign talents, right? But it's also saying that, some people are misunderstanding this policy and spreading bizarre rumors that is causing unnecessary anxiety. And it says it's very narrow-minded to think that China doesn't need foreign talent because any country that wants to succeed in the modern world must be able to attract top talent. And it says China is big enough with ample space to be able to absorb all sorts of talents, and also that there is this shortage of talents in key manufacturing sectors with a talent gap of about 30 million people. It didn't really address the crux of the issue, though, the youth unemployment issue. That wasn't really mentioned in the article, and I think people are still a little bit unsatisfied with that. And if you look online on the visa application page, it's interesting, you don't see that category available for application now, even though it's supposed to be available from October. So not clear, is that delay because of the October holidays, or is the government taking time to sort of fine-tune some of the details there?
Yeah, but still, as you say, maybe not quite soothing the public unease out there just yet. Min Lo, thank you for bringing that story for us. Our China correspondent, Min Lo, there. When it comes to this new program, K-1 visas in China. Let's talk a little bit more about geopolitics and the like, and certainly that's one thing we're watching when it comes to the Philippines. And President Ferdinand Marcos Jr. and Vice President Sara Duterte are locked in a political showdown that could have implications for a regional power struggle between China and the U.S. Bloomberg Originals has been looking at how Manila's alliance with Washington is now coming under pressure.
This is the Vice President of the Philippines.
Nagdilin na ako, ma'am. Pag namatay ako, sabi ko, huwag ka tumigil hanggang hindi mo mapatay sila.
She's threatening to kill the president if she's killed. Even though Filipino politics is known for high drama, this was extraordinary.
Right now, the tensions have already evolved into an open feud.
The political battle between President Ferdinand Marcos Jr. and Vice President Sara Duterte is playing out like a thriller. But there's more at stake than meets the eye.
Filipinos understand the underdog situation that they're in terms of geopolitics.
The Philippines is on the front line of China's territorial claims in the South China Sea, and would play a major role in any U.S. effort to counter a possible Chinese invasion of Taiwan.
The Philippines is a key ally for the U.S. here in Asia. It is located in a very strategic spot.
But this alliance is under pressure as Sara Duterte backs closer ties with China, and her case is being helped by aggressive U.S. tariffs.
Well, President Trump says the U.S. has reached that trade deal with the Philippines.
Trump's presidency has upended just about every assumption you could have about America and the world.
The Philippines sits in the middle of the China-U.S. power struggle. Which way it swings will have consequences far beyond its borders.
And subscribers can watch that documentary in full right now on the terminal or at Bloomberg.com. It'll be available later on the Bloomberg Originals YouTube channel. We got plenty more ahead. This is Bloomberg.
On everything that we care about. The economy, media and information, markets, trade, geopolitics.
The president of bond giant PIMCO says credit markets are becoming more resilient as they take a larger and more structural role in asset allocation plans. But Christian Struck told us that fundraising in the private credit space is still a little slow.
What the shift is really what's happening with banks. And it's less about banks
exiting markets, but banks more looking for optimal allocation of their balance sheet. So rather than banks making every loan and keeping every loan sitting on their balance sheet, they're looking for partners who can take some of the loans that they're originating. So asset managers like PIMCO are coming in, working alongside banks. They are the ones who face the ultimate consumer, the ultimate household.
Guys, ये क्रूड ऑयल में यहाँ पर प्रॉफिट बुक करना, ठीक है, बायर्स रेजिस्टेंस पे आता है, याद रखना मैंने जैसा बताया ऊपर ये रेजिस्टेंस इन द सेंस ऑफ ये रीटेस्ट है, तो बायर्स तो अपना प्रॉफिट बुक करके यहाँ निकल सकते हैं, रीटेस्ट से यहाँ पे प्लान करोगे तो रीटेस्ट से सेल कर सकते हैं यहाँ पे। याद रखना है रीटेस्ट से थोड़ा सा ही सेल का प्लान करना, आ जाता है नीचे तो वेल एंड गुड, फिर ऊपर से एक रेजिस्टेंस मेजर रेजिस्टेंस थोड़ा सा अपर लेवल पे वहां से सेल कर सकते हैं, एंड देन नीचे आया तो फिर बाइंग के लिए एक नीचे सपोर्ट है आपका इधर पे जहां लगा रखा है, यहाँ पर फिर एक बाइंग का प्लान करना। ये रीटेस्ट वाले ट्रेड में थोड़ा ध्यान रखना, थोड़ा सा रिस्की भी हो सकता है, तो क्वांटिटी कम। बाकी नेचुरल गैस में ये भी रीटेस्ट है, यहाँ से एक बाइंग प्लान कर सकते हो, ये एरिया ऑफ इंटरेस्ट है, यहाँ से भी सेलिंग थोड़ी बहुत प्लान है, यहाँ से भी प्राइस गिर सकता है थोड़ा बहुत, ध्यान रखना, वापस ऊपर जाएगा तो वापस ऊपर सेल कर सकते हैं, एरिया ऑफ इंटरेस्ट से भी सेल किया जा सकता है कम क्वांटिटी में। कैंडल ओपन इक्वल टू लो पे सेल मत करना, इस चीज़ का ध्यान रखियो। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। एंड सब्सक्राइब द चैनल एज वेल, जिन लोगों ने सब्सक्राइब नहीं किया अभी तक चैनल को। कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हो।
Has made us changing our processes. The question, the way I would answer the question, if the firm was the same size and it didn't grow, we would certainly be operating with fewer people. But if the firm grows and you expand and you can invest in other areas for growth, we'll wind up with more jobs 10 years from now than we have today. Just as, by the way, we have in every step along the journey for the last 40 years, as technology has made us more productive. I don't think it's different this time.
So you thought, to be clear, you foresee more headcount in 5-10 years' time?
That's because I think we're going to be running a much bigger enterprise.
Okay.
Yeah.
Do you worry about there's been some hand-wringing in terms of the investment? We've seen the hyperscalers, $350 billion in terms of capex and data centers and infrastructure, and the concern that the return on investment isn't being matched. That's not matching the revenue on the other side. Does that concern you, that mismatch?
Well, sure. It concerns anybody that's deploying capital, but I think the journey's pretty clear, even though we're at the beginning of the movie, not the end of the movie. I guarantee you at the end of the movie, there'll be a bunch of winners and there'll be a bunch of losers. There'll be a bunch of capital that was deployed that ultimately delivered very attractive returns, and there'll be a lot of capital that was deployed that did not deliver returns. And you can go back in any super tech cycle or any big investment cycle, and that is the pattern you'll see. It's not different this time. We just don't know how that will play out. But it's very exciting to see these technologies get deployed and the impact it's going to have. It allows productive people and productive businesses to be even more productive. And so people get very caught in this question of more or less. And, I prefer a lens that says there are obviously things where we're going to have a lot fewer people. But I'd love to have the capacity to go get more people to spend time with clients. I'd love to have the capacity to invest in new businesses where I think we can affect clients, and we need people to do those things. So it's a give and take, and nobody stands still.
To be clear, you're not worried about an AI bubble?
An AI bubble. I think that there will be a lot of capital that's deployed that will turn out to not deliver returns. And when that happens, okay, people won't feel good. Okay, if you know, I'm not going to use the word bubble because I don't know what the path will be, but I do know people are out on the risk curve because they're excited. And when they're excited, they tend to think about the good things that can go right, and they diminish the things you should be skeptical about that can go wrong. We're in one of those environments where people are out on the risk curve, and there'll be a reset. There'll be a check at some point. There'll be a drawdown. The extent of that will depend on how long this goes. By the way, if we were having this conversation in 1988, you would have been asking the same. 1998, you would have been asking the same question. Yet the environment went on for another 3 years until there was then a significant check in 2001 and 2002. So I'm not smart enough to know. I think it's going to go on for a while. I think the opportunities are great. I think they're very exciting. But I also see complacency around risk-taking, and when that happens, ultimately there'll be some speed bumps or some drawdowns.
David Solomon, Chairman and CEO of Goldman Sachs. Thank you so much.
Thank you.
Fantastic.
Appreciate it.
Thank you, David.
Thank you. Appreciate it.
What a wonderful conversation. Also with, I have to say, a spinning set, not something that you see every day. Tom McKinsey there speaking with the Goldman Sachs Chief Executive David Solomon at Time Tech Week. They talked about the Fed, they talked about tech, and some of course, the things that we should be watching out for. It's Friday, but we don't have jobs today. This is because of the U.S. government shutdown. Still great to look at the markets as always. A lot of the focus is, of course, on tech and the tech rally that we saw over the last couple of days. Now, the stocks rally seems to be hand in hand with what's going on with AI. This tech-fueled rally in global stocks continued as big-ticket artificial intelligence partnerships seem to be stoking more and more fresh optimism. It's also very clear that if you look at the directional pull of markets, investors wagering that billions pouring into the AI sector will translate into profits and extend gains in tech shares. I'm looking at the S&P futures are gaining some 0.2%. If you look at a gauge for Asian technology stocks, for example, they definitely led the charge with a new record as Hitachi teaming up with OpenAI on energy and related infrastructure, while Fujitsu, for example, expanded its collaboration with NVIDIA. Euro dollar 117.44, and then gold. I love looking at gold because it's usually very symptomatic of what exactly is going on. 3,864. Remember, it's headed for a 7th weekly advance. Oil also on track for its biggest weekly decline since late June. Let's also look at what's happening in Europe and quickly maybe U.S. futures. Europe is really following the direction of what happened in Asia and probably then what's happening in the U.S. later today. And then if you look at what we heard from the Treasury Secretary, Scott Bessent, he predicted a pretty big breakthrough in the next round of trade talks with China. So that's also something that we really need to keep an eye on. S&P futures, NASDAQ, the big ones to watch out for, getting some 0.3%. Up next, it's Bloomberg Brief with Vonnie Quinn. This is Bloomberg.
In case you missed it on Bloomberg Insight.
There are many things that economists disagree on, but I think one thing that they all tend to agree on is that central bank independence is a good thing. It's a hard-won lesson. It's a shame that it's being, I think, not remembered as well, especially in, again, the place which is supposed to be the world's safe haven.
Not just about the dollar, it's also about the yuan. Some talk about perhaps competitive devaluation. If we continue to see the yuan decline from here, that's detrimental to your economy as well.
You know, a lot of the countries in the region, there's still enough of us that are still around, present company included, that still remember the 1997 Asian financial crisis. But there's still a bunch of us around that still remember that and still recognize the lessons and the dangers of trying to, basically do too much in terms of trying to keep exchange rates at a certain level for competitive reasons.
Don't miss Bloomberg Insight live weekdays.
Let's suppose you hire people in this business and they start losing money. Yeah. How long before you say, this isn't for you?
When we bring people on, we're looking for a previous record of success. So we don't train people, particularly on the investing side, right out of college. They would have come with already experience. Then there's also the why are they wrong or why are they right? Are they right for the right reasons? Or are they wrong for the wrong reasons? And then there's also collegiality. How do you work in a team? But I would say that within a 2 to 3 year period, usually you get a sense whether, if someone's talent.
Do you ever hire English majors or history majors, or you only hire STEM majors?
I encourage my boys to go to liberal arts and to be in whether it was poli-sci, economics, and be fluent in other areas. So I think having a broad perspective can be very helpful.
If somebody is very good at what they do you say to them, you're very good, but go to business school? Or you say, don't go to business school because you're very good at what you do?
So I didn't go to business school, and I think that the markets are a great business school. So it's we don't encourage people to go to business school. We encourage them to take the CFA. That's a good way to get more technical trading. If it was something that they feel they wouldn't be complete without going to business school, there have been people who've done nicely with us who've wanted to go, but that's been more the exception.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Tech euphoria, stock futures extending the rally after indices notched fresh records. Gold set for its 7th weekly gain. The AI spending boom alive and well. Global Infrastructure Partners is said to be nearing a $40 billion deal to buy aligned data centers. And a data vacuum. No monthly payrolls report today as a U.S. government shutdown enters day 3. As Commerce Bank officially puts it, the data have gone missing. But it doesn't seem to matter. We do get S&P PMIs later on, and we're also going to get more private data. But this market doesn't even seem to need the data as long as it has partnerships. Fujitsu and Hitachi, the latest to make partnerships with OpenAI and NVIDIA. We're up 1.5% on the Nasdaq 100 already just this week, and it looks like futures are going to power us even higher. The S&P is up 1% week to date, and futures there also higher. Same with the Russell 2000. Let's take a look at yields. We're down about a basis point across the board. The 2-year yield now at 3.55, the 10-year below 4.10. We'll see what happens throughout the day as those data roll in, 9:45 and 10 a.m. Eastern for those data, and also what this tech continued rally does to this market. Again, we mentioned gold having 7 weeks of inflows. Not at its record, but close to it. And then, of course, there are cryptocurrencies to think about. We've had that rally in Bitcoin, 17.1% it's averaged of a rally the last 7 years. So if October is anything to go by, we might see even more gains there. Well, let's get to some individual stocks to watch now for the session. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Let's start with Applied Materials, which is weaker this morning after the semiconductor equipment maker said that it expects a $600 million hit to revenue from new U.S. export restrictions. So this comes right after the Trump administration dramatically expanded sanctions to capture more subsidiaries of blacklisted companies. And that will have an impact on revenue and earnings for Applied Materials, and that is driving the stock lower this morning. Moving over to Tesla, which is actually rebounding in pre-market trading after shares fell yesterday. The automaker said that it expects there were record sales this quarter, but investors were worried that this would be difficult to be replicating going forward. But this is still rebounding. And then finally, Rumble AI. There's an AI partnership from Rumble. Rumble is an online video platform. There's a new partnership with Perplexity, and that is driving the stock higher this morning. A lot of investor enthusiasm around this new deal.
Chloe Melly in London there for us. Thank you so much. And later in the hour, we're going to be catching up with Veronica Clark, U.S. economist at Citi. AI optimism then continuing to push stocks higher as a deal spree rolls on. Shares in Hitachi, for example, surging in Japanese trading earlier. That's after the company announced a tie-up with OpenAI. That collaboration driving broader tech higher in Asia. Fujitsu as well. Let's go to Bloomberg tech reporter Newly Purnell in Hong Kong for more detail. Newly, what do we know about this collaboration? What are they collaborating on, for example?
Yeah, OpenAI, of course, much in the news following our great scoop on their new $500 billion valuation. Hitachi, brand name, tech name in Japan. They're going to be collaborating, we understand, on energy, tie-up related to energy and power grid operations, cooling equipment, storage, and Hitachi's digital services hub. So we see, again, OpenAI, so much interest in its huge valuation, seen to be a key player in this new world of AI. And it seems to be any corporation that seems to touch with these partnerships, investors seem to be liking what they're seeing.
Yes, it's these legacy companies that we haven't really been speaking about in the US for a very long time. Fujitsu, another one, NVIDIA announcing that they'll be expanding their so-called strategic partnership. What are the details there?
That's right. Well, Fujitsu, they're talking about collaborating on full stack AI infrastructure, and they're talking about agentic AI. So this is the idea, agentic AI, that instead of simply an LLM where you input text and it spits results back at you, there may be these new systems that you ask agents to go out as if you would ask an assistant to go out and actually do things online or in the real world. So here are another new wave we're talking about in the world of AI, these actual agents, and that would be the tie-up with Fujitsu.
Newly, thank you so much. Powering this market ahead, that is Newly Purnell there. The U.S. into its third day of a government shutdown, the Trump administration continuing to signal mass federal layoffs are coming, with Press Secretary Carolyn Leavitt describing that the number of workers fired will be in the thousands.
It's likely going to be in the thousands. It's a very good question, and that's something that the Office of Management and Budget and the entire team at the White House here, again, is unfortunately having to work on today. These discussions and these conversations, these meetings would not be happening if the Democrats had voted to keep the government open.
For more, let's bring in Bloomberg's Kasia Klimaszinska, who leads our breaking news coverage in Washington. Kasia, we're still waiting on details on these proposed layoffs. What are we seeing around this shutdown and who it's affecting so far?
Unfortunately, we are expecting this announcement at a time now. Caroline Leavitt, the White House press secretary, is having a press briefing today, so we might find out exactly how many people will lose their jobs. As she said yesterday, it will be in the thousands, and President Trump was supposed to have a meeting yesterday with his OMB director to go agency by agency and decide who can be dismissed, perhaps permanently, even as there are some legal experts who say it actually shouldn't be that way. You shouldn't use any money during shutdowns to organize any permanent layoffs. But it could happen, especially given that there are really no talks between the two sides, between Republicans and Democrats. Senate is back today and there will be votes, but I think there will be the votes on the same bills that have already failed, so the partisan bills. And so most likely we'll see no progress, and then lawmakers will break up again for the weekend and come back next week.
Kasia, the Wall Street Journal also reporting that the government is exploring a $10 billion bailout for farmers. What do we know about this?
Even as the government is shut down, the tariffs are being collected. The White House said specifically that the tariff collection operations will continue. So this money is flowing. And President Trump said earlier this week that he plans to use some of this funding to compensate farmers, especially soybean farmers who lost their key customer, China. China is the biggest buyer of soybeans around the world and hasn't bought any from the U.S. This year. So especially those soybean farmers need some funding to buy equipment. Equipment is getting even ever more expensive. President Trump will also talk to his Chinese counterpart, President Xi, later this month. So maybe there will be a purchase agreement there, and this, let's say, bailout will not be needed. But it could also come as early as next week, the announcement of some additional help, additional funding for the U.S. farmers.
Kasia, thank you so much for all the context. That is Bloomberg's Kasia Klimaszinska, who leads our breaking news coverage out of Washington, D.C. Well, Boeing's shares are a little volatile this morning. The move coming after Bloomberg has learned Boeing's new 777X aircraft is facing a significant delay and is now expected to enter commercial service in 2027 instead of next year. For more, I'm joined by Bloomberg aviation and transport reporter Danny Lee. Danny, this plane, it's literally already 6 years late, and now we're adding at least another year on top of that. What's going on?
Yeah, Bonnie, good morning. So we are likely to see more delays based on certification delays that Boeing CEO Kelly Ottberg had flagged just last month. And according to Bloomberg sources, this means that these delays that Boeing have not specifically outlined will mean that a shifting timeline from 2026 into 2027. And it's a blow to airlines who've been waiting since 2020 for this Boeing's new long-range, long-haul aircraft. So it's frustrating, and all this means is for Boeing, this could add up to yet more charges it has to take account for this delay, potentially up to $4 billion, according to analysts. And this is an aircraft that has already racked up charges of $11 billion. So this is not a great situation for Boeing or Kelly Ottberg to be in, given it's facing potentially yet another delay to its new marquee jet.
Yeah, $11 billion in cost overruns already, and that's not including, as you said, the potential $4 billion more. How does this happen? How can Airbus do it if Boeing can't, for example?
Well, I think for any new commercial jet, these are always going to be really tricky investments that, plane makers don't take lightly. And so, given we have seen, particularly high scrutiny, more high standards in making sure that these new jets come out of the box fighting fit. This is obviously going to be it's a challenge that someone like Boeing, I'm sure Airbus in the future as well, will all have to contend with when it comes to producing these new top-of-the-range jets. And so I think just this latest delay was something that is not a surprise, I'm sure, for most airlines, and they'll have to mitigate that for keeping their older planes for longer.
Yeah, I mean, we're talking Lufthansa, Emirates, and so many more. Is there a possibility that they'll get frustrated and cancel orders? Can they even do that?
I think for the airlines, they've pretty much accepted the fact that they will have to wait just a little bit longer, perhaps, maybe several months more. We know some airlines have pushed out some of their deliveries. We don't see necessarily airlines looking to cancel, given there's so much they've poured financially into this. So I think it's just a wait and see, and potentially for Boeing to confirm maybe by their third quarter earnings just how big of a delay and what kind of charges it takes.
I mean, it's so funny, coming literally almost the same week that Boeing announces a new single-aisle airplane to succeed the 737 MAX, or at least according to the Wall Street Journal. Danny, thank you so much. That is Danny Lee, aviation reporter for us there. Now, to other top stories trending on the terminal this morning. BlackRock's Global Infrastructure Partners is said to be in advanced talks to acquire Aligned data centers. Aligned could be valued at about $40 billion. The deal would be one of the biggest for the year. A spokesperson for BlackRock declined to comment. Funds under UBS are facing more than $500 million of exposure to bankrupt auto parts supplier First Brands. UBS Hedge Fund Solutions is the largest unsecured creditor with a $233.7 million claim, while O'Connor has a similar claim for $116.1 million. A Syrian-born British citizen was named by police as the man who killed 2 and injured 3 at a Manchester synagogue. Police say the attacker drove a vehicle at people outside the synagogue and then attacked them with a knife. UK Prime Minister Keir Starmer warned against rising hatred and anti-Semitism. Coming up, Goldman Sachs will spend $6 billion on tech this year. That and more from our interview with CEO David Solomon. That's next. This is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Why did you decide to go to Harvard among all the things you probably had available to you?
As a behavioral scientist, I'm going to spend the rest of my life lifting people up and bringing them together in bonds of happiness and love using science and ideas. And so that's what I decided to do at Harvard.
It can't be a one-way street, and it won't be. And I am building relationships with nonprofit leaders, with labor leaders, with business leaders. I'm building relationships, fortunately or unfortunately, with people on the street. And it is a two-way street. There's no more that we're just going to hand things out and just let people do whatever they want. I want to have people coming in. I want to welcome them with open arms. And then, like I said, I want them part of San Francisco, part of the fabric of this city. If you're a CEO, you want your employees liking where they work. I just had one of the executives, the CEOs that I talked about earlier, tell me that they did a survey of their employees about where they wanted to be in the Bay Area. San Francisco was where they wanted to be because of our arts and culture, because of the restaurants, because of nightlife, because of these entertainment zones. And so what we learned is you can't just do a handout without any obligation and responsibility.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Goldman Sachs CEO David Solomon is forecasting an acceleration in the U.S. economy into 2026, thanks to tailwinds like tech and stimulus. He spoke to Bloomberg's Tom McKenzie at Italian Tech Week in Turin earlier. Take a listen.
The U.S. economy is in pretty good shape, and there are some very, very strong tailwinds that have really had a profound effect, and there are also some things going on that are creating headwinds and are probably leading the economy to underperform its expectation at this time, but I'm optimistic that we're probably going to see an acceleration as we continue to head into 2026. The big structural issue that's kept the U.S. economy going so well is the U.S., and by the way, other developed economies around the world, are running very aggressive fiscal stimulus plays. Governments are spending enormously into economies in the developed world, and that keeps the economy going even when you have other headwinds. Second big macro phenomenon that's affecting the U.S. economy is all of the AI infrastructure build, all the capital spending, all that's going into the ground to support the deployment, the development, the continued growth of AI infrastructure into the enterprise, and that's a big tailwind too. That's balanced on the other side by the implementation of the trade policies, which are still getting absorbed. I think we're seeing, some of the effects from trade, but there's still more to go in terms of really understanding how the trade policy is fully implemented and how it balances growth. And then obviously the world's a little bit more geopolitically fragile, and that has an impact on growth and kind of confidence. But when you balance it all, and you saw the third quarter reading was quite strong, but year over year, from last December to this December, the overall growth trajectory will probably be a little bit less than 2%. And so that's slightly below trend, but still in pretty good shape.
And an acceleration into 2026?
I think that as the trade policies are absorbed and you have the continued stimulus and the continued kind of tech spend, you've got a pretty good tailwind. I hear as I talk to CEOs that would kind of have their finger on the pulse. Certainly the upper end of the economy is still spending quite strongly, a little bit more constraint on the downside, on the lower part of the economy. But I think the things you have to watch labor. There's no question labor is a little bit softer, and the Fed's watching labor carefully. And, I think you've also got to watch inflation and whether or not the impact of trade is just a one-time price movement or there's something, more significant that comes through, and it's too early to know.
That was Goldman Sachs CEO and Chairman David Solomon speaking with Bloomberg's Tom McKenzie at Italian Tech Week. Coming up, a fire erupts at a Chevron refinery. Also a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
Governments make the commitment for net zero. Companies have begun to do the work of looking down their supply chain. I'm not sure. I think that while there isn't the intense activity around accelerating ESG, it is not a stop. In fact, I wouldn't even say that it's a pause. I think it is a how do we do it in this in this current environment. I mean, it's only 3 short years that Thailand hosted APEC, and the thematic from that APEC to subsequent ASEANs to, to so many of the bilateral engagements that we've had is really how are we going to do this just transition? How are we going to transition our economies from energy systems to data systems in a way that's going to get us to a net neutral world, right? I mean, a net zero world. I don't think that that's going to change. I think that there are adjustments to this. All the companies that I've been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going. And if you look at policies, like in Europe, they've got CBAM, right? I mean, the carbon border adjustment. Different governments have put forward commitments to getting to net zero. And I'm not seeing any giant signal around the world that is saying, let's stop doing this, right? I mean, so if that signal is still there, that is actually, I think, one area of predictability for businesses and investors that is still directionally where we're going.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every weeknight. Balance of Power, weeknights at 10 p.m. London time, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. BBVA is in the final days of its $20 billion takeover attempt of rival Sabadell, having set 50% of shares as a minimum level to declare the takeover successful. Bloomberg's Kriti Gupta spoke exclusively to Sabadell's CEO about whether there's the possibility of that threshold being lowered.
I think there's a high probability that they will, but of course that it's only for them to say. But their persistence, sometimes beyond what was expected in terms of continuing with this deal, tends to show that it might take them to make the decision even if they are in the low 30s, if that would happen in terms of acceptance. And the 50 is unattainable for a very simple reason. 40% to begin with. This is the major argument. There are others. More than 40% are retail. If you wanted to know the acceptance level up to today, it's below 1%. And those don't do it the last day. They do it in a gradual manner, and they have been doing it into a gradual manner over the course of the days, and they remain still below 1%. The 80% of which we have knowledge, which are at the same time our customers, and at the same time our shareholders with more than 15 years of average tenure of our shares. And those are not going to tender. And then, of course, we all know the composition, and we are sharing it with the market, and the market has come to the conviction that reaching the 50% is impossible. Furthermore, they said that they would never go below 50, and now they have opened lately that possibility, and they acknowledge that reaching the 50 is very difficult just by their own actions. They have lowered the threshold to 30.
They have said that that is a possibility. They haven't actually made that change just yet. At the moment, the threshold is still 50. But to your point, they do have the legal ability to do so. Let's explore the hypothetical scenario that were they to move that threshold lower to 30%, include that second takeover offer. Is there a price in mind of what that second takeover offer would be?
There's a huge discussion. What there is certainty is that there is uncertainty of what that price would be. What the chairman of the CNMV, which has the ultimate word, has said is that it will be equal or superior to the first offer. Therefore, waiting has a tremendous incentive, even for those who wanted to tender, because they would have not only a potentially higher price, but furthermore, they would have what in financial terms we call a put, which is the ability to tender in the course of 3 or 4 months at a fixed price. So if the price goes down, they will all tender if this second option occurred, and if the price of Sabadell shares went up, no one would tender. So that means that they would even end up at the low end of the 30s and then have to move through in order to get a potentially higher shareholding, which adds even more risk, or that they might have to put on the table up to 12 billion in cash. That's a ton of money.
Is that a figure coming from the CNMV?
No, the figure of the 12 billion comes from the difference between the amount, the maximum amount that they could come, that they would need. Increase. Because if the share price of Sabadell and the market in general, if there was a slight downturn, everybody would have the option to tender at a fixed price, and that would require up to 12 billion of cash disbursement from BBVA. That's a ton of money. Carlos has said that it is impossible that they would require a capital increase. On the contrary, they have reserves on which they can detract the future dividends for their shareholders, but it's not enough. So on top of reducing the dividends, they will have to do a share issue to cover the rest.
Have you spoken to the CNMV about that possibility?
About the possibility of how to set the price, yes. About the other possibility, no, because it is not in their domain. That is more a risk that the ECB would have to consider.
When you talk to the CNMV, about setting the price, have they given an indication of whether it would be at the current level or above?
It is very complex, and they acknowledge themselves, and they haven't decided yet. And they haven't decided yet because the law is very clear. It has to be at the date of the transmission of the shares. That is not the 10th of October, which is the last day of the tender, because then the shares would not have been transmitted. That, in principle, should be the settlement date, which is expected to be around the 21st of October. That is what the direct interpretation of the law would say. And the CNMV is still analyzing what is the best alternative for the market.
That was our exclusive interview with the Sabadell CEO. Let's take a look at how we're shaping up this morning. S&P futures pointed higher even after the index rose more than 1% this week. A little weight to the US dollar index and yields down about a basis point across the curve. The 10-year there at 409. No data today beyond the private data out of S&P and ISM. I do want to mention that oil is slightly higher even as the market expects OPEC Plus to return more idled capacity to the market at its decision this weekend. Coming up, Veronica Clark of Citi.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
In case you missed it, on Bloomberg Tech.
Why is it so crucial to the board's mind that it is Elon Musk that is able to get Tesla to this future?
The board's responsibility is to look at who the CEO is for the next period of time, and we believe that Elon is the right CEO, and our view is he's a generational leader. There aren't any other people out there like Elon who can actually lead the company over this next decade or so. Once you decide who the leader should be, you need to put in place a compensation package to incent and motivate him.
There were sticking points on both sides. What were they?
It's things that other people can't do. It's what the company could do that no other company could do. So those types of things are what are in this plan. It is a zero compensation package unless he delivers against pretty ambitious goals.
Don't miss Bloomberg Tech, live every weekday.
Asia is at the forefront of some of the world's biggest stories. And we're here where the action starts in Sydney and in Tokyo. Get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Tech euphoria, stock futures extending the rally after indices notched fresh records. Gold set for its 7th weekly gain. The AI spending boom is alive and well. Global Infrastructure Partners is said to be nearing a $40 billion deal to buy aligned data centers. And a data vacuum. No monthly payrolls report today as the U.S. government shutdown enters day 3. Gone missing, as Commerzbank says this morning. That's the official data it's referring to. Doesn't matter to this market. Look at that. Futures pointing to gains once again this Friday, even after an already 1% gain for the S&P this week and 1.5% gain for the Nasdaq this week. This all on partnerships and tech enthusiasm. Fresh records once again. More partnerships overnight. Nvidia pairing with Fujitsu, OpenAI with Hitachi. We do have yields ever so slightly lower, down about a basis point across the board. Perhaps the bond market is eyeing this shutdown a little more closely. I do want to point out oil as well, slightly higher today, even as the market expects OPEC to return more idle capacity. Macquarie is predicting punishing oversupply, but let's face it, oil is pretty much in the doldrums already. We also have a potential deal with China. Scott Bessent has been predicting a big breakthrough in the next round of China talks. So there's a lot to watch for. Let's get to some individual stocks that we should be watching now. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Let's start with Applied Materials, which was weaker in pre-market trading today after the company said that it expects a $600 million hit to revenue due to U.S. export restrictions. So these sanctions, these restrictions will have an impact on the revenue and the earnings for this semiconductor equipment maker and is driving the shares lower this morning. Moving on to Tesla, which is actually rebounding this morning after the shares fell yesterday. So yesterday, Tesla reported really good quarterly sales, but investors were worried that this would be difficult to be replicated now that EV subsidies are expiring. But there's now a reversal in that sentiment this morning for the market, and therefore Tesla is up this morning in pre-market trading. And finally, Rumble, the online video platform, has struck a partnership with Perplexity that will see it integrate its the Perplexity's AI-powered tools into the platform. And this is a deal that that investors seem to be really happy about. And Rumble is up 13% in pre-market trading on the back of this new partnership with Perplexity this morning.
It's all about partnership these days, it seems, Chloe. Thank you so much. That's Chloe Melly there in London. Citi's Veronica Clark weighing in on the impact of this data vacuum, saying it will cause the Fed to hew to its median dot. She suggests 25 basis point cuts in October and December based on this, and writes, quote, the economic drag should be limited, but would become more significant if the shutdown lasts more than 2 weeks, or if a large number of federal workers are permanently laid off. I'm pleased to say Veronica joins us now. She's U.S. economist at Citi. What is your best estimate as to what any layoffs will do to the unemployment rate, Veronica?
Yeah, I mean, we're still waiting, of course, on clarity on how many workers might actually permanently lose their jobs from the shutdown. Of course, that's really abnormal. We usually don't see that in shutdowns. if it's in the order of something like a couple tens of thousands, it's probably not a huge impact on the unemployment rate. But in an economy and a labor market that is already slowing and people are already struggling to find work, anything is going to add to that increase in the unemployment rate.
So the best estimate at the moment for furloughed workers, at least 750,000. What's that going to do to GDP per week, assuming that they will get back pay?
Yeah. So usually you don't see a big economic drag from shutdowns, especially maybe early in the quarter when you still have time to make it up during the quarter. But as people start to miss paychecks, which they haven't yet, they will in a couple weeks, that does mean you're at risk of spending cutting back, even if they're being back paid. Certainly if some people are maybe not being back paid, if we get some of those more permanent layoffs, this will weigh on activity over time, maybe something in the order of a tenth or so for Q4.
Veronica, if the Fed doesn't know how quickly the labour market is becoming more fragile or deteriorating, should it overcompensate? Is there, an argument for getting ahead of anything that could hit them in the eyes in the future?
Yeah, I think that's a fair argument. I think the way that the Fed is looking at this right now is, of course, there's a lot of conflicting signals. There's a lot of dispersion among Fed officials themselves about what should we focus on, inflation risks or employment risks. But if we don't have any data, which it's always frustrating when we don't have data on the economy, but maybe especially now, I think you act based on what you last knew. And what they last knew at the September meeting, the median officials still did want to cut more this year. We had seen, much weaker job growth. We were less worried about the inflation risk. So I think that keeps them acting on that path, and that's a cut in October.
Still, they're data dependent. And you can't be data dependent on 2-month-old data. Will they look to the private sector data that we're getting and, make some decisions based on that? Have they had to do that in the past?
Yeah, I'm sure they'll rely more on some of this private sector data. It is also probably the case that, if this shutdown really does last so long that we're not getting any of that data before October, a month-long shutdown in itself is going to be a drag on activity. But yeah, we'll be watching the private sector data. Of course, the surveys, ISM we'll get this morning. ADP employment, maybe the Fed would put a bit more weight on that maybe than I would. But certainly we saw, weaker job growth in ADP this week. I think all of that would suggest that, they're cutting in October.
And meantime, we're getting more announcements on more tariffs coming online all the time. And if this shutdown continues to last, we won't get that CPI data in less than 2 weeks, and that will be really damaging, right?
Yeah. So we won't know that September data. And in terms of CPI, I'm actually even a bit more worried about the October data that we were supposed to get in November. The September data, the quality of it necessarily shouldn't be impacted by the shutdown, but we do get into issues of if BLS workers are not working in October, you can't go out into the field and collect that October CPI data. So we do run into maybe some data quality issues there. We just have to live with what we will eventually have. And so far, the story has been one that you're seeing maybe some slight tariff pass-through, but it's not been nearly as much as people were expecting a couple months ago.
Is there any argument at all for the Fed to do nothing, given that it doesn't have any data to back up what it's doing to the economy by, cutting 25, cutting 50, or,
Yeah, certainly some officials, there is this group of officials who maybe don't want to cut any more this year, want to go, proceed a lot more, cautiously, are worried about the inflation side of things. Maybe they'll be looking more towards, some of the price surveys, which we actually did see. ISM prices earlier this week were actually a bit softer. But I think, as markets are pricing essentially a full 25 basis point cut, I think that's the right move.
What do you do if you're at Treasury? There's so many products that are priced off of CPI, right? I'm thinking of the tips market in particular. What happens to all of those products?
Yeah, I think we will still have some data collection going on. We will still have numbers to be able to calculate. CPI does use maybe some third-party data in certain categories. But yeah, this is a frustrating scenario and one that we really haven't had to deal with before. The last time we had a full government shutdown in 2013, it was really just a couple weeks, and we were still able to collect some more CPI data. So if this does last a whole month, this might be somewhat uncharted territory.
Now, we have big auctions planned for next week, but is there a possibility that going forward, depending on how long this lasts and how many people are fired, that those auction sizes won't even need to be as large?
So I would think that, essential functions are going to continue as is. It would be, surprising to change anything. So yeah, all of that should stay pretty much unchanged. But it's not really like the government is necessarily saving a whole lot of money. point in the shutdown, especially because the expectation is that you do back pay, workers. Obviously waiting to see, though, if some of those workers could be more permanently laid off, but that would be a very small dent in what would need to be borrowed.
David Solomon just told us at Italian Tech Week that he sees the U.S. economy accelerating into 2026 thanks to fiscal stimulus and also, just tech, this tech enthusiasm overall. Do you see anything putting a prick in that in the next couple of months?
Yeah, I think I would be a little bit less optimistic. We certainly have that strong AI investment tech story. We've seen that for a lot of this year. That can continue, but I would be worried about the rest of the economy, of course, particularly consumption and the labor market. Consumption is still 70% of GDP growth, and we have seen a softening labor market. And I don't think I buy the argument so much that this was just a temporary slowdown over the summer because of uncertainty. This is a weakening labor market that we've seen for 2 years. This has been hiring that has been slowly falling for 2 years, and that really has not changed. And I think it's a reflection of rates being restrictive, and over time that weighs on growth. And at some point you are worried about the next step in that weakening labor demand is larger layoffs. We don't necessarily expect that or see that right now, but that risk is still there.
All right, Veronica, thank you so much for joining us this morning, even without the NFP to look forward to. That is Veronica Clark of Citi. Now to other top stories trending on the terminal this morning. A Syrian-born British citizen was named by police as the man who killed 2 and injured 3 at a Manchester synagogue. Police say the attacker drove a vehicle at people outside the synagogue and then attacked them with a knife. UK Prime Minister Keir Starmer warned against rising hatred and anti-Semitism. Funds under UBS are facing more than $500 million of exposure to bankrupt auto parts supplier First Brands. UBS hedge fund Solutions is the largest unsecured creditor with a nearly $234 million claim. And a fresh setback for Boeing. Sources say the plane maker's 777X is slated to fly commercially for the first time in early 2027 now, instead of next year. The delay could result in billions of dollars in accounting charges. Analysts estimate those charges could run from $2.5 billion to as much as $4 billion. Coming up, shutdown day 3. President Trump turns up the pressure on Democrats by threatening to fire federal workers. Details next. This is Bloomberg.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute news.
Technology news, geopolitical news,
Economic news.
financial news.
Bringing you the latest news in private markets.
Whenever,
and wherever it happens.
In Washington, Beijing,
Cape Town, South Africa.
Las Vegas,
Davos, Switzerland.
Rio de Janeiro, Brazil.
The south of France. And this is Bloomberg.
It's likely going to be in the thousands. It's a very good question, and that's something that the Office of Management and Budget and the entire team at the White House here, again, is unfortunately having to work on today. These discussions and these conversations, these meetings would not be happening if the Democrats had voted to keep the government open.
That was White House Press Secretary Caroline Leavitt speaking to reporters yesterday. It's now day 3 of the U.S. government shutdown. Let's go to Bloomberg's Kasia Klimaszinska, who leads our breaking news coverage in Washington. Kasia, she mentioned thousands. We're still waiting on details. What else are we seeing regarding this process?
Hello, Caroline Leavitt is briefing today, and she might give more details about exactly who will lose their jobs in this shutdown. We already know that according to the CBO estimates, 750,000 people are furloughed at a daily cost of about $400 million in lost compensation. Of course, some of those people maybe will be paid back, but as President Trump is implying, some of those layoffs may be permanent, especially at the agencies where he says their mission is not aligned with the values of the current administration. As we know, the economic data, for example, is delayed, so we will not see the jobs numbers today. Senate is back, but there are really no negotiations between the two parties, between Republicans and Democrats. Democrats insist that they want the subsidies for Affordable Care Act insurance extended, while Republicans say they want first the government to be funded, and then they can sit down and negotiate about the health care costs. What we did get yesterday was the recent poll that showed, at least according to the Washington Post, that more people blame Republicans and the Trump administration for this shutdown than they do Democrats.
All right, we'll await for more details throughout the day, as I'm sure all of D.C. and federal contractors countrywide will be doing as well. I wanted to ask you about this deal, this bailout for farmers potentially. Kasia, the Wall Street Journal reporting the government is exploring it. What details do we know?
Treasury Secretary Scott Bessent said that this deal might be announced as early as next week, perhaps on Tuesday, and then Wall Street Journal, as you mentioned, has the reporting that it could be anything between $10 billion and $14 billion for farmers, especially for soybean farmers who used to be selling to China. China is the biggest buyer of soybeans worldwide, but lately has been looking to purchase more from Latin America, from Brazil or Argentina, for example. So the American farmers are at a loss here, and President Trump says that some of the tariff revenue that keeps flowing can be sent to farmers to compensate them for those lost sales.
Kasia, I want to go back to something that might be related to the shutdown as well and the negotiations that are not happening. Health leaders are sounding the alarm on affordable care. Can you tell us more?
So that's really what's at stake here. Democrats insist that they need to see the Affordable Care Act subsidies extended. Otherwise, the health insurance premiums will go up for a lot of Americans across the U.S. And when they see those higher premiums, they will decide that the health care is not affordable. The health care insurance is not affordable for them altogether, and they will walk away losing health insurance for next year. So Democrats insist that this is the urgent issue, that it needs to be looked at and it needs to be dealt with before they agree to extend the funding for federal government.
All right, Kasia, thank you so much for covering all this. Kasia Klimaszinska leads our breaking news coverage in D.C. Now to a Bloomberg scoop. BlackRock's Global Infrastructure Partners is said to be nearing a $40 billion deal to acquire aligned data centers. This could be one of the year's biggest deals as AI spending rolls on. For more, Bloomberg's Manuel Maigori joins us now. Manuel, a $40 billion deal. What is Align, and how much does it actually have?
Definitely, it's a big deal, right? And companies that provide infrastructure, critical digital infrastructure these days for the rollout of AI, that probably were little known until right after now. A $40 billion transaction coming up in the coming days based on our reporting. And GIP, the platform owned now by BlackRock, is on an acquisition spree. They are deploying capital. They have a very good track record in infrastructure investments, and obviously there is a lot of interest from global investors in anything that has to do with digital infrastructure, data centers, particularly hot, not only in the U.S. but also here in Asia. We've seen a number of transactions where infrastructure-focused funds and some strategic players are really going all out and trying to build up, trying to gain scale. I mean, these businesses typically need a lot of investments, and this is definitely one of the hottest areas for deal making these days.
And it's interesting, it does have competitors. I'm just looking now, Equinix, NTT, Global Data Centers, and I'm sure, hundreds more potentially. Will there be a bidding war for some others? And what about the likes of NVIDIA? Would it not want to perhaps buy some of these instead of doing the partnerships that it's doing?
Definitely, it's a very good point. I mean, we're seeing a lot of consolidation in the industry. It's been ongoing for a while. I would say the last 2-3 years, perhaps even more. It's been just skyrocketing. It's become really hot. There is some concerns about valuations too, whether some investors are starting to overpay for some of these assets because it's such a hot space, right? But at the same time, we continue to see more. It's a matter of scale. So there's probably more to come in this space, especially when infrastructure funds with lots of dry powder ready to deploy as well. But obviously, I think valuation will come to the center of the question and the debate going forward as well.
Manuel, thank you so much. That is Manuel Baigorri there. Now, to another Bloomberg scoop. TSMC's U.S. shares getting a boost as Bloomberg learns that Huawei used advanced components from the chipmaker in at least some of its AI processors. Let's bring in Bloomberg's Peter Elstrom, executive editor for Global Tech, for more. So, Peter, what are the consequences of this reveal? Give us some details.
So Huawei is the Chinese tech giant that has jumped to the forefront of the country's efforts to be able to build its own AI chips. There, of course, has been this longstanding debate between Washington and Beijing about whether NVIDIA, the leader in this space, will be able to sell its chips into China. There have been restrictions first on the U.S. side, and now Beijing is pushing back on that front. So Huawei is really the great hope for China to be able to get domestic supply. What we found out through this teardown of a Huawei processor is that, in fact, they're using components from a few companies that they're not supposed to have access to right now. That includes TSMC chips that they're using within their own processors. They're also getting access to HBM memory from a couple of Korean companies, Samsung and SK Hynix in particular. The big questions around this teardown is, how is Huawei still getting access to these devices? It's possible that they purchased them before they were blacklisted by the U.S. government, before they were supposed to be cut off. But at least at this point, it looks like they're still getting access to these chips. TSMC has talked a little bit about this in the past, that somehow an intermediary was able to buy some of its components and then ship them to Huawei afterwards. They've talked with the U.S. government about that, and they've since cut off that intermediary. But what we found is they're still putting chips on the market that have these components within them.
Yeah, and it sort of might change our thinking on how China is faring AI-wise, right? Does this mean that maybe China isn't as advanced as we had thought after DeepMind?
That's a very good question. After DeepSeek's emergence this year, certainly there are concerns about their progress in AI in particular, and Huawei has been able to back that up with supplying some of these components. I guess the question you're getting to, which is very, very important, is that if they're still dependent on TSMC and Korean manufacturers that are no longer shipping new components to Huawei can't get access to them, will they at some point run out, or will they be able to turn to domestic suppliers for some of these additional components? We don't know the answer to that question so far, but at least at this point, they're still getting access to the HBM in particular. It's worth saying that HBM is the memory that you pair with the AI accelerators to be able to process all this data. That's very, very important. They have an older generation, HBM2E, and now they've they've moved on. The market has moved on to HBM3, HBM3E, and soon HBM4. So they're a little bit behind on that front, but they are still getting access to these chips.
It's a fascinating development, Peter. Thank you so much. A great scoop. Peter Elstrom there for us. Coming up, no Labour Department jobs report, but we have other data to watch. We'll get you set up for your trading day next. This is Bloomberg.
Mark Zuckerberg has said all of Llama's code will basically be AI generated in 12 to 18 months. 30% of Microsoft's code is already AI generated. So do kids still need to learn how to code? Do we still need software engineers?
Yes, yes, and yes. Betting against computer science and coding is like betting against reading in, 14th century. Just feels like, it's such a critical core skill with, and it's not just, computer science is not just using computers, right? It's actually that logical thinking, critical thinking. And if you're going to work with AI systems and AI generated code, guess what? You'll need more of it.
I mean, OC, you run a company called Code with Klossy.
Yeah,
so
I
I'm
get this
assuming you
question
think
a lot.
so, yes. But
yeah, no, I would just concur. I think even if you paint the picture to its logical conclusion, right, and say in X number of years, we're going to have fewer people hands on keyboard producing code, but we're going to have lots of AI agents that we need to orchestrate. To Aparna's point, to be a successful orchestrator, you need to actually be able to think computationally. You need to be able to decompose problems, find the white space, find the problem to solve, think how to create abstractions. Is the agent actually producing the thing that you want it to produce? And so the act of learning to code is actually creating core durable skills that I think will be lasting, even in the age where you're not having tons of hands-on keyboard time.
In case you missed it on Bloomberg Insight.
There are many things that economists disagree on, but I think one thing that they all tend to agree on is that central bank independence is a good thing. It's a hard-won lesson. It's a shame that it's being, I think, not remembered as well, especially in, again, the place which is supposed to be the world's safe haven.
Not just about the dollar, it's also about the yuan. Some talk about perhaps competitive devaluation. If we continue to see the yuan decline from here, that's detrimental to your economy as well.
A lot of the countries in the region, there's still enough of us that are still around, present company included, that still remember the 1997 Asian financial crisis. But there's still a bunch of us around that still remember that and still recognize the lessons and the dangers of trying to, basically do too much in terms of trying to keep exchange rates at a certain level for competitive reasons.
Don't miss Bloomberg Insight live weekdays.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Now a look at what's ahead today. No non-farm payrolls, of course, this morning, but we do get S&P PMI data at 9:45 Eastern, ISM services data at 10 a.m. Eastern time. And a slew of Fed speak throughout the day, starting with the New York Fed's John Williams speaking in a few minutes, Laurie Logan and Philip Jefferson also speaking. Plus, don't miss our interview with Fed Governor Stephen Miron. That's at 9:30 Eastern. Let's take a look at some pre-market movers. TSMC moving on a Bloomberg report that Huawei has been using components from the Taiwanese chipmaker for its AI chips. Applied Material lower on warnings that expansions of restrictions on exports to China will take another chunk out of its revenue. And Tesla bouncing back. Its sales records yesterday started off pleasing the market, but it ended the session down 5%. That's it for Bloomberg Brief. This is Bloomberg.
much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
In case you missed it on the opening trade.
One of the words that we use as an organization is global trade is too big to fail. It's like water. It's going to find its lowest point, and there has been a shift in trade. So as an example, China-U.S. was a big trade lane for us, and Asia-Pacific to U.S. was a big trade lane for us. Well, now that's shifted to China and Asia-Pacific to Europe.
Yes.
So we have seen a shift in trade.
Don't miss the opening trade, live every weekday.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is an unfamiliar political situation in just so many respects.
It's very difficult to look at the data without having the data.
The less data that come out, the less of a reason the Fed would have to deviate from the dot plot.
Earnings season is going to take on even more importance if we have a lack of government data.
Companies are going to operate through fog.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend, live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Payrolls Friday without the payrolls. Division in Washington leading to a delay in the monthly jobs report as the government shutdown enters day 3 with little sign of ending. Investors are looking through the noise, sending equities back to record highs. The S&P on a 5-day winning streak.
And the jobs report today is MIA. So basically we need to wait until the government reopens. And Jonathan, right now, what's happening in Washington, D.C., even though they're going to put the clean resolution back on the Senate floor this morning for a 4th time at some point today, it's not going to pass. So lawmakers go home for the weekend, and we do this all again on Monday, which means we are going to get a delayed jobs report. And what is starting to get people a little bit more nervous is not so much this report, but if this goes on for another week or two, what does that mean for the October print we're supposed to get in November?
We've seen this movie before. We just haven't watched this movie for quite a while. You've got to go back to 2013, 16-day delay, ultimately a 2-week delay to the jobs report, 16-day shutdown. This feels different, though. It feels like the Federal Reserve is at some kind of inflection point, trying to decide whether this slowdown in the jobs market is the real deal. And that Federal Reserve decision is only a little more than 3 weeks away.
Yep, the Federal Reserve decision at the end of the month, October 28th and 29th, and then we're supposed to get CPI on October 15th, and obviously we would have had jobs today. So there's potential that the Fed is going into the next meeting blind when it comes to the official government data, and they're going to have to work off things like ADP and what other people would call second-tier data. But we already know at this moment they have a bias, as you've said a lot of times, given what Jay Powell has said and what they did at the last month's meeting, they have a bias to this weakening labor market.
The senator from Massachusetts had things to say to CNN, saying this: let's be clear, the jobs data scheduled to come out this Friday has undoubtedly been collected, and the president must release it. Do we know that for a fact?
That he must release it? We don't know that for a fact because BLS already told us what their plans are, which is they will cease all economic data given the shutdown. The president, though, could essentially deem some people at BLS essential, and they can go in, put the internet on, as Henrietta Trey says, and push the button and release the jobs report. That's not happening right now. I do have an ask into the White House to know whether or not the standard operating procedure of Thursday evening, the NEC director would get the jobs report and brief the president on it. Did that happen or not? That is going to be a question because a lot of people are going to start really paying attention to Trump's truths today if they think that that happened.
There's a different kind of feel to the first Friday of this month. Equity futures on the S&P up by 0.3. Following a 5-day winning streak, it could become day 6. Chris Ferrone of Strategas joins us in just a moment with stocks at all-time highs. Dan Ives of Wedbush on the room to run for the AI rally, and Sarah House of Wells Fargo on gauging the economy without a payrolls print. We begin this hour with stocks on their longest winning streak since July. Chris Ferrone of Strategas, a Baird company, staying bullish, writing the fourth quarter is one of the few examples in our work without any significant autocorrelation. It just tends to be good from about mid-October forward. Chris joins us now for more. Chris, good morning.
Good morning.
Any reason it's different this time?
I don't think so. Of course, kind of we'll evaluate as the facts come in here, but one of the unique things about 4Q is what preceded it almost has no bearing on what happens. Whether the first 9 months of the year were weak or whether they were strong, 4Q just, as we write here, tends to be pretty good. What I think is more important, though, is we enter this period with, trends generally pretty good. About 65% of the S&P is above the 200-day moving average. That's pretty good under the surface. Leadership has generally been pro-cyclical. So, as we've worked our way through summer and through September, I don't see much of a change to the leadership fabric of the market that would get us particularly worried about what's in front of us here into the final few months of the year.
There was a great phrase in your recent research, attitude follows price. Attitude follows price. What did you mean by that?
One of the undefeated rules of Wall Street is what you think is merely a function of what has happened, right? Flows follow performance, not the other way around. And what we were really talking about is how the tone on China has begun to change here. Not because there's been any grand change to the macro, but because the stock prices have gone up. We've been very bullish China for 2 years. We thought ultimately this would happen, where the prices would ultimately force investors to capitulate to the tape, right? The market goes up long enough. I think the Hang Seng's up 90% over the last 2 years. There comes a point where you can no longer use the, quote, uninvestable moniker that became so popular. So we think it's part of this sentiment process where attitudes are ultimately shaped by the price action.
What tone on China are you talking about? How investors feel about it or the policy discussions?
I think how investors for the, how many years now the term was uninvestable. I think anytime you hear that phrase, your antenna should go up and start doing some work. And that was our approach 2 years ago there. We began to see all the momentum signals that we generally see at the start of a big turn. And, here we are today. Chinese financials act pretty well. Chinese discretionary acts very well. I think, interestingly, Chinese materials have started to turn up here. We've seen copper break out. We've seen some of the Euro basic resources turn. And, don't discount the fact that Nike turning up here, LVMH turning up here. I think all those are part of this positive China tone.
So you think China is actually changing within?
I think the market wants to go up, as it has. I'll leave the longer fundamental call up to someone.
Well, if LVMH is doing well, maybe consumers are going out and spending more.
I think the tone on China was so negative for so many years that even incremental improvement is being reflected in European luxury names, in U.S. apparel, in global basic resource stocks. I think we're still relatively early in that shift. And, watch this copper here. London copper through 10,000 is a really big breakout.
This raises questions about where leadership's going to come from.
Yeah.
If you're looking for a cyclical upturn abroad, do you want to play it through various proxies? Or do you just want to stay at home and play the AI theme in America? Lots of questions about leadership this year. The leadership has come from abroad. You've seen the outperformance there, but the bulk of it came in the first quarter. Mike Pyle of BlackRock talked about this recently, and he said that since the middle of April, you've seen US leadership basically get back in a driving seat, led by AI, which is kind of odd that was a few days after April 2nd. How are you thinking about leadership and where it comes from now?
Well, let's make a couple observations here. The main European indices peaked in March. and then they consolidated all spring, all summer, and then this week they broke out again, right? So this 5-6 month pause resolved higher. You saw new highs in Euro stocks. CAC is right there. DAX is doing it as well on the back of Rheinmetall and Siemens Energy and all those big, defense or energy names. When you look globally, Kospi strong, Japan strong, China strong. So I don't really have a lot of sympathy for the idea that this is 10 stocks in the U.S. leading this whole thing. This has been very, very well participated when you look around the world. When you take the domestic picture here, yes, the leadership has come from a select group of AI or AI adjacent type names, but the equal weight S&P is also at new highs here. Russell 2000 made a new high a week ago. So again, I don't have a lot of sympathy for all the breath bears out there. This has been broader than I think people have given it credit for.
When you say Kospi in Korea, I think of international trade. Yeah. When I'm looking at the move in copper, gold as well, I'm not thinking disinflation, quite the opposite. That's where there's some tension at the moment. Got a Federal Reserve very preoccupied with a downturn in the cycle and downside risk to employment. And when you look through the market and what it's telling you right now, it's offering a very different picture about the future. How do we resolve that tension in the months to come?
Well, I think it's funny that we're all alarmed that the Fed is blind without the payroll data. They're not particularly good when they have the data, so I'm not convinced it's that big of a deal. I've been of the view that the Fed is likely cutting into a reacceleration here. I think that's been the message of the market. I think that's been the message of the cyclicals. I do think, John, there's probably some level on yields down where I would have to question that, right? If we're sitting here in 10-year yields are sub 375 or some number. I think they bottomed about 384 on April 4th, 5th, 6th. Anything under that, you begin to wonder, is the market actually sending a different message about the trajectory of growth here? But I generally think we're okay. When I look at the messages globally, it seems more consistent with growth repicking up than deteriorating from here.
So even though we know the bias is to cut, you don't think they actually should?
No, I want to be clear on one thing. It's funny. We always joke in our work, what is the value of the Fed or Fed speakers when you have the 2-year yield? And the 2-year yield at 350 today would say we need 3 cuts to get back to neutral. I don't think bringing Fed funds from 4.25 to 350 is some big overt easing. I think it's a recognition that the policy rate and the market rate are pretty divorced here, and we ought to get those back in line before we do have a problem down the line.
So you're on Governor Myron's team?
I think the 0% neutral rate is a bit aggressive. I think when you look at where the market is set, somewhere between 3 to 3.5, I think is an appropriate, quote, neutral rate.
That sounds like Team Besson. That you believe the inversion of the very front end of the curve does offer a signal. And that should drive the Fed.
Yeah, and our whole approach this year, we've kind of revised Marty's why don't fight the Fed to don't fight the Treasury. And I think the market's been pretty clear in listening to that message as well.
Your point in the jobs market is a point well taken, even when we have the payrolls report.
Yeah.
Look how much it's been revised over the last 12 months. Look how much it's caught this Federal Reserve offside. Just in the last 2-3 months, Chairman Powell has had to flip from one story to another.
It almost feels like the payrolls report was already canceled in the figurative form by the president, and now it's literally being canceled because of the government shutdown, and that is why the market is looking through it. But there will become a problem if this shutdown prolongs, and then you have an issue with data collection going forward, and it's going to put the BLS behind by a number of weeks.
Chris, one final point, please. Let's wrap it all up. Conviction trade right now. What do you really, really like? What are you super comfortable with that you still may be getting a bit of pushback from clients, which maybe makes you more confident about where this is going?
Yeah, I'm really leaning into copper here. I think something has changed in base metals over the last number of weeks. I know you could point to the Freeport mine closure in Indonesia, but a lot of this improvement predates that. So something's happening there. I think it demands our attention.
Chris, it's got our attention. After speaking to you. Thank you, sir. Appreciate it. Thank you. Chris Verone there, Strategas. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Good morning. Well, we're in the 3rd day of a government shutdown. The Senate is expected to hold another vote today on a stopgap spending bill to reopen the government into mid-November. Democrats are holding firm on demands to extend healthcare subsidies. President Trump is threatening to slash jobs at what he calls Democrat agencies that don't align with his agenda. Applied Materials trading lower in the pre-market. The largest U.S. maker of machinery used to manufacture semiconductors says an expansion of rules that restrict the export of its products to China will take another chunk out of its revenue. The company expects it will have $600 million in lost revenue in fiscal 2026, which runs through next October. A large fire has broken out at a Chevron refinery in Los Angeles County. Firefighters responded after multiple reports of an explosion at the El Segundo operation south of the Los Angeles airport. According to the company's website, the refinery, built in 1911, supplies 20% of all motor vehicle fuels and 40% of the jet fuel consumed in Southern California. That is your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie in about 30 minutes' time. An unimpressed AMH. Where's the Yankees round?
Yeah.
Where's the story? Where's the sports update?
Team. I walked in today with all my Yankees gear, and I said, make sure it's in every brief. I think, we have some haters in the control room. That's what this comes down to.
I didn't know that.
We do.
Okay. Who do they support?
Actually, a lot. They know who they support. Okay. Why do you think Lisa's off today?
Oh, right. This is like a day of rest after what happened with the baseball.
Yeah.
Wasn't aware of that. Haters in the control room. Brutal. Up next on the programme, a data delay.
Probably this report is not coming out. The less data that come out, the less of a reason the Fed would have to deviate from the dot plot.
We'll get into that in just a moment. Ed Mills of Raymond James joins us next, live from New York City this morning. Good morning.
Ignore the noise. If you're a long-term investor, ignore the noise. And how we look about global opportunities, we're going to talk about today about identifying opportunities based on mismanagement of risk. And as a long-term investor, you can't be lucky. In order to be successful, you just can't be lucky. Someone can be lucky in the short term, but over the long run, you can't afford to be lucky. And to successfully identify opportunities, you need 4 key things. You need to have a long-term strategy. You need to put a process around it. You need to surround yourself with the talent to pick the right opportunities. And you need to have the guts to make bold decisions when opportunities arise. And as a long-term investor going into portfolio construction, whether you're a sovereign wealth fund or a pension fund, you need to know where you're going, reverse engineer it, and you'll have a return of capital on average that you need to achieve. But that's where the main problem is, because investors sometimes tend to focus on chasing returns, but not looking at risk. So you have to assign a specific risk profile to your investment. And the perception is the more risk you take, the more likelihood of a greater return. But that can be deceiving. You can't avoid risk when investing. You need to understand it and know how to manage it.
It is Payrolls Friday without the payrolls. If you want the estimates anyway, the median in our survey was 53k. The range was pretty wide. This is a guessing game. The low was -20, the high was 109. The 3-month average, huge step down from the start of the year when we were looking at 200k. The 3-month average now around 29,000. The equity market doesn't really care. It's higher by 0.3% on the S&P, following a 5-day winning streak, the longest since late July. Can we make it day 6? On the Nasdaq, higher by 0.3%. The S&P, the Nasdaq, the Russell, all up on the week. 2-year bond yields down on the week. Check out this in the bond market. 2-year at the moment, trading at around 355. Yields higher on the session by around a basis point on 10s, up by not even a basis point, around 4.1%. The data so far this week has not been great Weaker than expected data across the board. The ADP, the worst since 23. ISM manufacturing soft. The quits rate, I think, the lows of the year. Consumer confidence, 5-month low. It's not been a great picture, even without the payrolls report. That picture's not been fantastic.
The picture hasn't been fantastic, which is why the market is basically saying the Fed already knew that the data was coming in weaker than expected, especially off of the numerous labor reports we had over the summer, which is why they're looking through this and saying, does the Fed actually need the jobs data in order to continue on this cutting cycle by the end of the month? And then you brought up a great point, Jonathan. Before the data was literally canceled today because of the government shutdown, it was figuratively canceled by this administration that cast a ton of doubt on it. And then the market has been talking about the fact that they do want crisper, more accurate data, and they want a revised BLS to take this on hand to try to get more up-to-speed data, and then you don't see all these revisions.
It's the main focus for us this morning. Under surveillance this morning, a data delay.
Probably this report is not coming out, and it's certainly why we think the BLS said that all data collection will cease. The less data that come out, the less of a reason the Fed would have to deviate from the dot plot, meaning the more likely it is that they will cut exactly 25 basis points in October. Hard to really say that they won't go ahead and carry out what they had signaled in mid-September under that situation.
So here's the latest this morning. The release of key economic data in jeopardy as the U.S. government shutdown drags into its third day. Bloomberg's Mike McKee tracking the story closely. He joins us now. Good morning, Mike.
Good morning, John. I think the market is telling us that if we could only have Payrolls Friday, if we could only have one of those things, we'd rather have Friday than payrolls. But it looks like we're going to have to wait a while to get payrolls anyway. And the big question as we go forward now is, are we going to get the CPI on October 15th? Because that's going to be key to the Fed. We have seen some evidence of strength in the economy in terms of retail sales and overall spending. And if the inflation rate is not going down, or if it should tick up, then it makes it harder for the Fed to at least do anything in December. They might, as Anne-Marie was saying, go ahead and cut in October because the Fed said they would. But at this point, we don't know where we are, flying blind in a cloud, as was said. So we're relying on alternate data. The alternate data don't look as bad, except for ADP, as people think. The Revilio people who had this new report out say we got 60,000 jobs during the month. The Chicago Fed estimates unemployment at 4.3%. The Atlanta Fed wages at 4.1% year over year. So that would be considered we don't really need to think about cutting rates report if that's what we got. We just have to wait and see if we can get it. And the other big thing that we have to watch for is if this is not settled by 3 weeks into the month, then the unemployment report and the CPI report for October are threatened because they won't be able to collect the data.
There are consequences. Mike McKee, thank you, sir. Stay close. Mike McKee's going to be a key feature of this programme this morning, walking you through where to look and get additional data to get a read on what's happening in this economy. Ed Mills of Raymond James joins us now for more. Ed, we're in day 3, probably going to go into day 4, 5, 6. I just wonder how long do you think this is going to go on for?
Yeah, John, I think most people here in D.C. put the over-under about 2 weeks in, kind of miss a first paycheck and pressure builds. The outer bound, people are willing to say, is once we get towards the end of the month when rent and mortgages and kind of all the bills are due. But the traditional playbook is not kind of assigned to this shutdown. So really the kind of honest answer is no one knows exactly how long this is going to last. There is an off-ramp to kind of reopen this government. It is a CR to open the government, but is negotiations enough, or do Democrats actually need a deal to reopen this government on the ACA subsidies and other health care programs? That's the big question for me.
Ed, this might be a bit granular, but do you think the BLS gave the NEC the jobs report last night as they normally do, standard operating procedure, and that the president actually knows what the report is?
Yeah, Anne-Marie, I got a lot of questions about that at Raymond James, because one of the conspiracy theories out there was if this jobs data was not very good, why release it? And if it was actually good, would President Trump say, hey, you know, maybe we should kind of get this out? You do have to remember that there are a lot of federal employees that were set to lose their jobs on October 1st, regardless of the government shutdown, those who took out the early out, the Musk out. And so so to the extent that this might be a weaker jobs report than what they'd like to show, certainly convenient not to have this released this Jobs Friday.
Well, we'll be paying close attention to any truths he has today regarding the non-report we're not expecting anymore. The White House yesterday...
We've gotten that in the past.
Yeah, the White House yesterday, the president was talking about how he had this meeting with Russ Vought. What's come of it? Are they going to make these layoffs permanent?
I think they're going to attempt to do that, Anne-Marie. I think that this is, kind of the playbook that I've seen from President Trump time and time again. President Trump doesn't spend a lot of time on the defensive. He always wants to go on the offensive. He wants to kind of increase the heat, increase the pressure, increase the cost on congressional Democrats for them not providing the votes to pass that clean CR. I do think that actually might extend out the overall government shutdown, because I think once you start permanently attempting to fire people, Democrats put that on their kind of number one list in terms of what it takes to turn this government back on. This is certainly something that the administration has wanted to do. So far, the unions are standing with Democrats and saying this is just kind of an inevitable step. And so if we can pull this forward and maybe get a protection in a restarting of this government, they're open to that. But yeah, they're absolutely moving forward with these firings, and they're going to see how far the courts allow them to go.
Where are the firings going to come from?
Well, at first, it seems like from independent agencies, but I think it is going to be the agencies that Project 2025 identified. They are saying that if you do not have a explicit appropriation, then that is going to be the reason why the president has discretion not to keep that. So looking at kind of Department of Energy, looking at Department of Education, disfavored agencies out there are probably going to see the disproportionate number. And then this fight about independent agencies. What is their constitutional role, because they're in this kind of quasi-executive branch, non-executive branch role? They certainly sought to exert more power over there by firing a number of heads of executive agencies that were appointed by President Biden, approved by the Senate, but were not the preferred pick anymore of President Trump. So that push of executive power is going to be once again tested.
Just 3 days in, who at the moment do you see the public blaming for the shutdown?
Yeah, so Anne-Marie, all of the polls show so far Republicans getting a disproportionate amount of the blame. One thing that we're looking at is a lot of the polling says, do you blame Democrats or President Trump and congressional Republicans? Is it the kind of fact that they add President Trump to this that is skewing this? But it is really important. I'm glad you asked about polling, because it is probably polling that will determine who kind of blinks first. Back in 2018, there were polls out that showed 90% of the American people were blaming Republicans. That turned the government back on. If Democrats continue to get an advantage in polling, they are going to continue to push. If that switches around, that's where the pressure builds. That's where they think that they might have to capitulate. And they will also be looking at these November elections, gubernatorial statewide elections in New Jersey, Virginia, elsewhere, as a kind of warning sign. If they are getting blamed, those are kind of gubernatorial seats they absolutely want to keep and pick up. If they feel as if that's at risk, I think that also potentially changes the calculus.
Ed, as you know well, we all know, unlike us, people have lives. I wonder how many people are actually even aware the government's shut down. When do they start to realise that? When does it get real for the country?
Yeah, so we have seen it get real for the country when TSA agents who are kind of government employees stop showing up to work or kind of call in sick because they're not getting paid. If airport lines kind of get longer, people get frustrated, but that's still just a segment of the population. I think that they will see stories about military personnel not getting their paycheck. They put their lives on the line for the country. If they're not able to pay their rent, if they're not able to pay their mortgage, if they're not able to kind of put food on the table, those type of stories kind of break through. But the reality is in a partial government shutdown, essential employees still go to work. And so the essential services of the U.S. government continue to work. So for the vast majority of Americans, a government shutdown is just a headline coming out of D.C.
Ed, thank you, sir. Appreciate the perspective. Ed Mills there of Raymond James. You talked about the significance of the airports. Also, just the idea of standing behind something that means that military personnel aren't being paid. That should make everyone uncomfortable in Washington.
Yeah, and the next pay date for them is October 15th. And certainly they're going to hear from their constituents and military personnel, people that say, no, wrap this up. These people need to get paid.
If you are just joining us, welcome to the program. Equity futures this morning positive by 0.3. Coming up, we'll catch up with Dan Ives of Wedbush as Tesla posts record quarterly sales.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I don't think there's a bubble in private credit. I do think that there is the potential of some dislocation in that market, and I think that there could be some accidents because we've put so much money out so quickly.
It can't be a one-way street, and it won't be. And I am building relationships with nonprofit leaders, with labor leaders, with business leaders. I'm building relationships, fortunately or unfortunately, with people on the street. And it is a two-way street. There's no more that we're just going to hand things out and just let people do whatever they want. I want to have people coming in. I want to welcome them with open arms. And then, like I said, I want them part of San Francisco, part of the fabric of this city. If you're a CEO, you want your employees liking where they work. I just had one of the executives, the CEOs that I talked about earlier, tell me that they did a survey of their employees about where they wanted to be in the Bay Area. San Francisco was where they wanted to be because of our arts and culture, because of the restaurants, because of nightlife, because of these entertainment zones. And so what we learned is you can't just do a handout without any obligation and responsibility.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Five-day winning run on the S&P 500, up every single day this week and some. The longest winning run going back to late July. We had some weight to the rally this morning, up by 0.25% on the S&P. On the Nasdaq 100, higher by 0.3. On the week so far, we're positive on the S&P, the Nasdaq, and the Russell too. In the bond market, two-year bond yields lower on the week by around 10 basis points, up this morning by a single basis point. We're back up to, let's call it 355. The data we have seen so far this week has been weaker than expected, particularly from ADP, and ISM manufacturing wasn't tremendous. Later on this morning, we will get some data. Won't be payrolls in 2 hours' time. We're not expecting that, but we are expecting ISM services. That's a key data point going into the weekend. Going into the weekend, let's sit on this. Switch up the board. Gold. Gold is up for the 7th consecutive week, the longest run since February. It's higher again this morning by 0.2%. All these estimates, 4K sounded mental 12 months ago. We're very close to 4K already.
Yeah, and the next estimate, of course, is going to be 5K. I think giving gold a little bit of extra oomph this week is, of course, the government shutdown. But what we've seen from gold consistently more than 40% this year is the fact that risk on, buy gold. Risk off, buy gold. It is this perfect hedge in this environment. And there's a lot of geopolitical factors as well that is shaping into why gold is perfect right now for this environment, because central banks are buying it.
This morning, we're buying gold 38.63, very close to 38.64. 3 hours away from the opening bell. Some single names for you, some morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. This morning, we are not buying Applied Materials. Shares are down this morning after a filing from the company yesterday. It makes equipment that makes chips and says that the U.S. Commerce Department has expanded their restrictions of what can be sold to China. They said the hit for them for fiscal 2026, which runs through next October, would be $600 million. So shares down 2.5%. Elsewhere, Rumble, this is an online video sharing platform, signed a deal with the AI company Perplexity. They say that this is going to help basically serve better videos to its users and at the same time help content creators reach exactly the audience that they wanted. So you sign an AI pact or you just talk about AI in this environment, and there you go. Shares are up 14%. Also looking at a rebound in Tesla shares this morning. They fell 5% yesterday. We haven't quite made that up, but they fell 5% after record orders, record new vehicle sales for them. But it was a sugar rush. At least that was the consensus, that there had been that expiring $7,500 tax credit for EVs, so consumers rushed in to buy before that. So shares fell, but they're up about 1.33% this morning, John.
Danny, thank you. More from Danny in the next hour. We'll catch up with Dan out of Wedbush as well in a few minutes' time. Let's get you up to speed on some of our top stories. On our radar this morning, the crucial September payrolls report expected to be delayed by the ongoing government shutdown. Gridlock on Capitol Hill threatening collection of data for future reports, including CPI and PPI, due later this month. Elsewhere, the President, Donald Trump, weighing on aid package for U.S. farmers of up to $14 billion. The Wall Street Journal reporting the money is expected to come from tariff revenue, as Trump plans to urge Chinese leader Xi Jinping to increase purchases of U.S. soybeans. And finally, research firm Tech Insights finding Huawei's advanced ascent AI chips are still relying on foreign tech. Despite China's push for domestic production, components from giants like TSMC and Samsung were found in multiple samples of Huawei's chips.
I think there's 2 points to take from this. One is that China is still reliant on U.S. technology, foreign firms' technology. They are not doing this all homegrown as they want to do. Second point, Huawei has been on the entity list since Trump's first administration. So some of this tech that should it be getting to Huawei is potentially getting to Huawei. And I think this is going to be a big concern for Washington, especially as they're in the middle of these trade negotiations with China, and maybe it's another chip they can play.
So positions, leveraging. This is how we're positioning going into these talks. You've got the Chinese ultimately dependent on foreign tech. Got that. You've got US farmers dependent on Chinese purchases. They're not getting that right now. Is that going to be the deal in a month's time? What kind of deal is that? Chips for soybeans?
Yeah, that's going to potentially unnerve some of the Chinese hawks in the administration. But right now, this is going to be politically uncomfortable for this administration. And by the way, the Wall Street Journal is talking about $14 billion for a bailout. It was $23 billion that was spent for the farmers in Trump 1.0. And they've been talking about this for months because they knew this was going to bite. They're going to have to do something for the farmers because these are red states. These are supporters. And right now, China is not buying cargoes. Potentially, we will get some purchasing at the end of the month when the president sits down with Xi Jinping. But the key question, as you're asking, is what for? What is the bar? Where is the bar going to be? Is it going to be for high advanced technology chips?
Yeah, there's a lot of crossover in all these stories at the moment. Tracking Argentina as well. I believe there's a meeting today taking place. Argentina's filling in the gaps. China needs soybeans. It's getting it from Brazil, been leaning heavily on Brazil, filling in the gaps coming from Argentina, and Argentina wants the help of the U.S. government.
Exactly, and this is why you're seeing these two heads butt in terms of Secretary Brooke Rollins and Secretary Scott Bessent. Treasury Secretary Scott Bessent, I was with him when he met with Milei in April. They are talking about trying to give Argentina this swap line to make sure that they can help Argentina when you have a run on their currency and a run on their stocks. Meanwhile, Argentina just basically opened up the floodgates and sending their soybeans to China. They're filling some of the gap that China has right now because China's not buying from the United States. So this is going to be another politically uncomfortable moment for this administration. Do you want to make America great again, or do you want to make Argentina great again?
Look out for those talks taking place a little bit later between Argentina and the Treasury. Let's get to Tesla. I promised you an update. Shares recovering this morning, higher by a little more than 1% following yesterday's slide, which followed the company reporting record third-quarter deliveries. Dan Ives of Wedbush maintaining his outperform rating and writing the following: with Musk now driving Tesla into its next stage of growth as wartime CEO, we estimate the AI and autonomous opportunity is worth at least $1 trillion alone. Dan joins us now for more. Dan, welcome. Let's just start with yesterday's move, then we'll get to the future and all that great stuff. How much of that story with the deliveries was just a massive pull forward in demand?
Oh, I think probably about 30% of it was maybe a pull forward, relative to the incremental beat. But look, the demand story is stabilizing. And now I think you're starting to see that turnaround happen. But as we've talked about, that's just the appetizer. The main event is the AI revolution coming to Tesla with the autonomous and then the robotics piece. I mean, I think this is going to be a $3 trillion market cap. That's why I think $600 is almost a base case for where we see it.
So, Dan, you understand the tension well. I feel like we've covered this together a million times. But it's the tension between the near-term fundamentals and the long-term hope and dreams. The fundamentals at the moment, when you say the demand story stabilizing demand is not the kind of story we'd associate with a multiple like the one on Tesla right now. Now, Dan, how are we going to resolve those issues? Do we just keep the faith in the multiple and the stock on the hopes and dreams, or at some point do we have to reconcile these issues?
Yeah, it's a great point. Look, you're going to have 10 million Teslas, on the road, when you think about it since the beginning. The autonomous value, as you start to see robo-taxis deployed 30, 35 cities, you see full self-driving get to 40, 50% of the actual Teslas out there. That's the game changer. Because ultimately, I think they're going to own 80, 90% of the autonomous world over the coming years as we get to true, what I view as level 4. Look, I think that's the reality. I think investors are looking. Autonomous is truly what I view as really, the Goldilocks scenario for Tesla. Because AI, physical AI, there's two great physical, phenomenal AI plays out there. It's NVIDIA and it's Tesla when it comes to physical AI.
When it comes to EVs for Tesla, one of the biggest competitors is BYD, which is absolutely crushing them in Europe. When it comes to autonomous, who is going to be their biggest competitor? Is it coming from China?
Look, I think it comes from China, ultimately, when you think about all the technology, innovations that we've seen there. But globally, no one has the scale and scope of Tesla.
Not BYD?
That's why, look, I think BYD is obviously going to be the main competition. But when I think about scale and scope globally, especially not just in the U.S., but what we see around the world, I think Tesla continues to win that battle. But we don't view this as one where there's just one winner. And I think when you think about autonomous and you think about this next wave of AI, from the chips to the software to the ripple effect, it speaks to our view. Like this AI revolution, we're still in the second inning of a 9-inning game, and ultimately the Yankees end up winning that game.
Don't encourage it, Dan. We'll get to that later. Dan, let's say you're right. Let's find some common ground. The autonomous opportunity is massive. Driverless vehicles, all of that stuff. I think a lot of people can get on board with that. But I want to understand why you think the Tesla path, that road, is the road to success. So they're using cameras. Waymo's using LiDAR. What kind of technology do you ultimately think wins out?
Look, I think it's ultimately Tesla. From a data perspective, when you look at the AI engineers and you look at all the improvements that they're going to make on these next,
So Dan, let's just give me a second. What data are you looking at? Because I can go off the weekly trips that Waymo's doing at the moment, and that kind of data looks pretty decent. What are you stacking that up against?
I look at is Waymo, they're $200,000 cars in essentially 5 cities. The scale and scope that Tesla has, given the millions and millions of miles driven and the 10 million vehicles on the road and everything that they're doing in Musk as being wartime CEO. That's where I think we sit here 6 months from now, the breakthroughs will happen, and ultimately when it comes to scale, especially when you look at robotaxi and cybercabs, no one's going to be able to match Tesla. I view that as just basically almost fact as it plays out.
So, Dan, when it comes to deliveries, they don't even matter anymore because everyone's so focused on what's going to happen in the future?
Look, they matter in terms of just, we'll call it, I guess, a signal from a stabilization perspective, especially after what we've seen over the last 6-9 months. But I think from an investor perspective, it's all about, to what Farrell's talking about, just like, give me marks on autonomous. Show me the technology innovations on the AI story. Show me that we're going to get to full scale on Optimus. Show me in November at the shareholder meeting that they're going to have a big piece of XAI. I mean, that's why you see Musk, it's a different mode now. It's that wartime CEO that we're seeing. Those are the marks. And that's how we're going to be looking at a 600, 700, and ultimately, a stock, I think, $3 trillion.
That's a lot to play for the road ahead. Dan, before we leave you, the baseball, you want to finish there? Yankees win, getting it done. Who do you think gets this all done? World Series later this year?
Look, I mean, I think Yankees obviously have a great shot to go. I think they're going to surprise many out there. I think this could be their year. And look, Emery there obviously is a good luck charm, so we got to see how it all plays out.
Have we given up on Penn State, Dan? Are we done with that now?
Oh, no. Look, I'm here in Pasadena, UCLA, the bounce back starts. That's another one. Penn State Yankees at the end. They'll be holding that trophy.
We'll see. Dan, it's good to see you. Thank you, sir. Dan Ives of Wedbush.
We're set to advance. We have the game coming up this Saturday with the Blue Jays. It's going to be challenging, but I agree with Dan. I mean, this pitcher yesterday, this 24-year-old, who I just found out is actually from Boston, this kid Cam, was unbelievable. And it's like he came out of nowhere at the perfect time.
Taking down the Red Sox. That's your latest sports segment, with a bit of Tesla sprinkled in between. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. A British citizen of Syrian descent was named by police as the attacker on a Manchester synagogue during Yom Kippur services. 2 people were killed, one by an accidental police bullet. 3 others were injured. UK Prime Minister Keir Starmer warned against rising hatred and anti-Semitism, calling the killings a terrorist attack that attacked Jews because they are Jews. Suspensions of flights at Germany's Munich airport are now easing. Several drone sightings prompted diversions of more than 30 flights from the country's second-largest hub. This comes as several drone incidents across Europe temporarily forced closures and large-scale diversions at major hubs. And you've been saying it, the MLB wildcard round finished up last night with the New York Yankees shutting out their rival Boston Red Sox 4-0. Yankees rookie starter Cam Schlittler struck out 12 batters and got some key help from his defense to send New York to the division series. Elsewhere, the Chicago Cubs and Detroit Tigers both won their Game 3 matchups to advance to the next round, which starts Saturday. And that is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate the update. Another update on the Yankees. We're done now.
There's another play that everyone needs to watch. And the third baseman ran to catch a foul ball and tumbled, literally somersaulted into the Red Sox bullpen. You have to watch it. It's incredible.
I apologize to our friends in Boston this morning. Good morning to you. Up next on the program, payrolls on pause.
We have this shutdown dynamics right now, and it's very difficult to look at the data without having the data.
So the other private sources of data will be more important. With some of the government data delay, I don't think that the Fed is going to just, totally go on pause.
Up next, we'll catch up with Sarah House of Wells Fargo, live from New York City. You're watching Bloomberg TV.
Governments make the commitment for net zero. Companies have
begun to do the work of looking down their supply chain? I'm not sure. I think that while there isn't the intense activity around accelerating ESG, it is not a stop. In fact, I wouldn't even say that it's a pause. I think it is a, how do we do it in this current environment? I mean, it's only 3 short years that Thailand hosted APEC, and the thematic from that APEC to subsequent ASEANs to, to so many of the bilateral engagements that we've had is really, how are we going to do this just transition? How are we going to transition our economies from energy systems to data systems in a way that's going to get us to a net neutral world, right? I mean, a net zero world. I don't think that that's going to change. I think that there are adjustments to this. All the companies that I have been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going. And if you look at policies, like in Europe, they've got CBAM, right? I mean, the carbon border adjustment. Different governments have put forward commitments to getting to net zero. And I'm not seeing any giant signal around the world that is saying, let's stop doing this, right? I mean, so if that signal is still there, that is actually, I think, one area of predictability for businesses and investors, that is still directionally where we're going.
Just like in other fields, I think, biotech goes through cycles, and right now we're in a downturn. We have been there for a bit. And why is that? Well, I think, investors get excited about breakthroughs like CRISPR and other things, and then they realize that, science is hard. It's hard. It's hard to make drugs. It's hard to make drugs that are good and effective and safe. It's a challenging business, and it takes time. You have to be patient. It was 11 years from the date of the first academic publication showing how CRISPR could be used for gene editing to an approved therapeutic. 11 years, and that was lightning fast, right? In our field, lightning fast. So, it just it's just always going to be a process that takes time. Now, maybe AI will help to accelerate that. I hope it does. But we all have to just grapple with the fact that, bodies are complicated.
The Federal Reserve's worried about growth. Markets focused on something else. This came from Torsten Slock earlier this week from Apollo. The US economy remains remarkably resilient. Upside risk to inflation are growing, particularly if the Fed continues to cut interest rates. And based on recent commentary, they will. And there seems to be a difference between what the Federal Reserve is concerned about, downside risk to employment, and what this market is focused on. This came from Ian Linger of BMO. Thanks, Mike McKee, for sending this over. He basically asked his readers, are you more concerned about the Fed missing on the inflation or employment side of its dual mandate in the near term? A, inflation, 63% of respondents. B, employment, 37% of respondents. That's the divide, and it's obvious what the Fed's bias is right now, and the market gets it.
Right. The Fed's bias right now is to the jobs report, not what these individuals are concerned about in this survey, which is inflation, which, by the way, how many years has it been now? They've been continuously missing on their inflation target.
Losing count.
Yes. And at the same time, we could have inflation at 3%, and this Fed potentially could still want to have this bias to cutting because they're concerned what's going on in the labor market. At some point, you have to think about what Governor Myron's been talking about and what Mohamed El-Erian's been talking about for years. Maybe you just need to capitulate and accept you're not getting back to 2%, and you have to target a range between 2 to 3%.
Will they deviate from the dot plot? Nomura thinks they ultimately won't. We'll get into that story in just a moment. If you're just joining us and want some price action, it's still positive, up by 0.2% on the S&P, following 5 days of gains on the Nasdaq, up by 0.24 on the small caps. The Russell this morning higher by 0.37. And the surveillance this morning, it's payrolls on pause.
We have this shutdown dynamics right now, and it's very difficult to look at the data without having the data.
I think it's going to be weeks, not days. This means we're flying blind in a highly foggy environment.
Some of the other private sources of data will be more important with some of the government data delay. I don't think that the Fed is going to just, totally go on pause.
So here's the latest this morning. Investors digesting alternative economic data suggesting the labour market stalled in September, with the payrolls report delayed by the government shutdown. Joining us now to discuss is Sarah House of Wells Fargo. Sarah, welcome to the programme. Nomura thinks that given the data delay, this Fed ultimately won't deviate from the dot plot. Would you agree with that?
I think
that's generally right, but we still could get this payroll report before their next meeting on October 29th. But I think absent this most familiar and persuasive piece of labor market data and potentially inflation data as well, it's hard to really see Fed officials adjusting their prior view. So I do think that keeps them on track for another cut here in October.
Sarah, I'd rather have the jobs report than not have one. You, I imagine, would agree. But ultimately, over the last few months, the last few years, it hasn't exactly been reliable, has it? How useful is that jobs report to this Federal Reserve?
Yeah, I think overall it's still a very informative picture of the jobs market. So we've obviously had some issue with payrolls being pretty consistently overstated, but you still have a lot of information coming from the household survey, some of the ratios there that are particularly helpful. But at least when it comes to the labor market, we still have a lot of alternative data, some of which has been around for a year. So we're still able to fill in some of the picture. I think the issue right now is that some of those secondary reports, they're not all painting a consistent picture. So we're not getting necessarily a clear signal from them. So it's of limited help right now, I think, to the Federal Reserve.
What are you relying on mostly when it comes to the second tier reports?
Yeah, so I think there's a number of indicators that we've been using for years. We understand how this works with the overall jobs market. So one is what we're seeing in terms of the NFIB hiring plan. So that's one of the bright spots we're seeing in the jobs market right now. So we saw that come out for September yesterday. That's been up for 4 straight months, highest since January. And then the other part that we use a lot are what's happening with the PMIs. So both the ISM employment components, but also the regional Fed ones. And there the story isn't as sanguine. So if you look at the regional Fed services PMIs on average, those hit their second lowest reading of the year in September. So pointing to that mixed messages where we're not seeing an obvious firming, but also not necessarily clear downtrend when we look across the major data points right now.
When does this start to become very uncomfortable for you? If we have a prolonged shutdown, and what if we don't get the October print as well?
Yeah, so I think where probably it gets a little hairier is if you see that shutdown last probably about 2, maybe even 3 weeks, because then again, you're probably not going to see that before the next Fed meeting. I think also that starts to potentially influence the October data. So we saw in the 2013 shutdown that from the employment perspective, response rates were in their normal ranges. So the BLS was able to kind of make up that period. But where it was a bigger problem was in the inflation picture. So back in October 2013, the BLS only had about 75% of the observations. This is, of course, coming at a time when they're already having to impute more data, cut coverage in some cities. And so I think the bigger concern in a prolonged shutdown is the quality of that inflation data that we get in October at what still is, of course, a very tricky time for the Fed in its inflation fight.
Could a very prolonged shutdown put the Fed on hold at any point?
It would have to, I think, be pretty prolonged. So again, I think for now it keeps Fed officials in really what they're in their prior expectations path. And we saw that the majority of officials were still looking for 2 more cuts before the end of the year. If you think about who's voting this year, I think that the bias is even more so towards those 2 cuts. So I think it's really hard to see them altering that path in terms of forcing them to actually be on hold at this point. But this has been a pretty strange year in terms of what's happening in the policy sphere. So we'll see what happens.
Sarah, we will get some data. We'll get ISM services. Earlier this week, we had ISM manufacturing. How instructive have those indicators been, particularly at a time when this market is positioning for a pickup in economic activity?
Yeah, so less so in the past few years than I think they were prior to the pandemic, but still a decent barometer on overall activity. I think we have to be a little bit careful with what's happening with some of the supplier delivery components of that, where once again, with some of the tariffs, you're still getting some gummed up supply chain issues. So longer delivery times, not necessarily a positive sign for activity there. But with the services number today, I think we'll be looking closely at, does the pop that we saw in new orders hold, or do we get some give back the way that some of the regional Fed PMIs are indicating that maybe that momentum isn't turning around quite as much as what was previously indicated.
Sarah, just before you go, in a commercial break, I was reading a note from Jordan Rochester of Mizuho, and in it he was reflecting on the pandemic. And as you mentioned the pandemic, I think it's worthy of conversation. In that time, we got really used to looking at alternative data. I remember people coming on and talking about open table data, looking for that high-frequency pulse of what was happening in real time. How useful was it then, and do we return to that now?
So I think it was pretty useful then just to help us gauge the magnitude of changes in some of the more traditional data. Right now where we've seen activity kind of get to at least a more normal pace, I think it's a little bit less informative. And then the issue there is a lot of that alternative data, it doesn't have a long time series, and so it doesn't necessarily help as much in terms of turning points in the economy, or at least potential turning points, which we could be at now. So it's helpful, but I don't necessarily think it's a panacea for missing this long-standing government data.
Hey, Sarah, appreciate it. Sarah House of Wells Fargo. We'll do our best to fill in the gaps as we wait for a payrolls report, and we don't have a clue when that payrolls report is coming out.
We don't know because the government is still shut down until they open it up. Then we'll know whether or not they're going to release it in 2 or 3 days. Because remember, this payrolls report is pretty much ready to go. They need to get the press release together, and then they go and ship it out. I believe in 2013, when they reopened, the payrolls report came out 3 days later. After the shutdown. So we will get it soon, but they have to reopen. And this is the question. If this is prolonged, okay, we're not going to get September, and then October's data is going to be a lot rougher to collect, and that's going to be delayed.
We are in day 3, and the jobs report is most likely delayed. Equity futures positive by 0.2%. Looking through the noise down in Washington, D.C. Up next, we'll catch up with Priya Misra of JP Morgan, Jeanette Lowe of Strategas, Francis Donald of RBC, Mike Collins of Pigeon Fixed Income. From New York City, the second hour of Bloomberg Surveillance is just around the corner.
Asia's not sitting around waiting for politics to dictate what's important here. It has already been a leader and is continuing to be so.
People come to me and say, well, you know, Trump's been, sort of saying, well, we shouldn't be focused on this. But yet the corporate world knows that it needs to support this.
Asia's role in global supply chain allows it to influence the transition in ways that many other regions cannot.
All the companies that I have been talking to, they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going.
Our focus is really to understand what are the technologies that are part of our portfolio for the future, and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
Up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
In case you missed it on Bloomberg Tech.
Why is it so crucial to the board's mind that it is Elon Musk that is able to get Tesla to this future?
The board's responsibility is to look at who the CEO is for the next period of time, and we believe that Elon is the right CEO, and our view is he's a generational leader. There aren't any other people out there like Elon who can actually lead the company over this next decade or so. Once you decide who the leader should be, you need to put in place a compensation package to incent and motivate him.
There were sticking points threats on both sides, what were they?
It's things that other people can't do. It's what the company could do that no other company could do. So those types of things are what are in this plan. It is a zero compensation package unless he delivers against pretty ambitious goals.
Don't miss Bloomberg Tech, live every weekday.
Positioning today, despite the run-up in the market, is a source of upside.
Nothing really phases these markets.
AI has been fueling this rally.
We've seen a considerable broadening of the rally.
The remainder of this year and into the first half of next year, we feel pretty good about the market conditions.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores are shaping up as follows. Equity futures on the S&P 500 firmer by 0.2%, following and building on a 5-day winning streak on the S&P 500. It looks like day 6, and today it won't be dependent on what happens at 8:30 Eastern time, because we are not getting payrolls. In the bond market, 2-year, 10-year, 30-year bond yields shaping up as follows. Your 2-year just about unchanged at 354.50, with yields down on the week. The data we have had so far this week has not been great. The data we will get looks like this. ISM services coming later on this morning is really the main event. Without payrolls, we'll all be looking to ISM.
Absolutely. And you mentioned Jordan Rochester, and he was talking about how we're basically entering a data desert, and how long that lasts is going to be how long the government shutdown lasts. And today we might get some clues. We're going to hear from Speaker Johnson. We're going to hear from Majority Leader Thune. They're going to have another vote on the clean CR. It's not passing, but potentially does a pressure start to build. Remember, people are going to be furloughed. They're not going to get paid. You have 4 Democratic senators sitting in Maryland and Virginia, where a lot of these people live and work, and that work for the U.S. government. And potentially those are going to be the individuals who start to put pressure on Chuck Schumer to start negotiating and wrap it up.
So Ed Mills of Raymond James was great a little bit earlier on this morning. We talked about when America starts to feel this. At the moment, it's just a headline. And for a lot of people, it's a headline they're not paying any attention to. He said it gets real when we reach 2 points. 1, when the military aren't being paid, because that is a very uncomfortable thing to stand behind. And 2, when the airports start getting messy and busy and your everyday traveler starts to see it for real.
So middle of October, the military is supposed to get paid. Everyone in America is going to want to see men and women of service getting their paychecks. That's one, he's absolutely right. And that's why people think this can only last 2 weeks, right? Because then that would be crazy. Second, there is historical evidence that when people start to get annoyed at the airport, when you have the FAA coming out and saying we're going to basically limit air traffic into things like LaGuardia and Orlando, then we need to wrap it up. On January 25th, 2019, this is what happened. And guess what happened that same exact day? Trump agreed to a temporary government funding measure. Curmudgeon travelers, people take to Twitter. They are angry. Open the government. Why are you doing this to us? That's when it starts to hit.
Are we going to see a repeat of that? At the moment, the market's looking right through the noise. Equity futures on the S&P positive by 0.2%. Coming up this hour, we'll catch up with Priya Misra of JP Morgan, with investors extending a record rally. Jeanette Lowe of Strategas as the Senate holds another shutdown vote, and Francis Donald of RBC seeing data delays leading to a Fed pause. We begin this hour with stocks hitting fresh highs, unfazed by Washington's funding impasse. Priya Misra of JP Morgan writing, the markets seem to be ignoring the shutdown for now, but if we get permanent government layoffs, that can have a bigger impact. Priya joins us now for more. Priya, good morning.
Morning.
I've asked this question about 10 different ways this week. Is it different this time? Do you think it might be?
It might be. There are some differences. Now, we know historically shutdowns have not mattered. What's different this time? The Congress has passed not a single appropriation bill, so this is a full shutdown. And we have the president talking about permanent layoffs, which is, I mean, remember, this was the Doge year. So, the administration did come in saying there's a lot of, excess spending by the government. Do they use this opportunity to start to cut Democrat programs? And does that result in the pickup in layoffs? I mean, we've been in this low hire, low fire labor market. We were actually looking more at the private sector. Do layoffs start as companies try and protect margins? unions. What if it starts from the government side? Now, I don't know, maybe it's just a negotiating ploy. That's, I think, where the market is. That's our base case. But if it starts to actually, there are layoffs here, I think we have to start thinking that the labor market's much weaker. We're already a little fragile. So I'm not saying it's our base case, but I wouldn't just say because historically it hasn't mattered, this shutdown may not matter.
Is there the demand in the private sector to basically take those layoffs if they become permanent?
No, great point, because the labor market is stagnant. I mean, if you have a job, you're not getting laid off, you're not getting paid a lot more. So that's my signal of slack is building up. So wages are not picking up. Trying to find a job right now in the private sector, even without the government potential workers, is difficult. You add more labor supply, I think it's going to be hard, and that's what's going to make the unemployment rate start to pick up. Now, we may be in a shutdown, so we may not know it, but we're going to look at other ways to see, is that slack starting to...
Do you have any thinking behind what kind of numbers we could see in these type of federal layoffs that maybe become permanent?
That's the tricky part. I mean, Doge came in much lower than what they had come in with. Do they try and get back to like million? I mean, we're estimating about 300,000 voluntary retirements have already happened. And you're going to see that in the data when we get the data in the next few months. You know, that's a hard one. I think we just have to watch the president. I'm still hoping it's a negotiating tactic. It's to put pressure on the Democrats. But if not, yeah, we'll just have to react to what those numbers are. But I look at valuation. Nobody's really expecting a pickup in layoffs. Look at the stock market at highs. Yeah. Bonds are not pricing in a big slowdown. They're just pricing in moving to neutral. So I think the market will react to this.
So, Priya, that's the tough one for you, really, for market participants. Economists just have to go through one stage. You have to go through two. Guess the data, then guess how the market responds to it. So at the moment and over the past few months, ever since we got that July payrolls report in August, things started to look weak, fragile. Then we had all these revisions, massive step down in payrolls growth, but the market kept on climbing. Both equities and credit pricing in a re-acceleration, an expansion. Do you think maybe that weak data starts to become bad news for this market?
I think weak data is always bad news, unless the Fed is super aggressive, taking rates to zero or below neutral, and we're not pricing that in. So if you get really weak data, I think, you know, to some extent, the re-acceleration is a narrative that's trying to fit price action. So I look below the hood, and I'm not saying you're doing that.
Not at all. I can take it, Priya. Carry on, please.
There is a view that we're re-accelerating. Where in the data do you see the re-acceleration? So the stock market, credit spreads, I get that. The stock market, let's look under the hood. It's really an AI story. GDP, you strip out AI from investment, GDP is about 0 to 1%, depending on how much you want to strip out AI or how you calculate that. We're not re-accelerating. Now, you go out 6 months, and the one big beautiful bill provides some fiscal stimulus. And if we get certainty, remember, I know we don't want to talk about tariffs, but we're still seeing tariff announcements every week. And so if you get certainty on tariffs, this is the trade deal. Now, as a company, I can figure out what supply chains are. Maybe you get that re-acceleration. So I'm not negative long term, but right now we don't see signs of re-acceleration. We see signs of, you know, soft landing, sub-trend growth is what bond people call it, where you're growing between 1% and 2%. Inflation, a big fear after Liberation Day, has not really materialized. So the Fed is saying, okay, we were worried about those risks. Now we're looking at the labor market. Maybe we start to take rates down to neutral. And that's why I don't think there's a very big disconnect. I think every market is pricing in this AI structural theme. And then some cyclical slowdown, which is allowing the Fed to take rates down. But if you start to see the cyclical side accelerate, to your question on if you start to see bad news on, you know, we don't have payrolls, but something, or claims, or something else, then I think the market's going to say, okay, maybe this is slowing down, and what will a couple of rate cuts do? I think that question then starts to unwind some of the spread.
Allow me to put it another way. Some tension between corporate earnings and the labour market. That's real. That really is real. Do you think that tension can persist?
I think that is the trillion-dollar question. So how did corporates deal with tariffs? They stopped hiring. I think we were looking at, do they pass on the cost or do they absorb it in margins? Margins have stayed strong. One of the reasons why corporate spreads are tight is fundamentals of company balance sheets are strong. Do they continue? I do think the tariff rate today is higher than it was a few months ago. So will companies take the margin hit? Some might, but overall, I think companies might continue to keep hiring low. That's why the labor market is weak, because hiring is low. Now, if they're able to pass on costs, I don't think the consumer can take it. I mean, at the margin, certain areas they can pass on prices. So I guess a long-winded way of saying that tension may not be able to last for too long. I don't know about second quarter, third quarter earnings. Maybe it's an early next year phenomena. But at what point do companies say, I'm facing higher tariffs, I'm going to actually have to lay off people? I think that's the tail risk scenario. And if the layoffs start, I think then we're talking about the Fed needs to cut well through neutral. We can debate what neutral is, but at least below 3%. And then I think you get a bigger move in rates. And then the equity market has to figure out, you know, how much of it is AI versus everything else. But that tension, I think companies have tried to do more with less and tried to pay for tariffs through lower hiring.
What would be the catalyst for the firings? Just they can't absorb the higher costs anymore?
And they can't pass it on. If they have a view that the consumer is not willing to pay, I'm sure they'll try and take some in margins. They'll try productivity, other productivity increases. But the other way would be, well, maybe I just, you know, so far I've not hired. Maybe I now start to cut costs by laying off. That's what American companies do. We have a dynamic labor market. Historically, slowdowns have happened when companies say, I'm going to have to cut costs here. And this is the fastest way to cut costs, is actually lay off people. I should say that is not our base case. We're hoping that companies can be innovative and not have to lay off people. Maybe they find some AI way to raise productivity. I think that is the big question. We've seen all the AI investment. Do we get the AI productivity that allows companies to keep the people, not have to lay off people, absorb the tariffs, and get the productivity increase through automation?
Was this an argument to extend duration?
Absolutely. And this is very different from where we were April 2nd, when I was saying, stay away from the long end, because there's a lot of, there's Sell America, there's the deficit. Number one, the deficit's better today. We're raising a lot in tariff revenues. That's going to improve the deficit, not long term, but at least over this year. The market's pricing in that. The other question about the long end is, what are we pricing in? We're pricing in the Fed cutting to 3% and staying there, and then term premium, which is what we define. How much extra compensation are you getting for extending out the curve? That has gone up. So I think extending from the 5-year to the 10-year makes sense. For the 30-year, I still want to see something from the US Treasury. I think they need to cut supply in the long end. There just isn't a global, and it's a global question, demand for duration. So I don't know about extending all the way to the 30-year, but the 10-year, I think at 4%, our view has been in a soft landing, 375 to 4.25. But there's asymmetry to that. If there's a slowdown,
और गाइस ये क्रूड ऑयल में जैसा मैंने पहले लिखा हुआ है, आप प्रॉफिट बुक करके ट्रेल करना, बिकॉज ये काफ़ी रुक रहा है यहाँ पर. थोड़ा सा नीचे और आता था तो एक बाइंग का प्लान करते, बट वो एग्जैक्टली आ ही नहीं रहा है. ठीक है, चाहो तो पूरा प्रॉफिट बुक करके भी निकल सकते हो. अभी भी देखोगे ना हुआ क्या था मॉर्निंग पे एक्चुअली इसमें, इस पर्टिकुलर जोन पे अगर क्रूड ऑयल को देखोगे तो इशू क्या आ रहा है यहाँ पर. द मेन इशू इज़ दैट मॉर्निंग पे जो हल्का सा गैप डाउन ओपन हुआ था, ये सपोर्ट परसों वाला ही था, तो उसने जितना लो लेवल था वहाँ पर नया सपोर्ट क्रिएट कर दिया. एक्चुअली में मार्केट ऊपर निकल जरूर गया था, रिकवर कर गया था, तो एक बाइंग अच्छी आ गई थी, ऊपर रीटेस्ट था, वहाँ से सेलिंग अच्छी आ गई है. बेटर है अब थोड़ा सा नीचे ही गिर जाए. बाइंग आनी है तो लोअर एंड से बाइंग करके फिर जाना है तो ऊपर की ओर जाए, अनटिल अनलेस कोई नया रेजिस्टेंस क्रिएट नहीं कर देता ऊपर से. और लेट्स सी. बाकी एक आपका नेचुरल गैस में यहाँ पर एरिया ऑफ इंटरेस्ट है, यहाँ से भी थोड़ी बहुत सेलिंग आ सकती है, ऐसा मैंने पहले बताया था. रेजिस्टेंस नहीं है, बट आप कह सकते हो सेलर का इंटरेस्ट रहेगा थोड़ा बहुत यहाँ पर, इसलिए देख रहे होगे थोड़ा बहुत प्राइस को हिट करके प्राइस थोड़ा बहुत नीचे आने की कोशिश कर रहा है. 530 का देखते हैं मोमेंटम करता है तो. नीचे एग्जैक्टली रीटेस्ट पे आया भी नहीं, नहीं तो यहीं से बाई कर लेते हैं. तो यहीं से एक सेलिंग का प्लान रख लो इसमें थोड़ा सा, और तो कुछ कर नहीं सकते. खैर भाई क्रूड ऑयल में बुक करके निकलना चाहो तो निकल जाओ, अदरवाइज अगर ट्रेल कर रहे हो तो एटलीस्ट हाफ प्रॉफिट करके ही ट्रेल करना. हाँ 530 वो भी सीख है, वो तो कर लिया ऑलरेडी, तो मोमेंटम ही नहीं आया. एक एक कैंडल नीचे क्लोज हो तभी गिरेगा, अदरवाइज तो ये लेस चांसेस। ठीक है, देखो एक क्रूडल नीचे, सॉरी नेचुरल गैस अब नीचे आ जाए तो बेटर है रेंज के। फंस गया है इस पॉइंट ऑफ एरिया ऑफ इंटरेस्ट पे, सॉरी। बट नीचे आए तो बेटर है, जो रीटेस्ट पेंडिंग है वो रीटेस्ट भी कर देगा। तो इसी एरिया से ट्राई कर लो, थोड़ा क्वांटिटी कम रखना, ये एग्जैक्ट रेजिस्टेंस तो नहीं है तो रिस्क थोड़ा तो रहेगा इसमें। बाकी यस, अगर ये कैंडल एक कैंडल एटलीस्ट 304 के नीचे क्लोजिंग आ जाती है तो इजीली गिर जाना चाहिए। इस लेवल के नीचे अगर कैंडल क्लोज आ जाती है तो एक इजीली फॉल हो जाना चाहिए। इसके नीचे नहीं आई तो फिर या तो साइडवेज या फिर हो सकता है इसी लेवल पे रुका रह जाए। तो इस एरिया ऑफ इंटरेस्ट से सेलिंग का जो ट्रेड है इन नेचुरल गैस, थोड़ा सा इस पे ध्यान रखना, क्वांटिटी ज़्यादा मत लेना इस पे, ठीक है? ज़्यादा क्वांटिटी लेने की ज़रूरत नहीं है इस लेवल पे। अगेन दिस इज़ नॉट अ रेजिस्टेंस, रेजिस्टेंस और सपोर्ट अलग अलग है। रेजिस्टेंस परसों का जो हाई है और सपोर्ट यहाँ पर है। परसों याद होगा रेजिस्टेंस पे जाते जाते क्लोज हो गया था मार्केट, वहीं से सेलिंग आई थी, गैप डाउन हुआ, थोड़ा बहुत नीचे आया, एग्जैक्टली रिटेस्ट पे पहुंच नहीं पाया, नहीं तो यहीं बाई करते ज़रूर। लेट्स होप पहुंच जाए और फिर बाई करें और फिर ऊपर की ओर जाए तो सबसे बेस्ट के सिनेरियो रहेगा वो। नीचे वो एक एरिया है ना, उस वजह से रुक रहा है वहाँ पे, वो पहले भी चेक किया हुआ था। नहीं अभी भी करेगा इन केस, अगर हो सकता है कोई नया, इस वाले लेवल की बात हो रही है। बार बार वहीं पर रुक रहा है एक्चुअली में। इसको मानना तो नहीं चाहिए लॉजिकली, हो गया टेस्ट। ये है कौन सा लेवल, इसको अब कंसिडर नहीं करेंगे, लास्ट ही बार है। पे कर दिया ना सपोर्ट, तो फिर अब नॉर्मली तो नहीं लेते हैं, नॉर्मल में मॉर्निंग पे बाइंग आ गई ऑलरेडी, इस पे बाइंग आ गई, ऊपर वाले लेवल पे ही बाइंग है, वो भी डन है। दिस डन, दिस इज ऑल्सो डन। तो लॉजिकली उस हिसाब से तो इसको अभी ब्रेक डाउन नहीं हुआ इसको, दिस इज नॉट अ ब्रेक डाउन, नहीं है ब्रेक डाउन नहीं है तो रिटेस्ट भी नहीं होगा इसका। अगर एक बार कैंडल इसके ऊपर क्लोज होके फिर नीचे आया तो बेटर, नहीं तो ज़्यादा ऊपर भी नहीं जा पाएगा प्राइस। कमॉन गाइस, लाइक भी करते रहो सभी लोग, कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ 5 PM हो गया है, 5:30 न्यूयॉर्क सेशन ओपनिंग एक्सपेक्ट करेंगे थोड़ा मोमेंटम हो। कैंडल यहाँ क्लोज है उसके बाद प्राइस गिरे। बाकी जो यूएस ने परसों इजराइल और यूएस ने हमास को एक प्रपोजल दिया था सीज फायर के लिए, आप लोगों को याद होगा। उस पे अभी थोड़ी देर पहले कुछ अपडेट्स आई थी न्यूज़ रिगार्डिंग द डेवलपमेंट जो भी थी वहाँ पे फ्रॉम वॉल स्ट्रीट जर्नल। तो उन्होंने यही कहा था कि जो हमास है वो ट्रम्प का जो गाजा सीज फायर प्लान है उसके लिए शायद रेडी हो जाएगा, ऐसा कहना था जो आपके वहाँ के मीडिया हाउसेस हैं उनका। तो उन्होंने कतर के थ्रू ये बोला है यूएस ऑफिशियल को। इसके सिनेरियो क्या हो सकता है, ये कैंडल इसके ऊपर ऐसे क्लोज करे और फिर गिरे नीचे। दैट विल बी बेस्ट केस सिनेरियो फॉर बायर्स। प्राइस अगर मुझे लगता है अब सीधा नीचे आया तो फिर कुछ ज़्यादा बड़ा टारगेट भी नहीं मिलेगा बायर को। ओके, नेचुरल गैस का टारगेट हो गया है। इसमें यहाँ पर एक बुक कर लेना और नहीं इसको बुक कर लो, जरूरत नहीं, वहाँ पर है वो। ठीक है, बुक द प्रॉफिट इन नेचुरल गैस। बुक कर सकते हैं नेचुरल गैस में प्रॉफिट। फिर यहाँ से एक बाइंग का प्लान करते हैं। रीटेस्ट जोन है, ध्यान रखना, दिस इज द रीटेस्ट जोन। हो गया ना, तो कर गया 50% पे। अब सेल नहीं कर सकते, हो गया इसका। ठीक है, यहाँ से एक बाइंग का प्लान रहेगा नेचुरल गैस में। इसको भी लगा देता हूँ। ओके, श्योर। रेजिस्टेंस तो नहीं बना ना ये। इतना एसएल काफ़ी है, इससे बड़ा एसएल लेना भी ठीक नहीं है। वो तो काफ़ी बड़ा एसएल हो जाएगा नहीं तो। ठीक है। काउंटिंग लाइक्स पर रुको मत गाइस, फटाफट से लाइक कर दो सभी लोग। लास्ट ट्रेडिंग सेशन है, ज़्यादा रिस्क भी मत लेना, मार्केट फिर सीधा आपका मंडे को ही ओपन होगा। नीचे ही आ जाता तो बढ़िया था। रीटेस्ट है, ध्यान रखियो, दिस इज अ रीटेस्ट। बाकी जो डेटा है शायद अभी भी यूएस गवर्नमेंट शटडाउन ही है। मैनुअली इनएमएस फर्स्ट ईमेल। ठीक है। प्रसाद सत्या जी हेलो। नेचुरल गैस क्या रेंज बाउंड है आज भी? फिलहाल तो रेंज बाउंड ही है। ऊपर रेजिस्टेंस है, इसके ऊपर जाना भी मुश्किल लग रहा है मुझे तो। 311 के ऊपर मुश्किल ही है, कोई न्यूज़ आती है तो बात अलग है। नीचे सपोर्ट भी अच्छा ही है 293 94 वाला, इसी रेंज में रहना चाहिए मोस्ट प्रॉब्ली आज के दिन। परसों रेजिस्टेंस पे गया था, वहां से सेलिंग आ गई थी, क्लोजिंग होते होते हल्का सा गैप डाउन ओपन हुआ था, फॉरेक्स में नीचे चला गया था, तो वही एक तरह से टारगेट मिला है यहाँ पर। अभी रिटेस्ट पर है, देखते हैं रिटेस्ट करता है तो कोई नया रेजिस्टेंस ना क्रिएट करे बस। ऊपर जाएगा तो अगर कोई नया सपोर्ट यहाँ क्रिएट नहीं होते इस बीच में तो फिर वापस फॉल ही करना चाहिए। ये एक सपोर्ट है हमारे पास स्ट्रॉन्ग नीचे 290 293 के आसपास। तो 16 पॉइंट की रेंज कह सकते हो। मैंने बता दिया वो आज यूएस गवर्नमेंट शटडाउन है तो डेटा आ भी सकता है, नहीं भी आ सकता है, लेट भी हो सकता है और कैंसिल भी हो सकता है डेटा आना। बाकी डेटा ज़रूर है। 6 पीएम पे इंपॉर्टेंट डेटा नॉन फार्म एम्प्लॉयमेंट चेंज, अर्ली अर्निंग का अनएम्प्लॉयमेंट रेट, गोल्ड और सिल्वर को इम्पैक्ट करता है, और फिर सर्विस पीएमआई का 7:30 बजे। ये 7:30 वाला तो आ ही जाएगा खैर, ये तो सर्विस पीएमआई का है तो इट विल रिलीज। गोल्ड को एक बार देख लेते हैं।
Up 2.4%, John.
Danny, thank you. More from Danny in the next hour, about 60 minutes from now. On a radar this morning, some of our top stories. The government shutdown delaying the release of September payrolls. Many economists are leaning on alternative data, and some predicting US job growth is slowing. Elsewhere, Bridgewater Associates' flagship macro fund climbing 26% this year with a boost from tariff-fueled market uncertainty. Sources telling us here at Bloomberg the hedge fund is on track for its biggest gain since 2010. And finally, this story right here, potentially quite controversial. Argentina's economy minister and central bank president travelling to Washington today to negotiate a proposed $20 billion FX swap. Treasury Secretary Scott Bessent saying the US supports President Javier Milei, but the aid is not an outright US investment.
So they're trying to give an olive branch to Argentina through this FX swap, which, by the way, wasn't on the table when I sat down for the Treasury Secretary in Argentina in April. It's now on the table, and it comes at a time when Argentina is sending soybeans to China, and China is not buying any cargoes from the United States. And this is why this has become politically a ton of tension within this administration between Secretary of Agriculture Brooke Rollins and the Treasury Secretary Scott Bessent. I said it last hour, I'll say it again. For this president, this might become a problem. He wants to make America great again. At this moment, people are viewing this as making Argentina great again and their ability to fill the U.S. gap and sending soybeans to China.
So some tension in the cabinet. So let's talk about where the president stands on this. The president at the moment is talking about bailing out the farmers who aren't getting those soybean purchases. In the negotiations with the Chinese later on this month, he's going to have a conversation about boosting those purchases, maybe returning back to the purchase program, the agreement of the president's first term. What's he saying about what's happening with Argentina? Have we had a response from him? Have we had a response from the Treasury Secretary?
Well, the Treasury Secretary is saying that this isn't outright money. So they're trying to say, like, look, this is a financial instrument to help them. This isn't outright money. And they're going to have this conversation today with the finance minister in Washington. This is going to become a little bit more challenging for the president when Javier Milei is in Washington, according to reports, in about 2 weeks' time, alongside the IMF World Bank meetings. And if the government is still shut down and they haven't given those the bailout yet, the Wall Street Journal is talking about $10 to $14 billion to the farmers, then potentially the heat is going to be turned on.
At the moment, the government is shut down. It's day 3, which means we're not getting that payrolls report in about 60 minutes from now. Francis Donald of RBC has this to say: the timing of the government shutdown is not ideal for the Federal Reserve. Limited visibility into the September data increases the probability of an October pause. Francis joins us now for more. Francis, good morning. It's good to see you.
Good morning.
So this is a slightly different take because we've had a guest come on the programme and say they're not going to deviate from the dot plot. Ultimately, they're expecting a rate cut still in October. Why would this lead to a pause?
Well, let's remember Chair Powell has talked a lot in the past. When you're walking in a room and it goes dark, you go more slowly. You don't necessarily speed up. And at the end of the day, we have to remember this shutdown is compounding an existing problem, which is that our data is being substantially distorted distorted by tariff developments, front loading, inventories. We know that companies, clients that we talk to and others are finding ways to navigate around that using things like bonded warehouses, for example, or changing the timing of their purchases. And then on top of that, now we're going to miss probably a month of solid evidence as to what actually happened in there. So from our point of view, just like a company or a consumer at the end of the day is maybe going to say, let's be a little bit more cautious. To us, this is going to raise more questions than it is make it very clear what the definitive path ahead should be.
So Anne-Marie was talking about this earlier on this morning. The data itself has been a problem. How dependable is the data anyway for this Federal Reserve?
Well, this is the thing for economists right now is there is already a giant question mark around what data should we be using? Are there biases within the data? Were there? Will there be on a go-forward basis? We've already for years been dealing with low response rates, and we know that the economy is operating in a way that changes the way we need to use data. Confidence data, for example, in our view, is still very valuable. It explains how consumers are feeling, but if the top 10% of consumers are spending 50% of all of the consumption, then confidence data is not the same valuable tool it was in the past. Layer on top of that tariffs, and we've been really in a dark place with respect to how we can read visibly. And that's why, in a way, John, I'm not that upset that we're going to miss a month of data because I think there's so much obsession over this month to month, in part driven by the Fed that's highly data dependent. We need to focus on some of the bigger trends, and the bigger trends are clear. This is a labor market that is structurally very different. We don't need the same amount of job growth as we did before. We only believe that this economy needs to create 40,000 jobs a month for the unemployment rate to stay stable. We know growth is slowing off the back of tariffs and some price pressures that are coming through, and we know inflation is likely to reaccelerate into year end. And I could, for a month, go dark on data and tell you that I'm still fairly confident that will be the story 30 days from now. But when, of course, we're hypersensitive and we're in an environment where policymakers are really trying to move month to month, of course, the market is going to feel a little more uncomfortable with that lack of visibility.
Are you saying the Fed is too data dependent?
Well, no. What we're saying is that the month-to-month variability in data, this has always been true, sometimes leads us in the wrong directions. And I think what's really challenging right now is that that tariff distortion is very much still in play. We hear all the time, oh, tariffs are not inflationary. That may turn out to be true. It's not our view, but we won't know that till the middle of 2026. So the issue with data dependence right now isn't data dependence in and of itself. It's data dependence in an environment where we don't have good reads, and our month-to-month data is not telling us the true story of the American economy or the American consumer.
So what do you look at on a day like today? You're not getting the jobs report. What's your North Star in terms of directing you towards these trends?
Well, today's not actually the problem. So any economist would have released their estimate for where jobs would be last week and everybody's week ahead. Our estimate was 52,000. The problem will be next month when we don't have the aggregate amount of data that helps us forecast what happens next. At the end of the day, we tell clients focus on the trend. We think the unemployment rate will rise gradually to 4.6%. But we've been through a few cycles, all of us at this table, if I may say that. We know that 4.6% unemployment is still very low, very tight labor market underneath the surface. So we are doing what we've been doing for the last year. Much more bottom-up work, much more sector focus. Look at your actual end consumer. Which one are you servicing? Which one are you investing in? And look at their individual stories. And then, of course, we have a table of all the indicators that we look at, from WARN notices to LinkedIn postings, that help us get a little bit more of a month-to-month gauge. But the message here is actually one of relief. Focus on the big picture. That's probably going to guide you towards better investment decisions and better operating decisions if you're running a business.
You'll forgive me for bringing up the shutdown then, but we do have to talk about it just a little bit. The government shutdown in Washington, it can have implications for the economy. Typically, we know how the movie goes. Economy has a bit of a blip. Then we accelerate, we pick up again, and we look through the whole thing. And that's ultimately how markets play this story too. Do you see it as delayed, deferred activity, or are we at this point where things are a little bit more fragile, where things could be somewhat derailed?
Well, I watch your show in the mornings, and I'll repeat what just about every economist has told you. Our traditional rule of thumb is the shutdown is worth about 0.1 percentage points of GDP each week that it goes on, and then it becomes nonlinear, likely around the middle of the month. The longer it's out, the more it bleeds through the economy. We're focused on some of the things related to contract workers as well. So all the economy that circulates around the government that may see a pause. At the end of the day, I talk about the shutdown being emblematic of larger trends, and there's two that sort of worry us. This economy was already slowing down, so these additional bumps, they exacerbate the problem, they exacerbate the uncertainty component. But under the surface, we've also in the past year, again, we're thinking about how this relates to the bigger trends, been much more focused on the fiscal side of the picture, the policy side of the picture, than the monetary policy side of the picture. And that's largely because this economy is becoming less sensitive to the Fed's next move and much more sensitive to what's happening in Washington. We see this in the yield curve. We see this at the long end of the curve. But many Americans are leveraged to the belly and the long end of the yield curve, with the Fed is not successfully being able to influence at this point of view. So acrimonious Washington, to me, is not necessarily about the GDP impact for September and October. It's about this transformation where we move away from monetary policy being the core driver of the business cycle and realize that if we really want to know where are we have to watch fiscal spending, the deficit, and the path for that ahead.
Is this shutdown different, though? If Trump decides to make these furloughs permanent?
Oh, absolutely. And so when we look at the numbers, for example, if we were to see, and this is the extreme example, this wouldn't happen, but if by October 17th, that'll be the reference week for next month's jobs number, if we haven't seen folks come back, you could see the unemployment rate jump to 4.8%. Now, our estimate is that it would then come back down, but these are the types of numbers that begin to skew the story to a certain extent.
I'm saying if he decides to say, I actually want to move more people into the private sector and I'm getting rid of these offices, these jobs. Is that more of a permanent effect?
Absolutely. That would be more permanent, but that number is ultimately probably going to be quite small. But the most extreme thing, let's say every person would be laid off, which is not going to happen, you would see that number jump to 4.8. Again, this is emblematic of the bigger picture, which is job growth is slowing. We are going to see less job creation on a go-forward basis, with the exception of healthcare. Healthcare is going to continue to be fairly robust there. So this is the trend continuing: slower job growth, slower overall growth, less confidence in the economy, and reduced data visibility. It is, as we say, stagflation light.
Francis, you're one of the best. Appreciate it. Absolute clinic as always. Francis Donald there of RBC, and the jobs report we won't be getting, and the trends you need to focus on. Equity futures right now, the S&P 500 positive by 0.2% with an update on stories worldwide. With your Bloomberg brief is Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Goldman Sachs CEO David Solomon is bullish on the U.S. economy. Speaking to Bloomberg's Tom McKenzie earlier in Italy, Solomon said he sees tailwinds such as tech spending helping the United States.
The U.S. economy is in pretty good shape, and there are some very, very strong tailwinds that have really had a profound effect. I'm optimistic that we're probably going to see an acceleration as we continue to head into 2026.
Just last month, Solomon warned President Trump's trade policies were weighing on growth. Another setback for Boeing. Sources telling us here at Bloomberg the company's 777X jet will fly commercially in 2027 instead of next year. The delay could result in potentially billions of dollars in accounting charges. The jet is already 6 years late and has major strategic and financial importance to Boeing. Are you ready for it, Swifties? Taylor Swift's highly anticipated 12th studio album, The Life of a Showgirl, is out now. The album features 12 tracks, with the title track featuring Sabrina Carpenter. Swift's latest album is the most pre-saved in Spotify history, surpassing 5 million pre-saves. We'll have to keep an eye on shares of Spotify later. That's your Bloomberg brief, John.
Bonnie, thank you. Appreciate the update. Thank you very much. Up next on the programme, divisions remaining and the Fed.
We're going to go off of what the data we have. It suggests that the unemployment rate was unchanged. I think it indicates some steadiness in the labor market. And I think the underlying economy is still growing pretty solidly.
Up next, Mike Collins of PGM, live from New York. You're watching Bloomberg TV.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, it complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 7 p.m. London time. Only on Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Equities are positive, higher by 0.2% on the S&P 500. On the Nasdaq 100, up by 0.2% also. 5-day winning run on the S&P. Looks like day 6 already the longest daily winning streak since the end of July. A lot of bulls have come on this program, but a lot of people have come on the show so far this week and really explained why this is such a risk-friendly moment. Krishna Gua of Evercore saying because of this growth-labour divergence, it looks like the growth side is fine. The labour side is perhaps weakening more. The Fed is taking its cue from the labour side. And that's why this is so risk-friendly. And Mike Powell of BlackRock was saying something similar. Strong growth environment with labour market weakness giving the Fed more room to cut. That's a positive backdrop for risk assets.
And you just heard from Frances Dunlop. What is she talking about? The trend. It doesn't matter to her if we have this entire month off when it comes to data, because also everyone thinks the Fed maybe is a little bit too obsessed with month-to-month data. She's looking at the trends, and the trends are showing you that we potentially are going to have a higher unemployment rate, and there is some weakening in this economy. It's just so difficult when you wake up and you're talking about trillion-dollar companies and the capex boom we're seeing when it comes to artificial intelligence in the top companies on the S&P 500.
Delivering fantastic profits. That divergence between corporate earnings, great, and the labour market, not so great. The Fed's responding to one and not the other, and the market is focused on both. We get the rate cuts and the earnings. Stocks are at all-time highs. In the bond market, 2-year bond yields at the front end of the curve around 350 now. Repricing lower this week, down by around 10 basis points off the back of weaker than expected economic data, 353.88. Under surveillance this morning, divisions remaining at the Federal Reserve.
If we don't get the official unemployment rate, we're going to go off of what the data we have. If we released it today, it suggests that the unemployment rate was unchanged for this month from last month. I think it indicates some steadiness in the labor market, and I think the underlying economy is still growing pretty solidly.
So here's the latest this morning. The Chicago Fed President Austin Goolsbee leaning on alternative data, saying the labour market remains stable. Mike Collins of PGIM calling his macro base case a muddle through, writing, while downside tails remain and there is a chance of a mild recession, we see limited crash risk. Mike joins us now for more. Mike, welcome to the programme, sir. It's an odd one, isn't it? No payrolls report in 42 minutes expected. But let's go with the language from Austin Goolsbee. He seems to think the labour market is solid. Would you call it solid? Would you say things are stable?
Yeah, the labor market is a conundrum, Jonathan, just like a lot of the economic data and like the Fed outlook. And what you're seeing in the labor market is the supply of labor is coming down fast, right? Plans for companies to hire is kind of in a free fall, right? But the one outlier within the data is the firing, right? We're really not seeing any layoffs. It's just kind of flat as a pancake in terms of companies laying people off, firings. So maybe companies are really just holding on to the people they have, trying to maintain their margins through other means, right? But I think you are seeing this kind of sneaky weakness in the job market. I would say if you look at the whole, data set of the labor market, it definitely looks like it's weakening to us. Typically, the last thing to happen, right, is companies lay off people. So maybe that's the last shoe to drop.
Yeah, Mike, that's what I want to get into here. You've seen it all. For a long time, you've been one of my favourites in fixed income. You know that. I can say it loud and proud right here on TV. Mike, it's very strange to see such a strong corporate earnings profile at the same time we see such muted hiring intentions. When you start to see that, does it typically break one way or the other?
Yeah, one chart I was looking at yesterday, Jonathan, if you look at the stock market, right, it's going straight up. And then you look at the growth rate of the labor market, new jobs, it's going straight down. Typically, those things are highly correlated, right? So something's got to give. And I would guess it's the ebullient, real bullish fever we have out there in asset prices and in markets and maybe even in earnings, right? Earnings expectations, as you know, Jonathan, for the next 2 years are still in the low teens year-over-year growth. Now, granted, a lot of that is concentrated in a relatively small amount of companies, but you are seeing earnings breadth in the stock market really expand a little bit here, which is very encouraging. Why you're seeing things like the Russell 2000 small companies actually start to outperform a little bit here, or at least catch up, which is nice. So it is a real challenging environment for an economist, for an analyst, for a data scientist, for the Fed to parse all this data and figure out. You talked about in your opening, our muddle through. The muddle through is our base case, meaning growth is going to be in the ones, inflation is going to be in the high twos, right? The labor market is weakening, but it isn't going to fall apart. That's like the base case. But wow, the tails, Jonathan, are pretty big. And the downside tail is recession, obviously. And it seems to me like that risk is actually increasing, albeit it would be a mild one. But the upside tail risk, where earnings continue to boom, the stock market continues to boom, AI CapEx continues to boom. The wealth effect continues to drive the economy. That's a big risk, right? And the problem is, so that's the bubble scenario, right? You have the recession scenario and the bubble scenario as your tails, and they both end badly, right? So that's really where you're trying to thread the needle here in the bond market, and when you're managing money to try to really rely on that base case and not blow up in the tails.
Mike, putting these two stories together, how does the Federal Reserve address higher unemployment? Because AI is taking those jobs, and AI is doing so well because the CapEx you're seeing at these companies.
Yeah, I mean, productivity, right? I mean, AI that is the upside story, Anne-Marie, right? It's the AI, it's the productivity boom, it's the resilience of this economy, which has been largely driven by this really powerful wealth effect, which does have legs. And there is a trickle-down component, right? I mean, the stats you see are, 10% of the wealthiest people in this country are driving 50% of GDP. Unfortunately, the other 50% of GDP, as you've reported, is coming.
Guys, crude oil देखोगे थोड़ा सा नीचे और आता है तो बाइंग का प्लान करते हैं. सिल्वर भी 46.5 के रेंज में बहुत टाइम से स्पेंड कर रहा है. लगता है फर्दर अप मूव के लिए सेटअप चल रहा है. योर व्यू? देखना पड़ेगा. सिल्वर को मैंने चेक नहीं किया. बाकी वैसे सिल्वर और गोल्ड हैं तो बुलिश ही, इसमें कोई डाउट नहीं है. फॉरेक्स की बात कर रहे हो ना आप? 46.5, ये तो अभी 47 चला गया। ऑल टाइम, हाँ ऑल टाइम हाई मुझे लग रहा है दोबारा जाएगा शायद। सेम ये सिनेरियो गोल्ड का भी हुआ है, सेम चार्ट गोल्ड का भी है। गोल्ड को भी देखोगे ना फॉरेक्स में, सेम ही लग रहा है। जिस तरह से कंसोलिडेशन में फंसा हुआ है, एक ब्रेकआउट या ब्रेकडाउन कंसोलिडेशन में तो दोनों साइड करने की पॉसिबिलिटी है। मोस्ट प्रॉब्ली 6 बजे का एक डेटा है, मुझे उसका लग रहा है वेट कर रही है। 6 PM पे जो डेटा आ जाएगा उसके बाद शायद थोड़ा सा मूव करे गोल्ड और सिल्वर, क्योंकि 6 बजे का डेटा बहुत इंपॉर्टेंट है। अनएम्प्लॉयमेंट क्लेम्स और नॉन फार्म एम्प्लॉयमेंट चेंज का, एक गोल्ड और सिल्वर दोनों को इम्पैक्ट करता है प्राइस को। तो एक्सपेक्ट कर सकते हो 6 PM पे एक मोमेंटम गोल्ड और सिल्वर में। बाकी सिल्वर तो आ गया है शायद ऑलमोस्ट अपने ऑल टाइम हाई पे वापस, MCX में पहुंचने वाला है। फॉरेक्स भी रिसेंट जो हाई है वहां तक पहुंचने वाला है, $48, 47.56 पर है अभी। ओके देखो, क्रूड ने थोड़ी सी अब क्या कर दी है ना, प्रॉब्लम क्रिएट कर दी है। अब मुझे थोड़ा सा क्रूड ज़्यादा ही बेरिश लग रहा है। ठीक है, जिन लोगों ने ट्रेल किया था ये फाइनल टारगेट है, यहाँ तक आता है तो कोई नया ट्रेड चल नहीं रहा है, इसमें ध्यान रखना। यहाँ पर एक सपोर्ट जरूर है, और अब ज़्यादा बड़ा मुझे टारगेट भी नज़र नहीं आ रहा है यहाँ पर कि जाएगा प्राइस। कुछ ज़्यादा ही बेरिश हो गया क्रूड। जितना बुलिस मोमेंटम में गया था अभी रिसेंटली, रुक ही नहीं रहा था। एक रैली स्टार्ट कर रखी थी कंटिन्यूसली मार्केट ने, फ्रॉम 5400 से 5900 तक। जिस स्पीड से गया उसी स्पीड से लौट आया। अगर ध्यान से देखोगे ना, 23 सितंबर से लेकर 26 सितंबर, 4 दिन कंटिन्यूसली बुलिस था। फिर उसके बाद 26 सितंबर से आज 3 अक्टूबर हो गए, ऑलमोस्ट 5-6 दिन कंटिन्यूसली बेरिश ही है। ये भी सपोर्ट है बट अगेन बड़ा टारगेट नहीं दिख रहा, बिकॉज ऊपर जितना जाएगा ना प्राइस पे, रेजिस्टेंस पे सेलर बैठे ही हुए हैं उतने ज़्यादा। तो ऊपर जाना है तो सारे रेजिस्टेंस को एक एक करके ब्रेक करना पड़ेगा, जिसके चांसेस कम ही रहते हैं। इसके सिनेरियो क्या रहेगा ना बायर के लिए, ये थोड़ा सा लास्ट कैंडल ओपन इक्वल टू हाई है ना, थोड़ा सा अपसाइड पे जाए इस तरह से, फिर आए नीचे की ओर अगेन। बेस्ट तो ये था कि क्लोजिंग देता ना इसके ऊपर ऐसे और फिर गिरता, तब बायर के लिए एक अच्छी अपॉर्चुनिटी मिल जाती। अभी भी है एक ऑप्शन की प्राइस यहाँ जाए, यहाँ से वापस फिर नीचे आए तब बाइंग हो, rather देन डायरेक्टली अब आ जाए नीचे और फिर बाइंग करे, क्योंकि फिर टारगेट ही छोटा सा रहेगा। लगा देता हूँ मैं वैसे, ज़्यादा नहीं है रिस्क रिवॉर्ड, 1:2 ही दिख रहा है।
Technical trading. if it was something that they feel they wouldn't be complete without going to business school. There have been people who've done nicely with us who've wanted to go, but that's been more the exception.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
In case you missed it on Bloomberg Insight.
There are many things that economists disagree on, but I think one thing that they all tend to agree on is that central bank independence is a good thing. It's a hard-won lesson. It's a shame that it's being, I think, not remembered as well, especially in, again, the place which is supposed to be the world's safe haven.
Not just about the dollar, it's also about the yuan. Some talk about perhaps competitive devaluation. If we continue to see the yuan decline from here, that's detrimental to your economy as well.
You know, a lot of the countries in the region, there's still enough of us that are still around, present company included, that still remember the 1997 Asian financial crisis. But there's still a bunch of us around that still remember that and still recognize the lessons and the dangers of trying to, basically do too much in terms of trying to keep exchange rates at a certain level for competitive reasons.
Don't miss Bloomberg Insight live weekdays.
This is an unfamiliar political situation in just so many respects.
It's very difficult to look at the data without having the data.
The less data that come out, the less of a reason the Fed would have to deviate from the dot plot.
Earnings season is going to take on even more importance if we have a lack of government data.
Companies are going to operate through fog.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
We should do this more often, just Fridays. First Friday of the month without the payrolls report.
Should we just go home?
Just way more chill, isn't it? Going into the weekend. From New York City this morning, good morning to you all. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your equity market at all-time highs on a 5-day winning streak, adding some weight to the rally. Equity futures this morning, positive across the board, up by 1/10% on the S&P. On the NASDAQ 100, up by 1/10%. Also, some outperformance, just a little bit over on the Russell. The small caps up by 0.4%. In the bond market, focused on the 2-year, we have had a repricing lower on the week so far off the back of the data we have had, which has been weaker than expected. 354.29 on 2s at the moment. As for the week ahead, the day ahead going into the weekend, you do get some data. Probably not getting payrolls at 8:30 unless something spectacular happens. ISM services, though, one to watch at 10 a.m. Eastern Time.
So we do get something in this data desert, as Jordan Rochester called it, but we're not getting to the big one, the one that the Fed really cares about. But I love what Francis said the last hour. She's actually happy about this because the Fed is almost too tethered to every single month's data dependency. And Trump already months ago threw cold water on the data, saying you can't really take it at what face value because of the massive revisions. People in the market were like, yeah, we've been saying this for a while. We don't love the data collection. The revisions haven't been great. We still want the data, but it would be better if it was more prime time, if it was more accurate. So the jobs report has already been canceled. Now it's basically officially canceled. And the question everyone is when are we going to get it? When the government opens? We're day 3 of the shutdown. Likely it's going to go through the weekend. We're here for at least another few days.
The CPI, arguably the bigger one in a few weeks' time. Is that going to be delayed? Does this shutdown basically delay the next payrolls report as well because of data collection issues? Let's just run with what we've had so far this week. Hasn't been great. Factory activity shrinking for a 7-month. No new information there. That's been a shaky story for a while. Consumer confidence 5-month low. ADP weakest since 2023. You put that all together, if you wanted a picture of the economy right now based on the data we have had, it hasn't been tremendous.
And this is what a lot of economists have been arguing, like Francis. The trend is already set. You don't need today's jobs report, which we're not going to get, it's MIA, to basically tell the Fed that they should be looking at what's happening in a weakening labor market and cutting again. We know that's where the Fed's bias is right now. The issue a lot of people are starting to have, though, is that by mid of next year, some economists think the tariffs will actually start to bite. And is that going to mean more potentially inflation, or is that going to be mass layoffs because corporations can't just eat the tariffs anymore, and they actually need to start making up some of this on the margins.
27 minutes away from staring into space, waiting to see if something crazy happens. Mike McKee's going to join us.
Look at Truth Social.
Later on this morning at 8:30 Eastern Time. Maybe the president's got the number. Perhaps he'll release it. No one really knows. Equity futures on the S&P 500 up by about 0.1%. Coming up this hour, Nadia Lovell of UBS, the stocks trade near all-time highs. Becky Frankowitz of Manpower Group as we break down the health of the labour market. And Seth Carpenter of Morgan Stanley warning that tariff impacts are still ahead. We begin this hour with stocks shaking off the political division in Washington. Nadia Lovell of UBS writing, we expect the market to stay steady despite the government shutdown, with temporary macro data delays unlikely to stop further Fed rate cuts. Nadia joins us now for more. Nadia, good morning.
Good morning.
Is this delay to the data, not the suspension of it, but the delay of releasing it, is it a reason not to take risk in any way, shape or form?
Absolutely not. You're seeing it today in the market. I mean, the economists might have less to do today, but the equity market still has a lot to do, and investors still have a lot to do. When you think about it, it feels like the chase is on, Jonathan, right? The sort of the seasonal weakness that some were looking for in September didn't materialize. And that's because the corporate commentary has been pretty sanguine, right? You also have the AI story that's still very much alive. So we think that the ingredients are coming together for a melt-up into year-end. And so there's a lot to do in the equity market, despite the fact that our government is shut down, and we hope it reopens soon to be able to pay its employees.
It sounds like it doesn't make a difference to you, so let's go with that phrase, melt-up. What does that phrase mean to you? Just help define that just a little bit. If the chase is on, what's a melt-up look like?
Well, when you think about it, you have a market that's up a lot since the April lows, up 14% year-to-date. But reality is, not everyone has participated in that. And so there's some performance that needs to be made up by the time we get to year-end. And reality is, we do know that from a seasonal standpoint, fourth quarter tends to be a pretty solid quarter, especially when you've had a solid year-to-date. And then when you look into the Q3 earnings season, I think that is going to be a good one. You know, consensus right now is looking for about 7% EPS growth. We could get to high single digits to low double digits. And the fact is, the spending continues in AI. So you could see this market that continues to move higher, another 3, 4, 5% into year-end. Now, that's not to say, even if you get a small pullback, it's going to be bought, in our view.
Who hasn't participated that you're looking to participate?
Some of the long-onlys haven't participated. A lot of this has been driven by corporate buyback. It has been driven by the retail investors, also some of the systematic. But you do have some long-onlys that have been sitting on the sideline. You know, the drawdown in April was sharp, fast, and the rebound has been also fast, and some have missed out on that.
What are you looking for in 2026? Because you're thinking a melt-up going in. Does it at some point, there's a catalyst for it to bust?
Look, don't think that there's a bust coming. You know, yes, there's chatter about, you know, potentially being in an AI bubble. And the fact that we're debating it suggests to me that we're probably at, if we are in one, which we don't think that we are, that we're probably at the start of one, much closer to the start of one than towards the end of one. And when you think about it, the AI cap stories continue to pick up. We think that you could see $500 billion or so global AI spending next year. Now, there's this question about monetization, but even that is starting to show some signs of pickup. We're seeing improvement. I mean, look at the slew of deals that have been announced in partnership in the last couple of weeks, and even like the amount of product launches that you've had from someone that's in the center of this, OpenAI, this week. And so it does suggest that you could start to see us move into that monetization phase in a more meaningful way in 2026. And then reality is, ahead of midterms, I think this administration will be focused on growth.
You've just said something important about people not participating, and I just want to sit on that for a bit longer, why they haven't participated. 6 months since April 2nd, and a lot of people were scared out of this market. Then people started to chase it. To the extent that people didn't participate, this is what Torsten Sloth's got to say on the issue right now regarding the pandemic, regarding Liberation Day, rather, which felt like the pandemic at the time. The US economy remains remarkably resilient, and it's becoming increasingly difficult to argue that we're still waiting for the delayed negative effects of what happened 6 months ago. How many people do you speak to are still being held back, waiting in fear about seeing the consequences of what happened 6 months ago?
I think it's sort of contingent to what Anne-Marie's question was, does it come in 2026? I think people are now saying, does this come in 2026? But there's some level of capitulation that's starting to happen now, because you're just not seeing, you're not hearing it from the companies. And we know that the government data, we're not sure if we can trust it, right? So you now have to listen even more to the corporate side, which is what we've always been saying. And when you look at the conference season in September, corporates were, saying that things are okay. You're not seeing huge pressures on the consumer, nothing incremental. The lower end consumer we've known for a long time has been weak, but the middle to upper income consumer, still has a lot of cash and this wealth effect, right? That they can be able to sustain some of the price increases that we do think will come in a more gradual way, but we don't think that that's going to be any sort of meaningful pullback from those kind of consumers.
As they capitulate, where are they going? Is this all concentrated in tech, or are you starting to see moves elsewhere?
You are seeing a broader now. I do think that from an investment standpoint, it continues to flow into tech, but you're seeing your small cap also pick up. And also, we think a sector that might be interested for a catch-up here is healthcare, especially after this week. You're getting a lot more clarity on the policy front standpoint with this deal between the administration and Pfizer. Does it serve as a blueprint for more deals? The fact is that most favored nation, right? There was concerns that could be a broad-based policy. Now it looks like it's mostly concentrated in Medicaid. So that could be a positive for the overall healthcare industry. And the fact is that, valuations are quite suppressed. We've talked about elevated valuation. Healthcare, 25% discount valuation to the S&P.
Nadia, do you take a look at lists like pharmaceuticals, companies that are important for U.S. national security and defense, and start thinking about maybe people should get long on these because the U.S. government might take an outright stake in these companies?
We'll see if that extends to healthcare. So far, it hasn't. But we think about things from a structural growth standpoint, and that's why we do think that healthcare and the national security sort of played in that. Healthcare is also part of that story. Eventually you are going to see from a longevity standpoint, at the end of the day, we have a population that's getting older. We have innovation that could come even in healthcare through AI in terms of drugs discovery. And so we think that there's a structural story happening in healthcare as well, along with, of course, our most preferred way to pay structural growth is through tech, but we think that healthcare is part of that story too.
When you look at this melt up, some economists are saying, but we can have a higher unemployment rate. Jobs market is weakening. How do you have both? Isn't it so uncomfortable?
We always say, the stock market and the economy are two different things, right? Like, yes, you could have an increase in the unemployment rate. We're not looking at any sort of meaningful increase.
But this administration, basically, their barometer of how well they're doing with the economy is looking at the stock market. Is that a challenge?
Well, if they're looking at the stock market, then they think they're doing great, right? But in all seriousness, from an employment standpoint, we don't think that you're going to see any sort of meaningful pickup in unemployment. And at the end of the day, we know that the Fed is there, right, to help backstop some of that and to help to stimulate the economy. And if we can unlock the housing market, maybe there's a national emergency, I'm hearing, in terms of the housing market. That can also help in terms of, wealth creation and also to help that cyclical part of the markets and the economy.
Who needs a jobs report? It's good to see you, as always, on a Payrolls Friday without the payrolls. Nadia Lovell of UBS. Let's give you an update on stories worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Well, we are in the third day of a government shutdown. The Senate is expected to hold another vote today on a stopgap spending bill to reopen the government into mid-November. Democrats are holding firm on demands to extend healthcare subsidies. President Trump is threatening to slash jobs at what he calls Democrat agencies that don't align with his agenda. The Trump administration has frozen $2.1 billion in Chicago infrastructure projects. U.S. Budget Chief Ross Vought sharing on X that, quote, the Red Line extension and the Red and Purple modernization project have specifically been put on hold to, quote, ensure funding is not flowing via race-based contracting. The Trump administration has also frozen $18 billion in New York infrastructure funding for, it says, similar reasons. BlackRock's Global Infrastructure Partners is said to be in advanced talks to acquire Aligned data centers. Aligned could be valued at about $40 billion. The deal would be one of the biggest of the year. A spokesperson for BlackRock declined to comment. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next, the Morning Calls Plus, Becky Frankowitz of Manpower Group, as we break down the health of the labour market. That conversation up next, live from New York City this morning. Good morning.
Ignore the noise. If you're a long-term investor, ignore the noise. And how we look about global opportunities, we're going to talk about today about identifying opportunities based on mismanagement of risk. And as a long-term investor, you can't be lucky. In order to be successful, you just can't be lucky. Someone can be lucky in the short term, but over the long run, you can't afford to be lucky. And to successfully identify opportunities, you need 4 key things. You need to have a long-term strategy. You need to put a process around it. You need to surround yourself with the talent to pick the right opportunities. And you need to have the guts to make bold decisions when opportunities arise. And as a long-term investor going into portfolio construction, whether you're a sovereign wealth fund or a pension fund, you need to know where you're going, reverse engineer it, and you'll have a return of capital on average that you need to achieve. But that's where the main problem is, because investors sometimes tend to focus on chasing returns, but not looking at risk. So you have to assign a specific risk profile to your investment. And the perception is the more risk you take, the more likelihood of a greater return. But that can be deceiving. You can't avoid risk when investing. You need to understand it and know how to manage it.
Shutdown is compounding an existing problem, which is that our data is being substantially distorted by tariff developments, front-loading, inventories. On top of that, now we're going to miss probably a month of solid evidence as to what actually happened in there. To us, this is going to raise more questions than it is make it very clear what the definitive path ahead should be.
That was the brilliant Francis Donald of RBC weighing in on what's happening with the jobs market and the broader economy. Going into 8:30 Eastern Time, but not a payrolls report. A number supposed to drop 15 minutes from now, but of course not going to drop, not expected to drop because of the government shutdown. Entering day 3 in the equity market. Equity futures positive by 0.1% following 5 days of gains. On the Nasdaq 100 up by 0.14. On the Russell up by 0.45. In the bond market, lots of weak economic data this week, bringing down the 2-year bond yield to the low 350s. 354 right now, just about unchanged on the session. Lower on the week by around 10 basis points. Talked lots about weak data, ADP, the quits rate, manufacturing, the ISM, all of that. But let's talk about strong markets. All-time highs in the equity market, multi-decade tights for investment-grade credit spreads. And we just came off the back of the biggest month of credit issuance, for the month of September at least, for corporate debt supply, high yield and investment grade. It's been quite a few months for financial markets, even though we've seen this deterioration start to creep in to the labour market. So that's the price action and the broader economy. Let's get you some single names and some morning calls. First up, UBS, lowering its price target on UPS to 110, saying it's likely on track with prior expectations of a low double-digit decline in domestic volumes. Your second call from Wells Fargo, lowering its price target on Uber to 125, seeing delivery volumes in its Q3 report as key for lowering investor concerns. And finally, Jefferies cutting Apple to underperform, seeing an overly bullish iPhone outlook. A stock is down by 0.8%. Let's turn back to the labour market. The government shutdown halting the release of the payroll data. Becky Frankowitz of Manpower Group, one of the world's leading staffing companies, writes the following. The official jobs report might be on pause, but the labour market keeps moving. And our data shows a market in transition. Becky joins us now for more. Becky, welcome to the show. It's been too long. What are we transitioning from and to what?
Yeah, so first, it's a strange no jobs report, Jobs Friday. So usually we say Happy Jobs Friday, and it is still a Happy Jobs Friday because we see real-time, real-world data. And John, we're watching 3 trends. First, job hugging is the new job switching. So we're not seeing workers switch jobs anymore. We're seeing them hold on to their jobs. In fact, switching is down 50% in the last 2 years. So workers are staying put. The second big trend that we're seeing is lateral is the new vertical. Employers are holding on to their talent. And so there's this change called micro mobility, where we're seeing people change titles, but not change companies. And the final piece I'd say is growth isn't gone. It's just moved. So we're seeing growth in immediate benefit roles, a lot of growth in the data scientists, database architects, things that are tech forward. And we're seeing some shifts in even manufacturing, where we're seeing blue collar workers like engineers, people who are on the front line in terms of manufacturing starting to grow. Logistics is a little bit soft. Of course, education, retail is showing some strength, but there is still growth. You just have to look harder to find it.
Becky, is there growth in entry-level jobs?
Anne-Marie, it's one of the top things we're watching. So if you said, what are you watching closely? I would tell you impact of AI and entry-level jobs. We are seeing reduced demand for the educated yet inexperienced. And that is people coming out of college. So employers are prioritizing people who have actual experience because, again, they want immediate impact. Employers aren't hiring to develop people. They're hiring to actually get benefit from their hires today. And that is impacting our entry-level professionals.
Historically, what kind of time can you reckon this back to? When did we see such a weak environment for entry-level jobs?
Yeah, it's been a long time, Anne-Marie. It's not. We're not in the 2008 stage yet, which was a huge crisis. But we are seeing a drop of about 6% in terms of the demand for entry-level jobs, and it's coming at the same time. The overall job market is continuing to cool. It's not just cooled; it's continuing to cool. We see total jobs posted. Again, I don't need BLS to tell you this. We look every day. Total jobs posted have dropped under 7 million. It's always been a 7 million mark, under 7 million, to the lowest level in 4 years. And we're seeing this overall slowing in jobs, and we're seeing a change in the kinds of jobs people are hiring entry level. And in part, it's a bit of wait and see on AI. I heard one of your prior guests talk about that. It's a bit of wait and see, but it's also a bit of economic uncertainty causing me to prioritize today versus tomorrow.
Becky, can we just pick up on the AI point? Where are you seeing that? How's it showing up? And how do you draw a distinction between what is driven by AI and what's driven by traditional, broader economic concerns?
Yeah, well, it's hard to break apart, John, if I'm honest, but I'll tell you what the data is showing us. And the data is showing us that tech-forward roles are surging. Again, database scientists, data architects, anything on security is surging today. Of course, we've seen some softening in software developers, but guess what? Back to entry-level roles, it's still one of the top 3 entry-level roles. It's down almost 50% year over year, but it's still in volume one of the top 3. So we're seeing a pretty balanced view on AI right now. Employers are still telling us that if they're more tech forward as an employer, digitizing faster, they're intending to hire more. We're waiting to see that play out. But right now, I would say we're seeing a balanced view on AI. But there is a lot of wait and see on the promise of the impact of what AI can give our economy.
So, Becky, are you seeing any supply side issues? Because the big debate on Wall Street is, yes, we've seen a step down in payrolls growth, but we've also seen a step down in supply. And the economists will come on the program, and some of them disagree with each other. Some might say this is bad, we need to respond to it. Others might say, well, this is a supply side story. Yes, you've had a step down in payrolls, but you've not had an increase in labour market slack. From your standpoint, is there a supply side issue? Do you see that showing up in the business?
Yeah, we're not seeing significant supply side issues, John. What I would say we're seeing is a bit of, and I'm not using it economically, a bit of stagnation in terms of mobility. People are staying put. And when people stay put, it is harder to free up some of the supply to actually generate this transition that normally underpins our economy. When I tell you that job switching's down 50%, 50 in the last 2 years, that is significant. And that's not having an impact on overall supply, but it is having an impact on mobility. And mobility generally leads to growth in our economy.
Does this mean workers are not asking for higher wages?
Yeah, great question, Anne-Marie. What we're seeing now, again, during the heights of the pandemic, we saw huge bonuses for switching jobs. We're seeing that level has dropped below 7%. So the premium on switching a job in terms of your pay increase traditionally runs around 7%. We've seen that now drop to about 6 3/4. So we're not incenting people to move, and we're seeing an increase in people who stay put. So I'm telling you, this whole idea of job hugging is real from the employee view, and this idea idea of lateral, not vertical, giving titles and a little bit of pay is real from an employee point of view. So they're coming together in a way that people aren't moving.
Workers that are able, though, to move structurally higher in an organization because they moved an organization, what sectors is that happening in?
So, Anne-Marie, we're seeing only 2 sectors. We're seeing this increase in switching, if you will. That is construction, and that is in the financial markets. And you've seen the headlines on the financial analysts that are switching all over New York City. So those 2 roles still have quite a bit of agency, and we are seeing switching there. But for the others, we're really seeing people stay put.
So, Becky, we've been in this low churn dynamic in the labour market for a while now. Economists have been talking about it on this programme. You have too. When things break one way or the other, we're always looking for that early indication. Now, correct me if I'm wrong, I think you used to lead Quaker Foods. When you oversaw that business, Becky, what kind of behavioural changes were you always looking out for a leading indicator of which way this economy was about to break?
Yeah, so John, you're taking me in the Wayback Machine now. We would look at number of items in the basket, and so how many goods are people buying, trips to store, average purchase price that you're actually putting in your basket. And I know now from the jobs market report, or what we see in terms of people actually hiring, who's hiring today? It is the cost-conscious consumer companies that are hiring. Domino's is hiring, Lowe's is hiring. So we're not seeing the high-end retailers hiring, we're seeing the more accessible retailers hiring, which tells me, in terms of early indicator, people are still very cost conscious, uncertain about what's coming, and holding on to their dollars like they're holding on to their jobs.
Becky, this was great. Let's do it again soon. It's good to see you. Who needs the jobs report when you've got Becky Frankowitz of Manpower Group to go through what's happening in this labour market?
Totally agree. And what she's talking about is what we've heard from a lot of people. I just love the term she used in terms of job hugging. That's basically what Neela has been talking about for months at ADP. This idea is it's paralysis in the labour market, low hiring, low firing, and people just want to stay currently in place.
You saw it in the quits rate as well in the job openings report earlier this week. And these things can feed on themselves, that negativity. If you start to feel like that about your job, it can influence the consumer behaviour. The good news so far is we haven't seen a decline in retail sales. In fact, coming out of the summer, retail sales actually picked up. So, again, we're in the same point. Which way is this going to break? It's a huge debate about that right now.
Individuals are still going out. They're still going out and spending. I think what's so concerning about the labour market, and Governor Waller has talked about this, is individuals who are graduating college, entering the job market. When I entered the job market and I graduated college, the unemployment rate was 9.2%. And that is a scary place to be. And on top of that, what individuals now are dealing with is this concern that maybe AI is just going to take their job.
It's not where we want to be, that's for sure. Futures are positive by 0.1%. This market keeps grinding higher. Equities at all-time highs. Up next, Seth Carpenter of Morgan Stanley.
Mark Zuckerberg has said all of Llama's code will basically be AI generated in 12 to 18 months. 30% of Microsoft's code is already AI generated. So do kids still need to learn how to code? Do we still need software engineers?
Yes, yes, and yes. Betting against computer science and coding is like betting against reading in, 14th century. Just feels like, it's such a critical core skill with, and it's not just, computer science is not just using computers, right? It's actually that logical thinking, critical thinking. And if you're going to work with AI systems and AI generated code, guess what? You'll need more of it.
Mm-hmm. I mean, OC, you run a company called Code with Klossy.
Yeah,
so
I
I'm
get
assuming
this
you think
a lot.
so. Yes, but
yeah, no, I would just concur. I think even if you paint the picture to its logical conclusion, right, and say in X number of years we're going to have fewer people hands on keyboard producing code, but we're going to have lots of AI agents that we need to orchestrate. To Aparna's point, to be a successful orchestrator, you need to actually be able to think computationally. You need to be able to decompose problems, find the white space, find the problem to solve, think how to create abstractions. Is the agent actually producing the thing that you want it to produce? And so the act of learning to code is actually creating core durable skills that I think will be lasting, even in the age where you're not having tons of hands-on keyboard time.
It can't be a one-way street, and it won't be. And I am building relationships with nonprofit leaders, with labor leaders, with business leaders. I'm building relationships, fortunately or unfortunately, with people on the street And it is a two-way street. There's no more that we're just going to hand things out and just let people do whatever they want. I want to have people coming in. I want to welcome them with open arms. And then, like I said, I want them part of San Francisco, part of the fabric of this city. If you're a CEO, you want your employees liking where they work. I just had one of the executives, the CEOs that I talked about earlier, tell me that they did a survey of their employees about where they wanted to be in the Bay Area. San Francisco was where they wanted to be because of our arts and culture, because of the restaurants, because of nightlife, because of these entertainment zones. And so what we learned is you can't just do a handout without any obligation and responsibility.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I don't think there's a bubble in private credit. I do think that there is the potential of some dislocation in that market, and I think that there could be some accidents because we've put so much money out so quickly.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from New York City, 25 seconds away from the payrolls report. Just so used to, just want to get there, and it's not happening. It's not happening. Your scores look like this. Equity futures positive by 0.1% on the S&P, and the Nasdaq up by 0.1. The opening bell about 60 minutes from now. You're still kind of on jobs report watch, aren't you?
Yeah, I keep refreshing
Just
Donald
in case.
Trump's Truth Social.
I can tell you the estimate's 53k. The previous number was 22, but we're not expecting one because of the government shutdown. We'll see if we actually get one, but not expecting one. As we count you down to the opening bell in about 60 minutes' time, let's get you some single names, some morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. This is where the excitement is, maybe. Apple shares declining this morning. A downgrade from Jefferies to underweight. They had it on hold before, saying that there was excessive optimism about the refresh cycle for the new iPhones, that essentially they kept prices as is, which is maybe why they're generating some excitement about it, but also that there would be lower prices in effect for the base 17 model. And all of that is already in the price, but just too much enthusiasm, they say, in the valuation. So shares down 0.8%. Elsewhere, Applied Materials continues to fall this morning. They issued yesterday a filing saying that the Trump administration has, specifically the Commerce Department, has expanded their restrictions on exports to China. They, of course, make the machines that make chip makers. So those shares down 2.3%, just under that, as they expect a $600 million hit to their fiscal 2024. Finally, rounding things out this morning with USA Rare Earths, a CNBC report that they've been in conversations with the Trump administration about a potential deal. So those shares surged 12.8% after a string of other deals with rare earth mineral producers and the Trump administration. John.
Danny, thank you. Appreciate it. Thanks for this morning. More from Danny in about 30 minutes' time, alongside Matt Miller for Bloomberg Open Interest, counting you down to the opening bell about 59 minutes from now. No payroll data so far today. Not expecting any because of the government shutdown. Joining us now to discuss is Bloomberg's Mike McKee. Mike, it's an odd one, isn't it? We haven't done this for a while. I think the last time was 2013, was it, to have a delay like this?
Yeah, because we got the numbers in 2019 when they were shut down. It's kind of weird because Jobs Day, and you go to Danny first.
It's not personal.
John, well, we have disappointing news for you in terms of the jobs report. No jobs created or lost because we don't have any data. As you mentioned, the government shutdown. If we had data, it's hard to know exactly what it would have been because the alternative data sources that we look at have very different views. The Bloomberg consensus was for 53,000 jobs. Revelio suggested we'd get 60,000. ADP suggested we'd lose 32,000. So So who knows? The Chicago Fed unemployment proxy, 4.3%, would have suggested no change. So if the Fed goes with that, they'll probably be okay. And I want to point out that all this comes from WSLALTE Go on the Bloomberg. That is where you can find a huge long list of alternative data, and everybody's looking at that these days. We do have to worry about going forward where we go from here, because everybody has to have something to trade on. The shutdown delays the CPI report on October 15th, maybe. That would not be good for the Fed or for futures trading. And if we go too long into October, the jobs and CPI data collection could be imperiled, because we won't be able to collect that data if there is nobody to collect it. We could also see unpaid contractors under the shutdown start widespread layoffs. And of course, we have this threat of Trump firing thousands more federal workers. So the labor market, you could safely say, I think, is in turmoil at this point. Danny said Apple is where the excitement is today, and so go with that, because we haven't got it in the labor market at the moment.
Mike, do you think that NEC was given the labor market report, though, yesterday, as they normally are?
No, they wouldn't be under the circumstances, because nobody is at the Labor Department or the BLS to give the report to the commissioner. The commissioner gets it on Wednesday, and the government was shut down then, so it would not have been transmitted over to the White House.
Mike, looking forward to your conversation in about an hour from now. I think it's at 9:30 on Bloomberg TV with Governor Myron, the man of the moment on the FOMC. Mike, what have you got in mind for this conversation? And what have we learned so far about how the Fed's going to guide itself towards this big meeting at the end of this month if we don't have this data?
Well, what they're going to have to do is go with their best guess and go with what they think they have learned from talking to CEOs and companies around the country in terms of where we're going. The general feeling in the markets is because there is no data.
ओए गाइस, ये एसएल जा चुका है नेचुरल गैस में। किया ही नहीं इसने रीटेस्ट, थोड़ा बहुत रुका जरूर, बट मच नीचे एग्जैक्ट सपोर्ट है, वहीं तक आने देते हैं, वहां से ट्राई करेंगे। ठीक है, रीटेस्ट हो गया, रिमूव, इसको अब कंसिडर ही मत करना। एसएल गॉन, ओके, डोंट होल्ड। ब्रेकआउट किया था क्या इसने कल? नीचे एग्जैक्टली सपोर्ट पर ही है अभी, यहीं से बाई करेंगे। बाकी डेटा आने वाला था, वो तो आया नहीं। एक बार देख लेते हैं फिर भी उसको। डेटा ठीक है, 6 PM पे डेटा था, नहीं रिलीज़ किया। यूएस गवर्नमेंट शटडाउन है, उस वजह से रिलीज़ ही नहीं किया। तो अब सीधा 7 PM पे यूएस मार्केट ओपन होगा और 7:30 पे फिर सर्विस PMI का डेटा है। 6 PM का इंपॉर्टेंट डेटा था, वो आया ही नहीं, रिलीज़ ही नहीं किया यूएस गवर्नमेंट ने। नहीं पर्सनल ब्रेकआउट हो गया था एक था
early innings with the drag on the economy from the tariffs.
Seth, is it momentum because they have this money to spend, or is it angst because they're worried about prices going up because of the tariffs? And I say this coming from a family that was doing Christmas shopping in May.
Great question. And if I go back through the database of periods of really high inflation over the past 35 years, Oh, wait. We don't have a lot of experience with this. I think it could be some of everything. There's no reason for us to choose one versus the other. When there is this disconnect, though, between current spending and the trajectory of the labor market, I think the evidence suggests we should expect the labor income reduction to eventually win. And so that's why we're thinking the strength in spending is temporary, not going to be sustained for the rest of this year and into next year. But it's a real puzzle.
If you don't think it's going to be able to be sustained for the rest of this year, what kind of Christmas sales are we going to be looking at and holiday spending? Are people just going to hit a little bit of pause?
I think that's a real possibility, and we are looking for Q4 of this year and Q1 of next year to be the real slow points in terms of quarter-on-quarter growth. But Christmas, it brings back the same sort of questions that you brought up. Did people front-load Christmas shopping, in which case you'd expect weaker spending? Or is it possible instead that with people feeling anxiety, they try to make themselves feel better by having a better Christmas? This is one area where, as macroeconomists, we have much less visibility, and we at Morgan Stanley try to connect with our colleagues in the single-name equity research space to try to get a better read from the bottoms up from the actual retailers themselves. So this is going to be a question I guarantee you over the next month or two is going to be absolutely critical for us.
Seth, just before you go, I don't know if you saw the note that came from Torsten Slok of Apollo earlier this week, where he said the economics profession needs to take a long, hard look at itself in the mirror, that this economy has been much more resilient than people thought, and betting against it ultimately has been a fool's errand. He says later on in the note, he talks about waiting for something that happened 6 months ago to see the consequences of it. Do we need to question that a little bit more, Seth? That's what he was alluding to. How are you thinking about this process that you and I have discussed now for 6 months? Are we just waiting for the consequences of something that happened a long time ago, and we'll just be sitting here waiting and waiting? Or are we actually going to start to see real signs of it in the months to come?
No, it's a great question, and Torsten always is very thought-provoking. I've actually known Torsten now, I realize, for 30 years. I looked in the mirror really hard, and I wanted to look more like Jonathan Farah, and so here we are. It's a great question. I'm an egg-headed, academically trained economist. I try to look at things through statistical models in addition to lots of other ways. There's the famous saying about monetary policy working with long and variable lags. I think all the estimates there is it takes 2 or 3 quarters before a monetary policy shock hits the economy and 2 or 3 quarters after that before it hits inflation. We are used to, as a profession, thinking about these long lags. We don't have anywhere near as much experience with tariffs, and so that's why we try to go back to the evidence we have from 2018, 2019. And the evidence there was it did take a couple of quarters, and then the effects were very long-lived. Manufacturing, industrial production data, manufacturing employment in the U.S. got hit when the tariffs were in place in 2018. We saw the fall late in 2018 there, and it continued to contract all of 2019. So it was a very, very, very long-lived process. That's our base case this time around, but could we be wrong? Absolutely. We are trying to use all the available information, but these are very difficult circumstances to forecast in.
Seth, it's good to see you. And just for the record, you wear it so much better than I do. Seth Carpenter of Morgan Stanley. Seth, thank you. Good to see you, buddy, as always. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Bonnie Quinn. Hey, Bonnie.
Hey, John. Thank you. A senior Hamas official says the group will respond to President Donald Trump's plan to end the war in Gaza, quote, very soon. The official said Hamas rejects a take-it-or-leave-it approach to the proposal. He added the group will not accept the surrender of the rights of the Palestinian people after all their sacrifices. Bridgewater Associates' flagship macro fund surged 26% in the first 9 months of this year. Sources telling us here at Bloomberg that the hedge fund is on track for its biggest gain since 2010. Overall, hedge funds have seen strong gains this year, driven by surging U.S. share prices and volatility spurred by President Trump's tariffs. A Rolex worn almost a century ago by the first British woman to swim the English Channel will be up for sale. Mercedes Gletzke's Rolex Oyster is considered to be the world's first practical waterproof wristwatch. The watch could fetch over $1.3 million at Sotheby's auction in Geneva, November 9th. That is your Bloomberg Brief. John.
Vonnie, thank you. Thanks for this morning. Appreciate it. Up next on the programme, we'll set you up for the day ahead. Plus, we'll touch base with Jeff Rosenberg of BlackRock from New York City. You're watching Bloomberg TV.
Governments make the commitment for net zero. Companies have begun to do the work of looking down their supply chain. I'm not sure. I think that while there isn't the intense activity around accelerating ESG, it is not a stop. In fact, I wouldn't even say that it's a pause. I think it is a how do we do it in this current environment? I mean, it's only 3 short years that Thailand hosted APEC, and the thematic from that APEC to subsequent ASEANs to to so many of the bilateral engagements that we've had is really how are we going to do this just transition? How are we going to transition our economies from energy systems to data systems in a way that's going to get us to a net neutral world, right? I mean, a net zero world. I don't think that that's going to change. I think that there are adjustments to this. All the companies that I have been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going. And if you look at policies, like in Europe, they've got CBAM, right? I mean, the carbon border adjustment. Different governments have put forward commitments to getting to net zero. And I'm not seeing any giant signal around the world that is saying, let's stop doing this, right? I mean, so if that signal is still there, that is actually, I think, one area of predictability for businesses and investors that is still directionally where we're going.
Used to be one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises and IPOs. How much?
We've been in this low hire, low fire labor market. I wouldn't just say because historically it hasn't mattered. If it starts to actually, there are layoffs here, I think we have to start thinking that the labor market's much weaker. We're already a little fragile.
That was Priya Misra of JP Morgan. Just as equities turn flat and unchanged on the session so far, just about going nowhere. Likewise on the Nasdaq 100, the Russell 2000 just about positive by 0.2%. As we count you down to the open and bell, it's about 43 minutes away. Your trading diary into the weekend and a sneak peek of next week looks like this. At 9:45 Eastern Time, the PMIs. 15 minutes later, ISM Services. That's the big data point really now going into the weekend. Plus then you've got a Senate vote at 1:30 Eastern Time. The government's still shut down, likely to be shut down going into the weekend. They're coming out the other end next week. Next week, we're looking for the following. I don't know what we will get and won't get, but the trade balance is due on Tuesday. Wednesday, Fed meeting minutes. Thursday, Delta earnings. Plus we are due for another round of jobless claims. And on Friday, Friday. You, Mitch, consumer sentiment into the weekend, and sentiment has been soft.
Sentiment has been soft. I think the only thing really there that's most interesting to look forward to for likely going to be in this shutdown is the earnings. What is a company like Delta saying in terms of where they are with consumers? We know that the high-end consumers, the business class, they continue to spend. But also, are they seeing issues with the government shutdown? Is the FAA having issues in terms of whether or not these airlines are delayed and how that's working around the country? So I think that's going to be actually the most interesting data point.
Based on the economic data so far, not great. But based on what we've heard from the airlines, things are pretty tremendous, arguably because of what's happening with the upper-income consumer. We heard from United, Delta. Anyone that Bramo speaks to in the airline space at the moment is basically telling her things are pretty good at the high end.
They're pretty good because of the high end. And the high end is basically lifting all boats when it comes to the airlines. The issue is the airlines that are catering to some of the lower-end cohort not doing as well. But the Delta, the American Airlines, JetBlue, they're pretty doomed.
Let's get you to the opening bell. Let's turn back to markets. So the S&P 500 is looking for a 6th consecutive day of gains. It's on a 5-day winning run, the longest streak going back to late July. Jeff Rosenberg of BlackRock has this to say: we believe the current market backdrop masks the high level of dispersion embedded within the economy today. Jeff joins us now for more. Jeff, welcome to the programme, sir. No payrolls. We're going to have to get knee-deep in all the other stuff. Jeff, I think that what you just said in that quote kind of builds on what we were discussing with regards to the airlines. How much dispersion are you seeing?
Yeah, this is really about the difference between what you're seeing on the top line and the headline and what's going on underneath. And we've talked about it a lot. You know, when we do have payrolls or when we do have FOMC meetings, when Tom's with us, we talk a lot about the K-shaped recovery, about the differences between something you were just talking about, the top end and the bottom end. And you see that both for consumers, but also within businesses. You have the winners and you have the bottom end that is struggling. And that is the recipe for dispersion. And so when you take away kind of the big headline that we might have been talking about today, which is this good for the economy, bad for the economy, are stocks going up, stocks going down, you go underneath the surface and there's a tremendous amount of churn going on underneath. And that, when you take away kind of beta investing and you focus on alpha investing, has created a tremendous amount of opportunity. And you see that in some of the returns that look at, say, factor returns, stripping out kind of directionality in the markets.
When you joined us in July, you were talking about a tricky environment ahead for the Fed. How tricky is it now that they might miss an entire month of data?
Yeah, so if we shift back to kind of the data problem, it's tricky for the Fed. It's tricky for us in investors. You know, I was going to suggest that, you know, if we wanted to look at, and maybe your producers can do this quickly, the one area that might be benefiting from this lack of data is interest rate uncertainty. So maybe put up a chart of the MOVE index, which has collapsed here. But you look at kind of what we've been talking about this morning around the lack of data, and you have a lot of disagreement. The good news is you've got a lot of alternative data, but kind of the bad news is none of us can agree as to what that alternative data means. A good example is, I saw this morning 2 different estimates from alternative data, one using state filings, the other looking at extrapolating initial claims forecasts off of Challenger layoffs. They came up with completely different conclusions. Another example on the earlier segment, you were talking to Manpower, talking about switchers and the lack of switching, but you look at the Atlanta Fed wage data and, you know, switching wages actually went up a little bit. So in the cacophony, I think the benefit might accrue to uncertainty, although that doesn't make the Fed's job any easier.
Well, if you had to decide what your top 3 data points were, what would they be?
You know, when we're talking about the payroll data and the lack of payroll data, you know, I'll turn to the wage data and looking at inferences from that. We have the Atlanta Fed wage data. We have a lot of private sources in terms of what you can scrape. I'd like that alternative data. We've used that a lot in terms of both frequency and turning points. That would be, you know, kind of data point number one. I think, and Jonathan, you made reference to this earlier about about the inflation data and, whether we're going to start to lose some of that. I think the good news there is that with the web scrape data, we have a lot of, kind of consistency around what people are looking at in terms of alternative forms of data. People talk about the price stats data. I think that's a good form. And then I think the pivot to the private data that you mentioned, where we hope we'll continue to get that. The survey data, the PMIs, they take on a heightened, importance in this environment of the lack of the government data. We have to caveat that with the notion that the kind of accuracy that we've seen from the survey data, the PMI data, in terms of its importance for this kind of economy, that's really kind of gone down, and we've seen a decrease in the correlation between the PMI data and say the industrial production data in this cycle. So that's sort of a caveat to that third data point.
Jeff, we've talked about 5, 6, 7 minutes about economic data. If I'd given you the payrolls data at the start of the year for the next 9 months, I think you would have traded this market in completely the wrong way. So I just wondered, Jeff, what is the relevant data point right now? Because clearly some data is more important than others.
Yeah, that's absolutely it's absolutely the case, and it's the classical sort of break between kind of growth and inflation, and the pivot as to which one has the focus of the market. And going into before we had the shutdown, the other conversation would have been that this is the pivot away from the inflation concerns towards the growth concerns, and that the kind of top tier data point on payrolls is giving us that read on the growth, and the Fed's pivot towards a focus more on the growth and less on the inflation. And I think that's kind of the read here, in contrast to the beginning of the year where the focus was on inflation, the impact on tariffs and tariff pass-through. We really shifted that focus. And I think that's really the driver behind the directionality here in interest rates. Really the fear and the concerns to your earlier conversation with Seth Carpenter around, is there this lagged slowdown, the lagged effect? Remember, the tariff impact that Seth's talking about is not about the inflation piece, but it's on the real wage piece, that the temporary, even if it is temporary impact in terms of the inflation from tariffs, its impact is on real wage growth, and that's really about the growth side, and that's what's driving the rates markets right now.
Jeff, love catching up with you. It's just a bit odd without payrolls data, isn't it? It's kind of strange.
It is odd. Hopefully we'll get that back soon.
And when we get it back, we'll get you back, sir. Jeff Rosenberg there of BlackRock. Jeff mentioned the MOVE index, bond market volatility getting absolutely crushed. He's trying to produce the show now. The control room can respond. Here's the chart. This is what it looks like. It really has grinded lower as this year has progressed. That's been a steep, steep drop-off ever since the April 2nd Liberation Day story. I cannot believe it's been 6 months since then. I've said that a few times this week. That has been a blur. Think about the summer. July, August, September just zipped by.
Yeah, absolutely. This year has been like 10 decades in 1 year, and the year's not even over yet. And now we're dealing with a fresh amount of uncertainty in terms of, are we going to have a government that is operational, working? Will you be able to get to your flights on time? Will our men in service, women, get paid? These are a lot of questions going into the weekend. 1:30 is going to be interesting. Any Democrats, moderate Democrats, start to flip and vote with the Republicans to just keep the government open?
Has there been enough pain net generated to tip them over the edge, over the line?
Not yet, but I think next week there will be. You have to watch the senators in Virginia and Maryland. This is where the furloughs are coming from. All 8 of them, 4 of them are Democrats, so they have an opportunity there to push this over the edge.
When's the next game?
Saturday. Blue Jays. Let's go.
All right.
Cheers.
Long weekend for you then, right? We'll see you Tuesday.
Exactly.
Okay, good for you. All right, coming up on Monday, we'll be here. Andrew Sheets of Morgan Stanley will be too. Paul Donovan of UBS, Amanda Lynham of BlackRock, Lindsay Piegza of Stifel. From New York City, thank you for choosing Bloomberg TV. Have a wonderful weekend. This was Bloomberg Surveillance.
They're just not sitting around waiting for politics to dictate what's important here. It has already been a leader and is continuing to be so.
People come to me and say, oh, Trump's been, sort of saying, well, we shouldn't be focused on this. But yet the corporate world knows that it needs to support this.
Asia's role in global supply chain allows it to influence the transition in ways that many other regions cannot.
All the companies that I have been talking to, they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going.
Our focus is really to understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Another rally on our hands to end the week. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, the global stock rally continues, a sixth consecutive day as another round of big-ticket AI deals and partnerships stokes fresh optimism.
Goldman CEO David Solomon adds to that optimism. He tells Bloomberg that the U.S. economy will accelerate next year as the tech spending picks up.
And the view from the Federal Reserve. Fed Governor Stephen Miron joins us live here in the studio at 731 Lexington Avenue as the government shutdown enters day 3.
A conversation you don't want to miss, again, to your point, happens in about 30 minutes time. But ahead of that, we do have some stocks on the move this morning, Matt. Applied Materials being one of them, down 2% in the pre-market trade. They're warning that U.S.-China trade restrictions will cost the company in the coming quarters. Specifically, they said it's going to lead to a $600 million hole in their fiscal 2026 revenue. Of course, Matt, they make the machines that make chips, hence why there's some restrictions on what they can sell to China.
All right, well, one company that doesn't have those restrictions is Tesla. They want to sell as much to China as they can. The shares are rebounding after actually closing down more than 5% yesterday. Remember, third quarter deliveries blew past estimates, but traders are concerned about future demand and perhaps the China concerns playing a role in that as well. Nonetheless, we have the shares back up more than 1% in the pre-market at 441. Danny?
Still, it is a day, another day, I should say. Every day feels like a day where there's some sort of AI deal happening. BlackRock's global infrastructure partner is in advanced talks to acquire Aligned data centers, which could be valued at $40 billion. Goldman Sachs CEO David Solomon says that these announcements are driving the U.S. economy.
Governments are spending enormously into economies in the developed world, and that keeps the economy going even when you have other headwinds. Second big macro phenomenon that's affecting the U.S. economy is all of the AI infrastructure build, all the capital spending, all that's going into the ground to support the deployment, the development, the continued growth of AI infrastructure into the enterprise, and that's a big tailwind too.
Jeff Bezos also weighed in on the AI spending. He says what's happening right now is an industrial bubble akin to the biotech bubble in the 1990s. He thinks it will ultimately pay off, and, quote, the benefit to society from AI are going to be gigantic. Joining us now is Bloomberg Tech co-host Ed Ludlow. I'm not sure if Bezos knows what a bubble is. If he says
also,
it's
isn't Jeff Bezos and Amazon like one of the biggest builders of all this stuff? I didn't really understand that. Sorry, keep going.
Well,
I was like, what?
I think his assumption is that Amazon's not a loser, but everyone else is. But there has been day after day.
I'll run some checks on that. I don't know, but you know, like the BlackRock GIP story is really important, and the specifics of it too. So they would acquire this entity with a $40 billion valuation, but look at the people that in parallel would take a stake, which is basically the same characters that keep coming up from the UAE in this case. They've also already taken quite significant investment from Macquarie. What Aligned does is it does the building and location and management of the building of a data center. Like when I say the building, I mean literally the box, right? And the thing that we need to understand about this story is that there are all these forecasts. The one you might be familiar with is $4 trillion market, but that's just for the compute over the next sort of 4 or 5 years. If you include the concrete, the materials, the labor, the electricity supply, the cooling, the water, that's another 3 trillion. And this story is a clear example of Wall Street and legacy finance kind of moving to be ready for the non-compute part of the story.
I think Jeff Bezos does know what a bubble is. I'm looking at the stock right now from 1999 and the 95% drop into 2001.
Yeah.
I mean, he was there for the first internet bubble, right? He was a survivor. Amazon's definitely a survivor and a winner. But there was a circular spending problem then as well. You know, there was an overinvestment problem then as well. We paid way too much to lay fiber, which wasn't really utilized for the internet boom until years later.
Also, analogous, debt was a big part of that story with fiber. Debt's quite a big part of the story now with data center.
Right. So do you hear people drawing parallels to the 1999 internet bubble with this sort of AI build out?
Spoiler, my newsletter on Monday is about this, you know, and I think what's so interesting is that the only argument is that whether or not you believe top line growth at software companies, the end customers of all of the AI development, justifies the initial investment or the debt levels. And there are loads that are sanguine about it and would say yes, yeah.
There's a lot of complications, though, in trying to figure out who the winners are. Also because just chip making in general. Chip makers have done so well, but there still is exposure to the geopolitics. And Applied Materials underscored this last night. It's still a difficult environment to navigate who does well and who doesn't, and who's subject to policy and who's not.
So the story here, through a regulatory filing, is Applied Materials telling us that the Commerce Department and BIS has expanded the export restrictions, catching more of Applied Materials business, and it will have a $6 million impact to net revenue. When you manufacture a semiconductor in a clean room, all of these companies represent a different stage of the process. Applied Materials is right at the beginning with the wafer layer when you're trying to layer it up, and right at the end when you're polishing it. And then in between you've got ASML, Lam Research, etc. The Commerce Department's argument is that if Applied Materials is able to go into China, then a SMIC or a domestic manufacturer fab will be more successful. So they want to restrict that technology. I would note that, like the downward pressure on the stock, Applied Materials has had a string of quite disappointing announcements that the street's getting a little bit fed up with. But I just think it's worth understanding, like, where Applied Materials sits in the process of building a chip. It's really core to it. And it's America's biggest chip equipment maker. So this is a policy thing. And the chances of the Commerce Department and BIS changing on that front, you know, who knows?
You don't have to wait until Monday, until his newsletter, to get more from Ed Ludlow. He is the co-host of Bloomberg Tech and will be anchoring one final show from here in New York before he gets into his first-class flight back to San Francisco. Now, large hedge funds are seeing their biggest gains in decades due to the global market rally. Bridgewater's flagship fund is on track for its biggest gain since 2010, up 26% in the first 9 months of the year, crushing the market. Bloomberg's Nishan Prashant Kumar, covers hedge funds for us here at Bloomberg, joins us at the desk. You visiting from London, great to have you here. I'm so happy that we can talk about a hedge fund that's outperforming even the S&P 500, because normally we have to make all these caveats that that's not their benchmark, right?
Yeah.
But they're doubling it.
Let's still say that that's not the benchmark.
Yeah.
Of course, Bridgewater, as you said, is having its, or on track to have its best year in 10 years, but it's not only Bridgewater. If you look at our table, which is of course not comprehensive, and these are just the first look within the first 2 days of the month, you have macro fund, you have credit fund, you have a systematic fund, you have multi-strategy. So all
and
sorts
a couple at
of
the bottom who just bought SPYs, right?
Yeah, but all sorts of relevant strategies are firing up, right? So it's in hedge fund, it's never about hot and cold, market for these hedge funds. You go to hedge funds to avoid that temperature differential. It's not about getting burnt or freezing to death. You are looking for a perfect spring throughout the year.
But what has been working? Because you could make the argument that just buying and holding has also been an outstanding strategy this year, whether it be in credit, whether it be in stocks. So what are they doing to add extra alpha when beta already looks fantastic this year?
Yeah, so the bulk of the portfolio for an institution, you can go to beta, but this is about what happens if the market crashes? What happens if 2008, which has been a very long time, and the history of markets will tell you that this time it has gone for too long, actually. So periodically it happens. What happens during those periods? That's why you buy hedge funds.
Well, and I mean, that will be the more interesting look, right? Seeing them outperform in a good year isn't as impressive as seeing them outperform in a crash. And it doesn't have to be 2008. It can be 2022.
Yeah, absolutely. We'll see. This year has not.
तो गाइस ये नेचुरल गैस में ना अब यहाँ से हो सकता है वापस सेलिंग ही आए, बिकॉज ये सिनेरियो कुछ ऐसा बना है. ये आपका रेजिस्टेंस था परसों, ब्रेकआउट हो गया था, फिर ऊपर रेजिस्टेंस पे चला गया था, वहाँ से सेलिंग आई. यहाँ पर एक्सपेक्ट था रिटेस्ट करेगा, रुका ही नहीं, वापस नीचे आ गया. तो इसका मतलब जो परसों ब्रेकआउट हुआ था फेक ही था, वो फेक ब्रेकआउट. तो इट मीन्स अगर ये फिर से रेजिस्टेंस में कन्वर्ट हो गया है तो हो सकता है वापस सेलिंग में कन्वर्ट होकर नीचे आ जाए थोड़ा बहुत. अनसर्टेनिटी है, नॉर्मली ऐसा होता तो नहीं है, देखा भी नहीं मैंने आज तक. नॉर्मली अगर कोई रेजिस्टेंस है, उसका ब्रेकआउट हो गया है तो वो रिटेस्ट करता है. अगर नहीं करता है रिटेस्ट तो फिर प्राइस गिरता रहता है अनटिल अनलेस कोई नया रेजिस्टेंस ना हो. बट इट माइट पॉसिबल अगर ये फेक ब्रेकआउट था परसों जो ब्रेकआउट हुआ था यहाँ पे, और प्राइस ने यहाँ पर रिटेस्ट तो किया नहीं है, रिटेस्ट करता तो ऊपर चला जाता. तो अगर रिटेस्ट नहीं किया, इसका मतलब अगर ये वापस नीचे आ गया है तो पॉसिबिलिटी है कि ये फिर से रेजिस्टेंस में कन्वर्ट हो जाए और फिर नीचे आए. इट माइट पॉसिबल. बट इसमें एसएल जा चुका है, ध्यान रखना, इवन दो कैंडल क्लोज नहीं हुई है, बट एसएल इज गॉन. ठीक है, अगर ये वापस रेजिस्टेंस में कन्वर्ट हुआ तो ये कुछ ऐसे गिरेगा वापस. ठीक है, रिटेस्ट अभी का रिटेस्ट नहीं है, पुराना रिटेस्ट है, ध्यान रखना, रिटेस्ट का रिटेस्ट नहीं कर रहे हम. अगर ब्रेकआउट ही फेक है तो कल वाला, कल मतलब लास्ट ट्रेडिंग सेशन में, तो फिर सस्टेन ही नहीं करेगा. इवन दो वहाँ पर कोई रेजिस्टेंस नहीं है. बाकी इसके नीचे भी एक और सपोर्ट है, वो भी लगा देते हैं नेचुरल गैस में, क्योंकि अगर ये इस वाले लेवल पे थोड़ा सा कंसर्न है अब। बिकॉज अगर ये वापस कन्वर्ट हो गया रेजिस्टेंस में तो प्रॉब्लम हो जाएगी। अगर जो कल ब्रेकआउट हुआ था लास्ट ट्रेडिंग सेशन में ये फेक है, तो जो कि है फेक ही लग रहा है। ब्रेकआउट हुआ था नहीं तो यहाँ से रिटेस्ट हो जाना चाहिए था, नहीं हुआ रिटेस्ट का मतलब फेक ब्रेकआउट था, वापस प्राइस नीचे आया है तो ये रिटेस्ट करके गिरना ही चाहिए लॉजिकली। 7 PM ही अब सीधा यूएस मार्केट की ओपनिंग, तो उससे आप ध्यान रखेंगे। इस पे एक सेलिंग का प्लान ही करते हैं। ठीक है, इसको एज अ रेजिस्टेंस मान के सेलिंग ही प्लान करो, इसमें और कुछ तो कर नहीं सकते यहाँ पे नेचुरल गैस में। क्योंकि मुझे लग रहा है ये रेजिस्टेंस में ही कन्वर्ट हो गया है वापस। जो सपोर्ट कल बना था, सपोर्ट मतलब रेजिस्टेंस जो बना था वो ब्रेकआउट फेक था उसका। बाकी अब देखते हैं ये नीचे वाले लेवल पे रुकेगा या फिर नहीं। ठीक है, यहाँ पर थोड़ा सा कन्फ्यूजन है मुझे खुद अभी, जितना समझ में आ रहा है उसके अकॉर्डिंग तो यही चल रहा है, क्योंकि ब्रेकआउट तो फेक ही है फिर अगर ये सस्टेन कर जाता है वापस नीचे, क्योंकि यहाँ पर कोई नया रेजिस्टेंस तो बना नहीं है। देर इज़ नो सच न्यू रेजिस्टेंस और कोई सपोर्ट हो उसका ब्रेक डाउन हो गया वो रिटेस्ट करे। परसों वाला ही रेजिस्टेंस था, उसका ब्रेकआउट हुआ था, नहीं कर पाया रिटेस्ट, वापस नीचे आ गया, तो इट मे बी एक्ट लाइक एज अ रेजिस्टेंस। लेट्स सी। एक नॉर्मल कैंडल पे यहाँ पर एक सेलिंग का प्लान करना, ओपन इक्वल टू लो पे मत कर देना सेल सीधा। बाकी अगर थोड़ा सा कन्फ्यूजन है, क्योंकि मुझे खुद कन्फ्यूजन हो रहा है यहाँ पर कि ये एग्जैक्टली रेजिस्टेंस में कन्वर्ट हुआ या नहीं हुआ, क्योंकि नॉर्मली तो ऐसा होता नहीं है। अगर वो रिटेस्ट नहीं किया, करना चाहिए था, नहीं किया, फेक ब्रेकआउट है, तो फिर नॉर्मली वहाँ पर कुछ होता नहीं है। फिर वो या तो नया रेजिस्टेंस क्रिएट करता है, फिर नेक्स्ट सपोर्ट एरिया तक जाने की कोशिश करता है प्राइस। डायरेक्टली एंट्री मत करना, ठीक है, वो कैंडल ही ओपन इक्वल टू लो है। डोंट एंटर डायरेक्टली इन ओपन इक्वल टू लो कैंडल। नॉर्मल कैंडल में कन्वर्ट होगी लेवल के नीचे तभी एंट्री होगी, अगर नहीं होती है तो फिर सेल मत कर देना नेचुरल गैस में। ठीक, बाकी यूएस मार्केट भी ओपन होने वाला है, देखते हैं। दोनों ही जगह ओपन इक्वल टू लो है, क्रूड में भी नेचुरल गैस में भी। सुजल गोयल जी, थैंक यू सो मच फॉर ज्वाइनिंग चैनल मेंबरशिप। कोई क्वेश्चन है तो पूछ लो। नेचुरल गैस में एंट्री मत करना डायरेक्टली ओपन इक्वल टू लो कैंडल पे। लेवल के ऊपर ही क्लोज हो गई फिर तो बनेगा ही नहीं एंट्री, फिर तो प्रॉपर मैनिपुलेशन ही कहेंगे, क्योंकि यहाँ पर एग्जैक्टली सपोर्ट पे भी नहीं आया है, पहले ही निकल गया, वहाँ पर कोई सपोर्ट नहीं है। जाना ही था ऊपर, पहले ही चला जाता। ऊपर ही क्लोज हो गई है most probably। ठीक है, हो सकता है कोई न्यूज आई हो, कैंडल बहुत बड़ी बन रही है, ओपन इक्वल टू लो कैंडल है वो भी डायरेक्टली। फेक ही ब्रेकडाउन दिया है लग रहा है मुझे, रिटेस्ट तो कर ही दिया है इसने। सी कैंडल बनी थी जब कल परसों ब्रेकआउट हुआ था। ये रेजिस्टेंस था एक्चुअली यहाँ पे, थोड़ा बहुत सेलिंग भी आ रही थी, फिर क्लोज होते होते 9:30 के अराउंड ओपन इक्वल टू लो बनी, सीधा रेजिस्टेंस नेक्स्ट रेजिस्टेंस पे चला गया था। एग्जैक्टली सेम सेटअप था, ठीक है। बट इसको रिटेस्ट मत मानना, ये रिटेस्ट में ऑलरेडी ऐसा उड़ा चुका है। एंड मोस्ट प्रॉब्ली जो मैंने बताया, ये कोशिश नॉर्मली इस तरह से जाना चाहिए था, फिर अगर इसको रेजिस्टेंस को वापस रेजिस्टेंस में ही कन्वर्ट करके रखना है, फेक ब्रेकडाउन था तो। बट लग रहा है सडनली ओपन इक्वल टू लो कैंडल बनी है और ये सपोर्ट पे भी नहीं आया एग्जैक्टली। सुपर मैनिपुलेशन है। ऊपर रेजिस्टेंस जरूर है एरिया ऑफ इंटरेस्ट पे, वहाँ से फिर से रिजेक्शन ले रहा है, बट ये डेफिनेटली कैंडल न्यूज़ बेस्ड ही है। दोनों ही जगह ओपन इक्वल टू लो कैंडल है। यूएस मार्केट से पहले ठीक है, एक केस मुझे यहाँ पर और दिख रहा है, ये क्रूड ऑयल में हुआ था शायद। ठीक है, रिसेंटली एक क्रूड ऑयल में हुआ था सेम केस ऐसा ही ना। यहाँ पर एक प्राइस में एक आपका रेजिस्टेंस एरिया था, ब्रेकआउट हो गया था, फेक ब्रेकआउट था वो। प्राइस जब वापस नीचे आया, रिटेस्ट वगैरह नहीं किया, लेवल के नीचे कैंडल क्लोज कर दी थी, सस्टेन किया था लेवल के नीचे, तो फिर उसी लेवल से वापस सेलिंग आ गई थी प्राइस में। क्रूड में दिखाया मुझे एक केस ऐसा। एक और देख लेते हैं, अगर एक दो केस मिल गए तो इसका मतलब होता है अगर फेक ब्रेकआउट है किसी रेजिस्टेंस या सपोर्ट का, ब्रेकआउट या ब्रेकडाउन, और प्राइस अगर रिटेस्ट नहीं कर रहा है तो इट मीन्स वो वापस अपनी ओरिजिनल पोजीशन में आ गया है। तो वो जो सपोर्ट था सपोर्ट की तरह ही काम करेगा, या रेजिस्टेंस था तो रेजिस्टेंस की तरह ही काम करेगा। यहाँ पर मैनिपुलेशन है, कैंडल ही देख के लग रही है ओपन इक्वल टू लो जिस तरह से बनी है। ठीक है, यूएस मार्केट ही देखते हैं अब क्या करती है। हाँ, क्रूड वालेगा, क्रूड का नहीं नहीं कर सकते हैं, ऐसा भी नहीं है। जरूरी नहीं है सपोर्ट रेजिस्टेंस पे ट्रेड किया जाए, ट्रेंड लाइन पे कर सकते हो, इंडिकेटर पे भी कर सकते हो। इंडिकेटर बट मेरे अकॉर्डिंग थोड़ा सा लेट सिग्नल देते हैं, चाहे आप कोई भी इंडिकेटर यूज़ कर लो दुनिया का उठा के, वो प्राइस मोमेंटम के बाद ही मूव करता है, प्राइस के साथ मूव नहीं करता। लेकिन अगर आप सपोर्ट रेजिस्टेंस को एग्जैक्टली ट्रेड कर रहे हो तो वो कैंडल ही देखनी है आपको, और कुछ करना तो है नहीं। कैंडल जहाँ मूव करेगी आपको प्राइस लिक्विडिटी के अकॉर्डिंग ट्रेड कर देना है बस। हाँ, बट मैनिपुलेशन तो कहीं पर भी हो सकती है, तो उसमें कुछ नहीं कर सकते। बाकी सिल्वर और गोल्ड को देखोगे तो सिल्वर अगेन, इवन दो डेटा नहीं आया आज, रिलीज ही नहीं किया उन्होंने, बट सिल्वर वापस से MCX देखो या फिर इवन फॉरेक्स ऑल टाइम हाई इंडियन मार्केट के अकॉर्डिंग, और सिल्वर फॉरेक्स में भी 47.85 जो रिसेंट हाई बना था परसों वहीं तक रीच कर गया वापस। तो जितना फॉल आया था सारा प्रॉफिट बुकिंग चला गया ऊपर को जितनी होनी थी। सुपर बुलिस अगेन, गोल्ड का भी वही हाल है, ऑल टाइम हाई अगेन टच करने ही वाला है, ऑलमोस्ट 3883 पे पहुंच गया है। एक तो रेजिस्टेंस ही नहीं बन रहे हैं, तो जितना सेल ऑफ आ रहा है सब प्रॉफिट बुकिंग है। कोई मेजर रेजिस्टेंस जब तक बनेगा नहीं, फॉल ही नहीं करेगा बड़ा। कल भी जो परसों फॉल आया था ऐसा लग रहा है कैंडल देख के प्रॉफिट बुकिंग ही हुई है, क्योंकि कोई भी कैंडल पुल बैक में गई ही नहीं है। सारी रेड कैंडल थी जो परसों फॉल आया था, कल सॉरी, इंडियन मार्केट तो बंद था लेकिन यूएस मार्केट ओपन था। तो ऑल टाइम हाई से 3890 से जो फॉल आया दैट इज कम्प्लीटली प्रॉफिट बुकिंग। फिर लोअर एंड से जिस तरह का कंसोलिडेशन हुआ है वो फिर से बायर एक्टिवेट हो गए थे। लेट्स सी फिर से कोई रेजिस्टेंस एटलीस्ट 15 मिनट में बनाते हैं या फिर प्राइस जाता रहता है। एक और ऑल टाइम हाई की ओर। के 4 मिनट रह गए यूएस मार्केट ओपनिंग में। कि नीचे आता है तो गोल्ड 3850 के अराउंड 840 के अराउंड वापस सपोर्ट है। यहाँ से तो ले लिया सपोर्ट ऑलरेडी, अब वहीं रुकेगा। 2 बार ले चुका, अगर हायर हाई नहीं बनता है तो भी टफ। ये ऑल टाइम हाई के रेजिस्टेंस पे है वापस गोल्ड, अब या तो ब्रेकआउट ही कर दे $3,895 का, तो एक फ्रेश बाइंग आ जाएगी, नहीं तो थोड़ा बहुत हो सकता है सेल ऑफ आई यूएस मार्केट में। देखते हैं क्या करता है। जिस तरह से बाइंग आ रही है कंटिन्यूसली, थोड़ा पॉज तो करेगा शायद इस लेवल पे गोल्ड। 2 मिनट मार्केट ओपनिंग, 2 मिनट लेफ्ट, ओनली 2 मिनट लेफ्ट। एक बार नेचुरल गैस को यहाँ भी देख लेते हैं। Okay, 1 minute left, 20 seconds left, 25 seconds left. ओके हो गया यूएस मार्केट ओपन। पर इससे रह गया एक नेचुरल गैस, नहीं तो बाइंग ही कर लेते अगर नीचे आ जाता, तो वो भी नहीं आया। रेंज ही लग रही है मुझे तो अब इसमें, ऊपर का भी ब्रेकआउट होना मुश्किल है। 310 ऊपर और सेल करें।
Mike, take it away.
Well, good morning, Steve. Thank you for joining us on.
फुल फॉर्म ऑफ AOI, एरिया ऑफ इंटरेस्ट। मेरी वॉइस बहुत कम आ रही है, अब सही आ रही मेरी वॉइस? माइक तो सही है, वॉइस कम आए तो बता दिया करो, मैं धीरे ही बोलता हूँ एक्चुअली। नाउ आई एम ऑडिबल सुजल गोयल जी, या फिर वॉइस अभी भी नहीं आ रही है? कमेंट बॉक्स में बता देना वॉइस आ रही है नहीं आ रही है। वॉइस कम आए तो कमेंट बॉक्स में बता दिया करो वॉइस। आ रही है वॉइस? बढ़िया, चलो। नेचुरल गैस में मुझे अब सपोर्ट नीचे ही लग रहा है शायद इसका, या तो ये वापस गिरने ही वाला है पक्का। ब्रेकआउट करना है तो ऊपर ही है, मेजर रेजिस्टेंस अब 311 310 के आसपास। टू 88 के आसपास आके मानेगा लगता है। ठीक है, यही है स्ट्रॉन्ग सपोर्ट अब फिलहाल के लिए 288 के आसपास, अनटिल अनलेस और कोई सपोर्ट नहीं बन जाता। लेट्स सी फॉरेक्स में है क्या सपोर्ट। रेजिस्टेंस पे क्लोज हो गया था, अगले दिन गैप अप ओपन हुआ, ब्रेकआउट हो गया, तो ये रीटेस्ट किया था इसने, समझ गया। ठीक है, अब इस रीटेस्ट लेवल को रिमूव कर देते हैं, इसकी ज़रूरत नहीं है। उस पर ट्राई करना इस लेवल पे, लेट इट गो।
and future of hitting its inflation target.
Governor Martin, you've been extremely transparent with your view and have been very generous with that. You've always been very transparent with your views. You're probably the most prolific social media poster of anyone that the Fed's ever had. In 2023, I saw you had tweeted something out saying basically the case against adjustment cuts is that financial conditions have eased massively and policy works via financial conditions. Real rates don't exist in a vacuum. Given that view, the fact we have record high stock prices right now. Is it a sign of unsustainable froth, of even a bubble that will make bringing down inflation that much more difficult?
Yeah, so that's a great point. Financial conditions are the channel through which monetary policy works, and so they matter when you're thinking about where monetary policy should be set. Now, as we were saying a moment ago, my view is that last year neutral was much higher because immigration was much higher, because fiscal deficits were much higher than I expect them to be going forward. If you look at fiscal deficits this year, in February through August, which are the data that we have available, and that encompass after the policy space changed, they're about $400 billion at an annualized rate below where they were in the comparable period in the previous fiscal year, right? So fiscal deficits are coming in also, and that also helps drive down our STAR. So my view is that policy, even though financial conditions appear to be on some measures loose, policy has actually grown tighter because neutral has migrated down. Now, I do want to be clear that financial conditions can also be driven by a variety of non-monetary factors. There have been substantial changes to the supply side of the economy this year, both through the tax code and through the regulatory code, as well as trade renegotiation, right? All of that can affect financial conditions for non-monetary purposes, through non-monetary channels. And so it can be a little bit of a mistake to look at financial conditions and infer something necessarily about the stance of monetary policy, because they can be driven up by other things. And also, they're not all loose. I mean, you know, housing finance is arguably still a relatively tight channel.
But a lot of this view is incredibly forward-looking, and that's the point, right? That we're not looking at backward data. But is there any data that we could get, Governor Myron, that would change your mind, and would change your mind to have you believe that we should not be pushing towards more rate cuts right now?
Oh, absolutely. Look, my view is that services inflation is the most persistent and sticky part of inflation. A lot of my view about services inflation is driven by the housing sector, as shelter costs are the largest cost for most families. My view about shelter inflation, as I said, is driven by two things, as I said in the speech. One, the fact that average rents have finally caught up to market rents, meaning the catch-up period is done. You know, people don't reset their leases every day. They reset every year, every couple of years. And so that means that a change in market rents takes time to feed through to when it's experienced by households. When you look at the data, it seems to me that that catch-up period is done, which means that I expect shelter rents to come down, CPI rents to come down, bringing shelter inflation down. The second thing is the immigration shock that we talked about. My view is that immigration was pushing rents up in previous years, and now that shock has not only gone to zero, I think it's actually reversed. I think we have negative net migration when it comes to the United States this year, right? So my view is driven by two things. Services are the more persistent and sticky part of inflation. Services are driven in large part by housing, and I expect housing inflation to come down through those channels. If something were to happen that were to tell me that that channel is invalidated, that there's some shock that's going to be pushing rents materially higher, the benign inflation forecast that I have would have to be adjusted as a result. All else equal, right? If nothing else were to change to offset that. But to me, that's the core of my inflation view. And I would want to see something come along and tell me that that channel is wrong and that I'm thinking about it the wrong way.
I want to ask you about something in your speech that has confused a lot of people, including me. You argue that tax cuts are going to help lower the deficit by increasing economic activity. And at the same time, you argue that tariffs, which are taxes on the American people, are going to lower the deficit. You have, in one way, raising taxes and the other cutting taxes at the same time lowering the deficit. How does that work?
Yeah, so you know, it's important when you think about economics to think about the elasticities of supply and demand. And when you cut taxes on American production, whether that's labor or whether it's corporate income, you want to think about the elasticities of supply of those activity. And is it going to lead to additional labor supply? Is it going to lead to additional investment, right? And so that's the way that cutting taxes can actually generate economic growth in the United States. When you think about tariffs, again, you think about the elasticities of demand and supply. And in this case, American consumers and firms are the demand, and foreign producers are the supply. Now, the economic evidence is overwhelmingly that the elasticity of the demand in imports is much higher than the elasticity of the supply. Put another way, foreign producers are inelastic, right? You've got a factory in China or somewhere else, and it's stuck in China or wherever it is. It's installed capital. It's inelastic. Whereas American importers can alter their demand patterns. They could import from China, but they also could import from Vietnam, or they could make stuff at home. That flexibility gives them the ability to avoid
avoid the burden of the tariff. Now, this is just tax incidence theory in public finance, economics 101. And when you look at it this way, the argument that economists always reach, the conclusion that economists always reach, is that the burden of a tax, a tariff, a subsidy, anything, falls on the more inelastic party, right? Now, the evidence is overwhelmingly that the foreign producers are the more inelastic party because the factory is stuck in place, it can't move, whereas import demand can substitute across borders. So it is the case that the negative effects of any tariff fall on the more inelastic party, which is overwhelmingly the exporter and not the importer. And so as a result, the positive effects of tax cuts in the United States get felt by production and they increase economic growth, whereas the negative effects of raising revenue from tariffs get borne by the exporting country.
Well, we haven't seen any evidence in import prices that that's happening.
Well, import prices, as you're pointing, dollar-denominated import prices, as you're pointing out, have been relatively flat. However, people, I think you're alluding to an argument that people make, which is that you would see import prices decline if foreigners were reducing their selling prices. That's the argument you're referring to? Yeah. To me, that logic doesn't follow for two reasons. One, there's an implicit all else equal clause that's not being stated, and all else is not equal because we also had to move down in the dollar this year, which ought to increase import prices by a comparable amount. And so the fact that import prices look relatively flat could just be the increase in import prices from the weaker dollar just offsetting the decrease in dollar prices from the incidence of the tariff being borne by the exporter. The other reason why it doesn't really make sense to me is because I think that a lot of the importers of record are ultimately U.S. subsidiaries of foreign companies. And so you've got a Japanese or German exporter selling to the United States, but the exports are bought by U.S. subsidiary of them. So Mitsubishi Japan or whoever is selling to Mitsubishi U.S. or whoever, right? And then if this is the case, then what winds up happening is that the incidence ends up falling on the importer of record without necessarily pushing a decline down in import prices. And so I'm not exactly sure on the magnitude of this channel yet. It's something that I'm looking into, but it is a possible disruptor of that argument. But in any case, for sure what we're seeing is not a broad-based increase in consumer inflation as a result of tariffs.
Governor, I want to ask about a piece that Mark Summerlin wrote in the Wall Street Journal today. He previously of the NEC, under the Bush administration, basically says that the Fed suffers from the same kind of bias inherent in media or academia because it's so focused in the Northeast, right? We have 4 Fed banks between Richmond and Boston and only 1 west of Kansas, right? Only 2 in the South. He says there should be a Fed bank in Miami and Phoenix, which would make sense. He also points out that of the $600,000 donated by Fed staffers in the 2024 election cycle, 92% went to Democratic candidates. I assume that's because they're in the Northeast and they're underpaid relative to Wall Street. So can you make reforms, especially on those 2 issues, while you're at the Fed?
Well, look, reforms to the Federal Reserve, to the structure of the Federal Reserve, are ultimately an issue for Congress to take up and not one for me to address. But I do see part of my job as bringing fresh and out of consensus ideas to what can be, at times a settled way of thinking, and that's what I'm going to continue doing. And so, for example, you
guys, ये crude oil का जो trade लगाया है ना मैंने, and this is a high risk high reward trade. You can say that momentum नहीं हो रहा है, हो सकता है अब थोड़ा move कर जाए, but it is risky. Better था breakdown करके कभी थोड़ा आ जाता, but जिस तरह से consolidation कर रहा है, 50-50 चांसेस हम किसी भी डायरेक्शन में जा सकता है. बीच में कोई अब लेवल नहीं है, इसको भी कंसिडर नहीं करेंगे रीटेस्ट. सीधा ये अपर लेवल रहेगा जहाँ पर प्लान करेंगे अगर जाता है तो इस ट्रेड को ले रहे हो तो थोड़ा सा कम ही क्वांटिटी से लेना. इसके नीचे मुझे कोई सपोर्ट, मैं वही ढूंढ रहा था कि इसके नीचे भी अगर कोई सपोर्ट होता तो उसको देख लेते, बट इशू ये आ रहा है कि इसके नीचे 15 मिनट पे चार्ट ही शो नहीं कर रहा है और पीछे का, क्योंकि इतना पीछे प्राइस लास्ट टाइम 2 जून 2025 को गया था, बट वहाँ पर कोई सपोर्ट नहीं है, उसके पीछे का प्राइस ही शो नहीं कर रहा, बट डेफिनेटली कहीं तो सपोर्ट होगा तभी प्राइस रुका है. थोड़ा सा मैं इसका टाइम फ्रेम इंक्रीज करके नीचे का एक सपोर्ट लगाने की कोशिश कर रहा हूँ। 15 मिनट में मुझे नज़र नहीं आ रहा है वहाँ पर कोई सपोर्ट है क्रूड ऑयल के नीचे, तो इस ट्रेड को प्लान करोगे ना ऑप्शन मत लेना, मिनी ही ट्राई करना, इसलिए रिस्क ही लिख दे रहा हूँ पहले ही। और टारगेट बड़ा रख लेना, छोटे टारगेट मत रखना। रिस्की ट्रेड है तो एसएल जाएगा, तो 20 पॉइंट का एसएल भी जाएगा, तो टारगेट मिले तो ज़्यादा ही मिला एटलीस्ट। ठीक है, 30 मिनट में देख लेते हैं कोई सपोर्ट। 15 मिनट में तो नहीं है। यहाँ पर भी ना मुझे लग रहा है गैप अप हुआ है, तो कहीं ना कहीं कोई रेजिस्टेंस रहा होगा इसका ब्रेक। हाँ मिल गया 30 मिनट में। रेजिस्टेंस था उस दिन, गैप अप ओपन हुआ है आपका ये 2 जून को, सीधा गैप अप ओपन हुआ है, तो उस हिसाब से रीटेस्ट बनता है इसका। ठीक है, लेकिन ये 30 मिनट में है, 15 मिनट में तो नहीं दिख रहा है मुझे कुछ। बट 15 मिनट में भी होगा, ऐसा नहीं कि 30 मिनट में है तो 15 मिनट में नहीं होगा। लेवल थोड़ा बहुत ऊपर नीचे हो जाएंगे। ये 30 मिनट का एक सपोर्ट आप कह सकते हो। सपोर्ट क्या, रीटेस्ट ही हुआ ये। रेजिस्टेंस था, ब्रेकआउट हुआ, गैप अप ओपन हुआ है सीधा, तो इट बिकम अ रेजिस्टेंस था, गैप अप ओपन हुआ तो सपोर्ट बन गया। बट ये 30 मिनट का सपोर्ट है, ध्यान रखना, नीचे मैंने लगाया है। इट इज़ अ गुड सपोर्ट, यहाँ पर आएगा तो नॉर्मल बाई कर सकते हैं, कोई इशू नहीं है। बट ये जो मैंने ऊपर लगा रखा है ट्रेड, ये थोड़ा सा ध्यान रखना, ये थोड़ा सा हाई रिस्क ही है, तो उतना ही रिस्क लेना जितना ले सकते हो। नहीं लेना है तो अवॉइड भी कर सकते हो। ऑप्शन मत ट्राई करना बस, क्योंकि अगर साइडवेज गया तो उसमें कुछ मिलेगा नहीं फिर। देखोगे तो इंट्राडे में साइडवेज ही है, रेंज के अंदर क्रूड ऑयल कुछ खास गया नहीं है कहीं। 67 पॉइंट की रेंज में ऐसा फंसा हुआ है कि ना ऊपर जा रहा है ना नीचे जा रहा है। मोमेंटम बड़ा स्लो हो गया आज फ्राइडे के दिन। सेम नेचुरल गैस को भी देखोगे तो साइडवेज तो नहीं, वॉलेटाइल ज़रूर है। साइडवेज था, सेल ऑफ आया, रिकवर कर गया। नेचुरल गैस फ्यूचर डाउन अमाइड हाई सप्लाई माइल्ड डिमांड। क्रूड ऑयल का ट्रेड वही लेना जो रिस्क ले सकते हैं थोड़ा सा, 20 पॉइंट का। अगर नहीं लेना है तो फिर अवॉइड ही करो, कोई इशू नहीं है। फिर ये दो लेवल ही हैं अभी के लिए, ऊपर ये रेजिस्टेंस जोन पे या फिर नीचे सपोर्ट एरिया पे, इन दोनों पे ही बाई सेल करना, वो सबसे सेफ रहेगा। ये अभी ब्रेक नहीं हुआ है तो मान के चलो अभी भी होल्ड है, ब्रेक कर देगा तो देखेंगे। बाकी जिनको हो चुका है, ट्रेड ले चुके हैं, अवॉइड करना। लास्ट ट्रेडिंग सेशन है, फिर उस दिन देखते हैं।
You have problems on your hands.
Given the import that the president has attached
XTI USD, there was a gap between 60.28 and 60.48 on 31st May. It has been filled yesterday and price seems to be taking support from there. बात कर रहे हो आप? MCX में, सॉरी फॉरेक्स में हुआ है, बिल्कुल हुआ है, बट MCX में तो क्लोज था, तो मैंने लेवल MCX के ही लगाए हैं फिलहाल के लिए। MCX में तो सपोर्ट है ही एग्जैक्टली मतलब सपोर्ट क्या मानो इसको लास्ट सपोर्ट जोन बना दिया है।
Federal Reserve Governor Stephen Myron, as well as Bloomberg's Michael McKee, our policy and economics correspondent. I will add to our terminal clients that we do have an adjustment for policy inertia in the Taylor rule function. You can see it on the terminal typing TAYL go. Danny, we have a lot coming up in the next hour.
We do indeed. In the next hour, as Matt's alluding to, BlackRock's Rick Reeder will be joining us, as well as Beach Point Capital's Sinjin Boron and Snap-on CEO Nick Pinchuk and Julie Coronado, a former Fed economist.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophy.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
In case you missed it on the opening trade.
One of the words that we use as an organization is global trade is too big to fail. It's like water. It's going to find its lowest point, and there has been a shift in trade. So as an example, China-U.S. was a big trade lane for us, and Asia-Pacific to U.S. was a big trade lane for us. Well, now that's shifted to China and Asia-Pacific to Europe.
Yes.
So we have seen a shift in trade.
Don't miss the opening trade, live every weekday.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
In case you missed it on Bloomberg Insight.
There are many things that economists disagree on, but I think one thing that they all tend to agree on is that central bank independence is a good thing. It's a hard-won lesson. It's a shame that it's being, I think, not remembered as well, especially in, again, the place which is supposed to be the world's safe haven.
Not just about the dollar, it's also about the yuan. Some talk about perhaps competitive devaluation. If we continue to see the yuan decline from here, that's detrimental to your economy as well.
You know, a lot of the countries in the region, there's still enough of us that are still around, present company included, that still remember the 1997 Asian financial crisis. But there's still a bunch of us around that still remember that and still recognize the lessons and the dangers of trying to, you know, basically do too much in terms of trying to keep exchange rates at a certain level for competitive reasons.
Don't miss Bloomberg Insight live weekdays.
Inertia. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Danny Berger. We are up 0.25% on the S&P 500, so headed for a 31st record high on this market.
Oh, and it looks like we have breaking economic data. Thank goodness. We still have Michael McKee with us here on set. We're getting, ISM services, because we got the manufacturing yesterday, and it looks like we're missing the mark in terms of the headline number, Mike.
Yeah, the headline number comes in at 50, which is right on the line between contraction and expansion, and it is lower than what was anticipated. We were looking for a 51.7, and so we dropped from 52 to 50 even. Prices paid goes up a little bit. It is a very small amount to 69.4 from 69.2, which is why it took me a second for that to register. New orders fall to 50.4 from 56, and the employment index is 47.2, which is up a little bit from 46.5 back in August, but really insignificant in terms of what it means overall. And that'll be interesting to see if and when we do get the payrolls report, what happens with service industry jobs, because that's what Stephen Myron was talking about, service industry inflation. It is the biggest part of the economy, so we'll see what we get out of that. Business activity does fall to 49.9, below 50 from 55. So things have slowed down, and the outlook has slowed down for the service industries.
You get a little bit of a market reaction. Stocks ever so slightly weaker. You also see yields come in. They were pushing much higher, but now your 2-year yield up by just 1 basis point, 2 basis points for the 10-year yield. So they have come in, but not massively. Mike, thank you so much for all of your excellent work this morning and for that fantastic interview with Governor Myron. That's Michael McKee. And we did speak with Fed Governor Stephen Myron earlier, just moments ago, and Mike asked him about today's delayed payrolls report.
Access to high-quality data is of utmost importance when making monetary policy decisions. However, it's also the case that we don't make monetary policy decisions every day, right? The FOMC meets to vote once every 6 weeks or so. Now, I think that's a bit longer than most shutdowns have historically lasted, so I'm hopeful that we'll get the data by the time we actually have to make the decision.
Well, we certainly did not get it today. Let's continue the conversation with Rick Reeder, Chief Investment Officer of Global Fixed Income at BlackRock. Rick, fantastic to see you this morning. And it's not just the Fed that needs to make decisions without data. It's this market. As we exist in this black hole and try to parse through alternative data sets, how much conviction can you have on fixed income and where yields go during this government shutdown?
So listen, by the way, I've said for a long time, one of the ways we actually get really good data is corporate data. Like I've found, I think survey data is interesting. I tend to think it's skewed. It tends to move with sentiment, tends to move, quite frankly, I always find with the S&P 500 moves a lot of these surveys. What I focus on, obviously we need to get the data. We need to get the payroll data. That is good data generally. What we need to get, what I think is fascinating, and particularly in today's world, is you look at some of the corporate numbers and you look at what's happening with hiring, what's happening with productivity, how are they managing inventories. Listen, more data is better. We do loads of things with AI now and looking at how you scrape the internet, how you look at credit card data. So anyway, this is one of the pieces you'd like to have, but you certainly don't feel like you're operating in a vacancy.
I mean, I was just talking with Mike McKee about this during the break, and I don't know how much granular data you need to know that core CPI is going to be about 3%, right? It seems to hang out there forever and everybody's fine with it. So what are the most important pieces you're looking for? Is it on the labor market as opposed to on the inflation side?
Matt, I mean, it's such a funny thing. I've been doing this a really long time. I'm always blown away that we sit around, and particularly in my business, we sit around and wait for that CPI report, and it's a couple hundredths of a percent that seem to shift sentiment one way on inflation. At the end of the day, it's actually not that big a deal. To your point, we're operating price stability. It's actually at a pretty extraordinary level. We're ticking up a little bit because of tariff transmission. That is a big deal, and obviously in the short term, but our sense is that's going to come down, a la productivity, et cetera. To me, it is for the next 5 years, the most critical piece of information is going to be labor. I do think that productivity, innovation, technology, you think of the amount of money that's going into it, will ultimately bring down wage pressure and will bring down, consequently, will bring down inflation. Labor, to me, is a big deal. Think about what's happened the last few months. You're actually watching the economy. We print, 3.8% real GDP. The economy, we think, for the year is going to print over 5%, 5-ish%. Nominal GDP. Companies are printing tremendous earnings reports, but they don't need the same amount of infrastructure. Labor, you look at what's happening to SG&A, cost of goods sold, labor. Much productivity is happening. It's not like AI is 2 years from now. Productivity, not just AI, inventory management, logistics, how you run your business more efficiently. And by the way, part of what's playing out is companies gaining scale. They're trying to get scale because you think about how you can run your business, higher margins, lower cost infrastructure. Long-winded way of saying, we need to keep more people employed in this country, and I think the primary trend or the primary focus has got to be let's keep full employment where it is, for however we get there.
Still, how we implement AI, Rick, is in the early innings. Many companies are still just figuring that out. And in the meantime, until that's fully figured out, billions is getting plowed into the project of this. You see Jeff Bezos, even though Amazon has put a lot of money into it, saying that it is a bubble, and yes, it will have benefits, but it is a bubble. So what happens in the meantime? Because there is this timing mismatch, perhaps, of the productivity gains, of that helping inflation. What happens in the meantime before we get that, and we still have this massive spending that maybe looks a little bubbly?
So I would say there are two parts of that. The first one is, I always like debating and wondering where the efficacy of AI is going forward is very hard to consider today and think about where we're going to be. What you do know, and as an investor, I always think you've got to parse your investment paradigm into what are the buckets and what is the time frame that we're operating within. For the next 6 months, the next year, next probably 2 years, the amount of money being spent on infrastructure to develop this, as an investor, to me, that is critically important. I need to know how much is going in, who's going to create cash flow off of it, who's going to grow top-line revenue off of it. So I would say in the near term, those numbers are real. And when I look at the cash flow and the free cash flow, some of these big hyperscalers, and by the way, it's not just around AI, cloud, software development, logistics. We talked about robotics, automation, and I just think what's playing out in front of our eyes is it's not just AI, and it's easy to bucket things into one. Automation, productivity, robotics, software, efficiencies in how you run your company. Like all of those are leading to more efficient businesses, which, like I say, I think creates a labor problem going forward, potentially a labor. By the way, part of why I think one of the developments, if we move the mortgage rate down in this country, if you build more houses, like the benefits to doing that, because you put people to work, hard to AI building houses. And what it does, it creates velocity of labor. And when you create velocity, so if somebody loses their job in one city, they move 2 cities away, but they got to sell their house, or 2 states away, they've got to sell their house. So all these things become very much interlinked.
How much does that affect BINC, Rick? BINC, this is the ETF that you run, the iShares Flexible Income ETF. I noticed some allocations in there, for example, to high-yield corporate debt. But how much is that related to, and the rate of return that you get in this fund to the AI boom?
Yes, sir. So, listen, my one man's opinion. I've said this before. I think this is the golden age of fixed income, the golden age of getting yield. I don't know, and I don't think anybody really knows 2 years, 3 years hence what it means in terms of, you could go through some crazy studies of how the costs of things come down radically, and I've heard some pretty brilliant people talk about that. Today, versus the prior 2 decades, if you can get 6.25 yield, think about, to your point, Matt, if inflation, let's say it's 3. If you can get 6.25, and you're at 3, like that is unbelievable. So what we're trying to do, keep our yield there, keep your yield there, but keep your volatility down. Think about how pensions, endowments, foundations, their return target is usually about 7. If we can keep our yield at 6.25, keep our volatility running about under 300 basis points of volatility, so that people can buy equities, do other things, private credit, et cetera. For us, it's like, keep it at 6.25, keep it well into investment grade, and diversify it like crazy. That's been a big deal for us. Keep that. So we've had to rotate, as yields have come down generally, a little bit of EM, local rates in EM. If the dollar is softer or contained, EM is interesting. A little bit more fixed income in Europe because of the cross currency gets back to the currency. So we've been tweaking that, but the whole, our laser focus, keep the yield up, keep the volatility down, keep our quality at a good level.
And that helps you with these big trends, be it AI and, Rick, really the other trend. It's a conversation that I find myself continuing to have, is the Passover of net worth, that the boomer generation has this huge amount of wealth. And this is a chart you've been looking at, the percent of age 70 plus total household net worth. It's now at 31.7%, the largest by far on record. What does that do to this market, Rick?
So yeah, I mean, and thank you for showing that chart. I mean, what we're living through, I hear analysis all the time that compares today's rate structure or the paradigm today, the economic paradigm, to the 60s, 70s, and 80s. Completely different demographic, completely different manufacturing versus services. What's happening today that is extraordinary, and then you get to the interest rate tool. Older savers have no debt. They actually are sitting on piles of cash and liquid assets. So what happens is when the interest rate stays high, they actually have more income. They have more income. When you break down the consumption that's happening in the country today, the vast majority is wealthy, older savers. The part of, like, if you bring the rate down, actually, when people say, oh my God, if you bring the rate down, you'll create, economic boom. Well, actually, the consumption is being driven by older savers, higher income. So the number that I think is staggering, if you take 40% of the country, the lower 40%, of wealth, they account for 22% of consumption. The top 10% account for 23% of consumption, meaning I hear people talk about economy's doing great. The economy's doing great because a cohort of the economy is getting more income, and the more we keep the interest rate up, they get more income. It's the people that borrow, that are homeowners or want to take out a HELOC, that are struggling. And you see that every earnings report, you see that, including the airlines. First class doing well, main cabin not so much. It's a pervasive trend.
And Rick, and by the way, I'll make an assumption here, which I probably shouldn't do, but I imagine that the wealthiest people in the country are also able to live the longest. And the reason that share of 70-plus people holding so much net worth is so high is that we're just living longer and longer and longer and able to extend that.
Yes, sir. I mean, by the way, that chart, by the way, not to simplify that chart into its older, it is savers, and there's a demographic evolution. By the way, we didn't get a payroll report, but so what's driving payroll and what's been driving it for years? Healthcare. So think about the jobs report, what we would have got today. Let's say it was 60,000 jobs. It would have been all healthcare, roughly. We don't know what it was. But in the last 4 months, if you stripped out healthcare, the job creation is negative. So aging demographic, like you said, plus a paradigm of where the savings is and who owns the debt, or who owns the assets versus who has debt on their books. But by the way, it's completely different than anything we've ever seen before. And that's why I find these traditional analogies just don't make sense. The economy don't make sense.
It is absolutely fascinating. The silver tsunami. Rick, thanks so much for joining us. Rick Reeder there from BlackRock. Let's get a check on what's going on in the markets right now, because we are in position to put in place another record on the S&P 500 right now, up 0.25% after just eking out a gain yesterday. As we've been talking about, this year we've averaged a new record high every 4 days. And right now we're looking at 6 days in a row of gains on the benchmark index.
It's counterintuitive that 10-year yields are up 2 basis points, despite the fact we just had U.S. services falling to the weakest business activity since 2020. But who said markets make sense these days? Here's a move that probably makes sense. Applied Materials down 3%. They've warned that U.S.-China trade restrictions will cost the company a $600 million hole in their revenue in 2026, Matt.
Tesla shares rebounding today after a drop yesterday. They dropped yesterday on good news that they had amazing deliveries, and they were back up today. Although, look, they've fallen again, so no rebound.
Volatility. Shares of Apple, they are falling. Jefferies downgraded the iPhone maker to an underperform, a very rare bearish rating. The analyst said that the current valuation prices in an overly bullish iPhone outlook. I'm pleased to say that we will be speaking to Jefferies' Edison Lee later this hour, the man behind that call. But first, coming up, Sinjin Boron of Beach Point Capital Management on signs of fragility or maybe continued strength in private credit. We're going to discuss the push and pull. That's coming up next on Bloomberg Open Interest.
Governments make the commitment for net zero. Companies have begun to do the work of looking down their supply chain? I'm not sure. I think that while there isn't the intense activity around accelerating ESG, it is not a stop. In fact, I wouldn't even say that it's a pause. I think it is a, how do we do it in this current environment? I mean, it's only 3 short years that Thailand hosted APEC, and the thematic from that APEC to subsequent ASEANs to, to so many of the bilateral engagements that we've had is really, how are we going to do this just transition? How are we going to transition our economies from energy systems to data systems in a way that's going to get us to a net neutral world, right? I mean, a net zero world. I don't think that that's going to change. I think that there are adjustments to this. All the companies that I've been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going. And if you look at policies, like in Europe, they've got CBAM, right? I mean, the carbon border adjustment. Different governments have put forward commitments to getting to net zero. And I'm not seeing any giant signal around the world that is saying, let's stop doing this, right? I mean, so if that signal is still there, that is actually, I think, one area of predictability for businesses and investors, that is still directionally where we're going.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 7 p.m. London time. Only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Goldman Sachs CEO David Solomon is optimistic about the U.S. economy. He spoke with Bloomberg's Tom McKenzie at Italian Tech Week in Turin on his outlook.
The U.S. economy is in pretty good shape. And there are some very, very strong tailwinds that have really had a profound effect. And there are also some things going on that are creating headwinds and are probably leading the economy to, underperform its expectation at this time. But I'm optimistic that we're probably going to see an acceleration as we continue to head into 2026. The big structural issue that's kept the U.S. economy going so well is the U.S., and by the way, other developed economies around the world, are running very aggressive fiscal stimulus plays. Governments are spending enormously into economies in the developed world, and that keeps the economy going even when you have other headwinds. Second big macro phenomenon that's affecting the U.S. economy is all of the AI infrastructure build, all the capital spending, all that's going into the ground to support the deployment, the development, the continued growth of AI infrastructure into the enterprise, and that's a big tailwind too. That's balanced on the other side by the implementation of the trade policies, which are still getting absorbed. I think we're seeing, some of the effects from trade, but there's still more to go in terms of really understanding how the trade policy is fully implemented and how it balances growth. And then obviously the world's a little bit more geopolitically fragile, and that has an impact on growth and kind of confidence. But when you balance it all, and you saw the third quarter reading was quite strong. But year over year, from last December to this December, the overall growth trajectory will probably be a little bit less than 2%. And so that's slightly below trend, but still in pretty good shape.
And an acceleration into 2026?
I think that as the trade policies are absorbed and you have the continued stimulus and the continued kind of tech spend, you've got a pretty good tailwind. I hear as I talk to CEOs that would kind of have their finger on the pulse. Certainly the upper end of the economy is still spending quite strongly, a little bit more constraint on the downside, on the lower part of the economy. But I think the things you have to watch labor. There's no question labor is a little bit softer, and the Fed's watching labor carefully. And, I think you've also got to watch inflation and whether or not the impact of trade is just a one-time price movement or there's something, more significant that comes through, and it's too early to know.
That was Goldman Sachs CEO David Solomon speaking with Bloomberg about his outlook for the economy. Let's turn to credit now. And legendary short seller Jim Chanos is sounding the alarm on the private debt boom following the collapse of First Brands, the auto lender, telling the Financial Times, quote, "I suspect we're going to see more of these things like First Brands and others when the cycle ultimately reverses, particularly as private credit put another layer between the actual lenders and borrowers." Joining us now, I'm thrilled to say, is St. John Boron, portfolio manager at Beach Point Capital Management, who is one of the lenders stepping in to give First Brands a lifeline. St. John, wonderful to see you this morning. And I think we should be clear in this that Chanos has been a credit bear his entire life and calls the end of things many, many times. But here he is arguing that First Brands argues more collapses to come. Do you think he's right?
Well, hi, Danny. Thank you for having me this morning. I would say, first of all, I can't really comment on specific credit situations, especially ones that are ongoing. What I can comment on is just broad trends and how they might feed into the overall leveraged credit universe. And from that perspective, we don't disagree that ultimately this business cycle will turn and that we will probably get higher defaults into the end of the cycle. We just don't think that right now is that time. Credit fundamentals, while slowly eroding, are still quite strong. The technicals that are underpinning all of the subsectors within leveraged credit, high yield, senior loans, private credit, those are all still quite strong as well.
How much of it, though, is just the amount of money sloshing out there, the demand for credit in all corners of the universe versus the fundamentals?
Right. It's a great question. I mean, it's one reason why valuations are where they are. And to us, what recent events are more indicative of, they really play into this theme of dispersion within the market. There's a huge amount of leveraged credit that trades at very rich valuations. And then in the other end of the spectrum of the market, you start to see problems arise. And it can also be overlaid very neatly with the type of buyers within each of these subsectors. And that's what speaks to, the amount of capital flowing into each one that you described.
Well, there was a study from Fitch saying that in a monitor of roughly 1,200 corporate borrowers or private credit, they reported a default rate of 5.5% in the second quarter. That's higher than the first quarter, which was 4.5%, which maybe speaks to your point that it is a split screen or a dispersion of the haves and have-nots. St. John, is there a risk, though, that on the downside, on the defaults, that it could spill more broadly, that it could create pain in other parts of the market that were otherwise healthy, as you maybe contend with things like forced sellers or otherwise?
Yes, it's a very good question, and I mean, it really does come down to the fundamentals themselves. I mean, so this type of market really should emphasize the need, importance, and even criticality of doing bottom-up fundamental credit analysis on each position within a portfolio. Right now, most of the default activity has been very idiosyncratic in nature. We have seen a recalibration of risk premia in certain subsectors. Consumer financials comes to mind. But to us, that's just the market being conservative. It's not really a reflection of any sort of panic at this point.
We've been hearing for a while now, St. John, that there's so much liquidity and there's so much demand for fixed income products that spreads are going to stay this tight near to eternity. How much easier or how much more difficult does that make your job?
Well, it's both, right? I mean, the yield on these sub-asset classes is incredibly attractive, and so we do focus on that. From a spread perspective, I think some time series of quality composition needs to be taken into account when we look at how spreads have changed over time. High yield, for example, is of the highest quality that it's been in decades, and so that probably warrants tighter spreads in general. Additionally, some of the components that go into spreads, including liquidity premium, forward expectations of credit losses, all of these are quite benign at the moment. And so we would expect that this current framework for the market would continue.
St. John, there has been a trend post-financial crisis, fueled after COVID, when the banks stepped out of the market, that more lending was going towards private credit. We did, though, see last week $55 billion, the biggest LBO, where JP Morgan financed $20 billion of that, was the sole financer. Does that maybe suggest that things are shifting back the other way, and that banks and the broadly syndicate market is coming back and taking market share back from private credit?
Mm-hmm. In part, yes, but also the size of that particular transaction sort of speaks to the necessity of having deep pools of capital and multiple asset classes that they can tap in order to finance it. And so that share shift is likely to go back and forth, as the market progresses. I can't think of a better example of just market dispersion in general than having that size of LBO announced during the same month that, loan payment defaults increases for the first time, in over 2 years. And so, again, just harkening back to that theme, especially as financial conditions ease, as rates come down, we would expect more of that. But that doesn't mean that private credit is out of the game in terms of financing some of these transactions going forward. We would expect 2026 to be an incredibly busy year from that perspective.
Sinjin, really appreciate you joining us. Sinjin Boron there of Beach Point Capital Management. This is Bloomberg.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs.
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every weeknight. Balance of Power, weeknights at 10 p.m. London time, only on Bloomberg. In case you missed it on Bloomberg Tech.
Why is it so crucial to the board's mind that it is Elon Musk that is able to get Tesla to this future?
The board's responsibility is to look at who the CEO is for the next period of time, and we believe that Elon is the right CEO, and our view is he's a generational leader. There aren't any other people out there like Elon who can actually lead the company over this next decade or so. Once you decide who the leader should be, you need to put in place a compensation package to incent and motivate him.
There were sticking points on both sides. What were they?
It's things that other people can't do. It's what the company could do that no other company could do. So those types of things are what are in this plan. It is a zero compensation package unless he delivers against pretty ambitious goals.
Don't miss Bloomberg Tech, live every weekday.
Breaking news from Bloomberg Tech's Ed Ludlow. He is reporting that Rivian is reworking its doors after employees and customers raised concerns over potential safety issues with the current design. Ed joins us now. And Ed, this doesn't mean that they're necessarily going to change the current design, the R1.
Right.
They're just thinking about a new door handle for the R2, which isn't out yet.
Correct. What we're talking about and what you need to know is that in the R2, which is their next-gen vehicle going into production at some point in the first half of next year, there's been a rethink on the manual latch or release that a passenger in the front or rear seats would need to use in the event that the electric system loses power. And what sources told us is that on their existing vehicles that are already out there in the marketplace called the R1, as part of a redesign, a generation-to-generation redesign that went through, the manual release, again, it's something you use when the system loses power, usually in an accident. Its position was moved to a sort of more inaccessible area of the rear doors. And what we discovered in the course of reporting, partly through anonymous complaints through NHTSA's database, is that people had a hard time with this, right? There was also an acknowledgement from Rivian staff internally that on that existing generation of vehicle, it's a potential safety risk. It's not intuitive in the event of an emergency to find this cable release that is somewhere inside the rear door covered. And so that's the reporting. Rivian, for a vehicle that's not yet out, is making a design change. We are not saying that Rivian is subject to any investigation, and we're not aware of, nor has Rivian disclosed any sort of accident, fatal otherwise, involving the door. But I do know internally a lot of the engineering teams and other executives realized that the design change they made in R1 when they updated it was a mistake. And this is the reporting we've done with Bloomberg's Emily Chang. What happens next, we just don't know.
And it also comes off the back of concerns about Tesla. Excellent reporting that the team has done there about locations of their manual safety release, too. How widespread is this in the industry among EVs?
Yeah, so the reason that EVs in particular with electronic door systems are now in the spotlight is that they are designed with intent. The benefit of having an electronic latch is that if you are traveling at road speeds and somebody in the rear seats, like a child, tries to open the door, the system recognizes the car's moving and so stops you. In other words, you can't open the door by accident. In old-fashioned cars, Matt, as you know, you could open the door with a manual release if you want to, even if traveling at speed. The issue is that the design has to take into account the electronics that power the window, the seals of the vehicle, and it all has to fit in the form factor of an EV that's a much more narrow space. And so the problem is that they have to put a cable release somewhere. And the story with Tesla that's analogous, you're right, is that there have been fatal incidents in Tesla's case where both incapacitated and other passengers just couldn't make it work. And the emergency services struggled to get them out of the vehicle from the other side as well.
I mean, part of the problem is they're using technology to fix a problem that doesn't really exist. I mean, all you do is put a manual door release and make it a little bit too difficult for a child to open, right? And I guess that's probably like a nanny state culture problem, as well as like we want to design things as high tech as possible. Hannah Elliott, my co-host on our podcast, Bloomberg Hot Pursuit, which you can download on Spotify or Apple Podcasts or wherever you listen, has a story out when car tech goes too far. Audi and Mercedes learn to pivot because they've got these newfangled gadgets that nobody really wants, and they only put them in for the sake of tech.
Well, real quick, our understanding from sources is the fix for the R2 is quite simple. Just make the manual release easier to find, make it the same design as the front seats and the rear seats, rather than having one system for the front, one system for the back, and make it more intuitive. Right. The point being that Rivian internally realized, the way we did redesign it for the R1 wasn't intuitive. It was more difficult to find. It's just an engineering and technology story, as you say.
Well, Lucid does it, you pull the latch a little bit and it's electronic. If you panic and pull it hard, then it becomes manual. And Franz von Holzhausen from Tesla told us that's what they're going to do essentially as well with a button that you push. At first it's electronic. If you push it hard, it becomes a mechanical release. So what a fascinating story. Ed, congratulations to you and to Emily Chang. Ed comes on in just 30 minutes time. He's the co-host of Bloomberg Tech at 11 with Carolyn Hyde. Now, Unfortunately, we did not get payrolls data this morning due to the government shutdown. You can find alternatives to the data we've been telling you on the terminal. Just type WSL space ALTE, or you can talk to someone who has boots on the ground across the country to get a read. And let's talk to somebody like that right now. Nicholas Pinchuk is the chairman and CEO of Snap-on. And Nick, if I recall correctly, you are constantly going around and visiting shops, visiting auto mechanics, visiting auto body professionals, and talking to them about the industry, about the economy. What's your read right now on the U.S. labor market?
Okay, here's what I'll tell you. Hey, it was good to see you again, Matt. You know, I hope you made the Fish concert in Columbus this summer.
It was a tough ticket.
I'll tell you that. Hey, look. Yeah, I was just in Washington and Maryland and in D.C. the other day talking to franchisees and speaking to them. You know, in our war, the economy is pretty good. But the labor market has a whole bunch of different implications associated that aren't necessarily indicative of the economy. I was at the National Association of Manufacturers, a great organization, over 10,000 manufacturers in part of that. And what's happening in manufacturing today, which is a big driver of employment, is people are keeping their powder dry. Because they're looking out in the future and say, I got to restructure the supply chain. And while it may seem that tariffs have settled down, we haven't done trade deals with Canada, Mexico, or China. And they are the principal sourcing partners for manufacturers. So all these manufacturers are sitting there. They're like quarterbacks who can't diagnose the defense. They're saying, I don't want to throw an interception, so I'm not going to commit to anything right now. I'll keep my powder dry, not really stay pretty lean, because I know when I make a change, it's going to raise costs. So I want to get some benefit or some cushion against that. And so that's what you're seeing. We're hiring in our hand tool plants, and we're a little different. Snap-on makes 80% of what we sell off the vans we make right here. But there are other companies that are doing that. They're sitting
Nick,
back and saying,
to take your football metaphor.
Danny, welcome back from London.
Thank you very much, Nick. Very kind of you. Great to be back. But if I could take your football metaphor and probably torture it and butcher it a little bit. A quarterback not moving is a decision in itself, and it's a quarterback that will get sacked. So if it is companies and manufacturers that are deciding not to do anything, to sit on their hands, at what point does that become a problem in itself for this economy?
Great analogy. Great analogy. It's a question, though, of the timing. In the NFL, it's 2.5 seconds. But if you're talking about making a decision and moving on a factory, this is one of the interesting, it's much different than the street's expectation. You know, I remember April 2nd, the Liberation Day, everybody expected manufacturers to have made a decision. It doesn't happen that way. You can't redeploy physical assets as fast as you can redeploy financial assets. And I think that creates a mismatch in terms of expected timing. So what happens when you move a factory, Danny, is you have to figure out what you're going to do with the people at the other end. You have to figure out how to bring it down. You got to make sure that your documentation is right, because if it isn't, you're going to spit up blood all over the move. Many people have lost a lot of money in moving factories. And you have to figure out your new site. You have to get the workers. All those things take time. And so, yes, the analogy is correct. But you have a lot more time than I think the financial community realizes in that situation. One of the things that's happening today, I think, there's a lot of uncertainty. The costs are going to drift up if you have to move to the United States. Eventually, they'll go down because the American worker is so effective at driving down costs. But you want to keep yourself as lean as possible. It gives you more degrees of freedom for whatever you're going to do.
Nick, I want to ask about your business because, as you know, I'm a fan. Whenever I see a Snap-on van, I try and stop and buy a tool. I can't afford a whole kit myself because I'm just tinkering in my garage. But I was thinking about the president's new obsession with furniture, woodworking, cabinetry, and so on, and looking through your website, and I saw everything related to mechanics, aerospace, tooling, etc., but nothing to do with woodworking. Why doesn't Snap-on venture into that sort of area?
Well, we actually don't venture too much into factories. Some woodworking could be the case. But Snap-on actually prospers where the penalty for failure is high and the need for repeatability and reliability justifies the Snap-on level product. I mean, these are non-Perel products. And so that's one of the things that defines our place. Now, a woodworking guy can probably afford to have 2 or 3 implements. But when you're in repair, Matt, as you know, the mechanic addresses the car. He doesn't know what he's going to use. He can't afford to have many of them because he's not going to use the same tool over and over. He needs to have a full array, and they got to work right away. This is a Snap-on thing. One of the cool things about Snap-on is I think it demonstrates the power of the American worker. One of the things about the labor, I think, secretly in this kind of thing is they think, well, manufacturers are never going to resource because American workers can't compete. You know, I know there are people, when I say this, they're thinking I'm a disciple of Jethro Tull. I'm living in the past. Well, that's not true. The Snap-on proves it every day that we can compete. Our margins have gone from 6%, and then going up 85% a year for the last 15 years. We're at 22% today. I'd like to say it was charismatic leadership, but everybody here knows it wasn't. What it is the American worker enabled. We enhance them by training. We enable them with technology. There are no deliveries from evil in technology. We don't expect AI to deliver us from evil. We expect it to help us gradually and enable our workers. Then they figure out how to improve because they're the best people to know how to improve their site. They know the job, but they know where it should go. Then we celebrate it and we start again. This is what's driven it. And so this is the core of the American worker. They do it better than anybody else. So we reshore, we'll engage more of our people in technical careers and be stronger than ever.
Nick, I think we can also say it's thanks to a very charismatic leader. We love having you on. Please come join us again. Snap-on Chairman and CEO Nick Pinchuk. Coming up on the show, a rare bearish rating on Apple. Jefferies downgrades the stock, citing excessive iPhone hopes. We're going to talk to the analyst Edison Lee behind the call. That's coming up next. You're watching Bloomberg TV.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
One stock we are watching this hour is Apple. Jefferies downgrades the iPhone maker to underperform, a rare bearish rating. The analyst saying that current valuation prices in a, quote, overly bullish iPhone outlook. Edison Lee is that analyst of Jefferies, joins us now. Edison, great to see you. Thank you so much for joining. I know it is very late in Hong Kong where you are, so we appreciate it. 60 analysts rate this stock. You are one of 4 to give it an underperform or a sell rating. Why?
I think that generally the smartphone industry is a very mature industry. And I think that unless there are some groundbreaking innovative features, a lot of consumers may not want to upgrade. And I think that the growth of the used smartphone market is also putting pressure on the brand new smartphone market. Because, for example, if you're using an iPhone 13, you don't have to buy an iPhone 17. You can buy a used iPhone 16 or a used iPhone 15 that are in pristine condition, and they probably would work for another 4 years. And the functions are still very similar. And we know that the used smartphone market is growing at double digit, and it's already reaching over 300 million units a year. So I think that's a structural headwind for the smartphone market. I know that AI presents a very big hope for growth, but I think that it's actually quite challenging for any smartphone makers to figure out actually what consumers want on AI and how AI can actually differentiate from each other, and so that consumers are willing to buy a new phone quickly. I know that iPhone 17 reception seems to be pretty good. I don't disagree with that right now, but I think that whether it's sustainable going into the next 2 months remains to be seen. And also, the market seems to be very excited about the foldable iPhone that will come next year. And I think that the optimism about the foldable phone, I think, may be a little bit premature, because if the selling price is at $2,000 or even more, then I think the TAM is somewhat limited. If you look at some of the similar high-end foldable smartphones in the market right now, for example, Samsung put out one that is very nice, very thin, thinner than the iPhone 17 Air, selling at $2,000. The expected one is no more than $3 million right now. So that's why I think it's difficult to expect.
Edison, this is fascinating to me, because essentially what you're saying, and correct me if I'm wrong, is that Apple doesn't really face a competition for the iPhone from Huawei necessarily, or Samsung. It faces the most competition for the iPhone from previous generations of the iPhone. That's the problem, is that you don't think people are going to necessarily upgrade to the latest when they can get almost the latest, because they do the same stuff.
Exactly. I think that's an industry-wide problem. So that's why it's not about people who don't switch from Android to Apple anymore. A lot of the Apple or iPhone's demand is actually coming from older iPhone users who need to upgrade. And if you look at the smartphone market globally, I think 75% of demand is coming from developed markets. And developed market consumers, they in fact all have phones already. And that's why the decision to whether they will buy a new phone depends on whether there are new functions that their current phone cannot do.
Hey, Edison, literally less than a minute here, but you also talk about the fact that they're not raising the prices. Would it have made a difference to you if they did, if they put out a more expensive iPhone?
Well, I think that it's a difficult issue to deal with, right? Because number one, if you raise the price, then you will be worried that it's going to impact purchasing power, and that's why your volume. But I think that Apple certainly makes this conscious decision to keep the prices the same, and in fact, the selling prices of iPhone have been unchanged for 3 years already. And in fact, this year the base model effectively has a cut, because they are selling a higher memory version at the same price as a lower memory version that they sold last year, and they stopped selling that low memory version anymore. So that's why I think they are trying to use the base model to try to gain back some market share and try to accelerate migration. And I think this probably is the reason why the reception is actually pretty good.
Edison, great to get your take. Hope we can get you back on the show as soon as possible. Edison Lee there of Jefferies on his re-rating of Apple stock. Coming up, Julia Coronado joins us from Macro Policy Perspectives. She's going to tell us why she thinks a recession over the next 12 months is more likely than not. This is Bloomberg Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
I don't think my position is as extreme as you make it sound. My dots for next year and the year after are not so dissimilar from the rest of the committee. All that's different is the fact that I want to get there a little bit faster.
That was Fed Governor Stephen Miron speaking with us earlier on his outlook for the U.S. economy. Let's get more with Julia Coronado, a former Fed economist who now runs Macro Policy Perspectives. And, Julia, what do you think of the idea that we really need to cut rates quickly in order to support this economy going forward?
Well, I think that that's sort of simplifying the problem that the Fed is facing, which is that there are very real risks to both sides of their mandate. We have been running above their 2% target for more than 4 years now. That is something that's a real threat to longer-term credibility of the central bank. And what is the central bank if it's not credible? So it's not something to be taken lightly. And, you know, most of the committee and most forecasters still think the full effect of the tariffs lies ahead, not behind us. Meanwhile, we look at the labor market, and it does look pretty squishy. Now, the big challenge here is disentangling what is a structural slowdown because of restrictive immigration and what is a cyclical slowdown due to weakening demand. And it's honestly looks like a mixture of both. The unemployment rate hasn't risen very much. And right now, you could put most of it, the bulk of the slowing in hiring, into the bucket of structural, though the broadening of layoffs, not layoffs, reduced hiring, which is resulting in negative net hiring. There aren't a lot of layoffs, not a lot of layoffs, not a rising unemployment rate. So I think that Governor Miron is simplifying the problem that the committee, that the FOMC is facing, and they're doing their best to kind of square the circle and make sensible policy in the midst of these conflicting risks.
Julia, usually on a day like today, the first Friday of the month, we'd have fresh economic and jobs data to ask you about. But because of a government shutdown, we don't. Typically, history tells us that government shutdowns can come and go without too much impact. Is this time different, though? Neil Dutta has been writing that it comes at an especially fragile time, and government workers who have been put on furlough might, in whole, change their spending behaviors. So it could have an outsized impact this time. Do you think he's right?
I agree that we are at a point of fragility, and so the economy seems to have kind of ground down to a low run rate, and so the risks are inherently higher of any kind of a shock. I think it really depends too on how much, we're hearing lots of blustery, strong threats, very unusual, right? We don't usually see the federal government, our leaders, threatening to use this as an excuse to cut programs and lay off workers. I think that's mostly a negotiating tactic, but they have engaged in very significant layoffs. They haven't all gone through yet, and that's another problem. We've got probably a couple 100,000 federal workers who've already been laid off, who know they're going to be losing their jobs but are still being paid for now. So sort of government shutdown or no government shutdown, we're about to feel the real shock of a loss of government jobs over the next few months.
And in your view, a potential recession, right, Julia? We've only got 30 seconds, but why?
Yeah, no, I think it's the labor market. We are at a tipping point, feels very tippy. And meanwhile, we're just throwing massive fistfuls of sand into the gears of the U.S. economy with policy. So the risks look tilted in that direction to me.
Hey, Julia, thank you so much for joining. Julia Coronado of Macro Policy Perspectives. Maybe sand in the gear, Matt, but another day where we're headed towards record highs, not just for the S&P, but for the equal weighted as well. It's a broad-based rally this morning. Yeah.
By the way, there's a lot of sand where she is, right? She's in Texas. And I'm going to call her up after because I want to ask what she thinks about the Wall Street Journal piece. Should they move more Fed banks down to the Southwest? Coming up on Monday, Marta Norton joins us from Empower, as well as Raquel Oden of H.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates, it complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKinsey in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Huawei's Ascend AI processors were found to contain advanced components from TSMC, Samsung, and SK Hynix. This as it works to boost domestic production of AI chips.
Plus, Rivian is reworking the manual release of its vehicle doors after employees and customers raised concerns over potential safety issues.
And Taylor Swift's 12th studio album, The Life of a Showgirl, was just released at midnight here on the East Coast. We're going to discuss the Swiftie effect.
And we've both listened. But now we're tuning in to what's happening in the markets because they're a new record high. Nasdaq 100 up once again. We are seeing the best week in 2 weeks or so at the moment. We're up 1.6%. Many calling it a hype bubble at the moment. That's what key investors in tech have been calling it. We've had Bezos say, look, it's a bubble, but it's the right kind of bubble. And we're going to dig into what David Solomon talked about in terms of the tech industry more broadly. He's also seeing concerns about some of the valuations, but dig into also where we've seen a little bit more risk sentiment turning to the upside, and it's in crypto, up 9% over the course of the week. Ed, we're back near 100, in excess of $120,000. The mood music has changed despite the government shutdown, Ed.
Look, there's a lot moving right now in Friday's session, but I want to look at one of the big movers over the course of the week. It's Samsung and its Korean shares. 4 straight weeks of gains, trading at its highest level since early 2021. There has been a lot of detailed reporting about Samsung technology going into all kinds of infrastructure projects. But the big Bloomberg scoop, as you know, is about what Huawei in China is doing with Samsung, particularly in the context of high bandwidth memory. So let's get to that report, Kara.
Another teardown. Let's get to how really the global chip supply is working right now. Bloomberg's Peter Elstrom joins us. So we get inside the latest, greatest chips from Huawei, and there's a lot of other companies that are within them.
Yeah, that's right, Caroline. We've had a number of scoops about Huawei and specifically what it's doing in AI chips. And the reason is that they're really the most viable competitor to NVIDIA at this point. They have a lot of backing from the Chinese government in particular, where the Chinese government is not just encouraging them to develop these chips, but also encouraging their customers to actually buy from them and not from other companies too. So what we found is our reporters found that in this teardown, inside of the Huawei Ascend chips, which are their AI chips, they've been able to use components from TSMC, Samsung, and SK Hynix, as you mentioned. Right. Now, these are components that they're not supposed to have access to under the sanctions that they are under, that Huawei is under through the U.S. government. They're not supposed to have access to these components, but they've been able to get them. So they've been able to use TSMC dies. They've been able to use the HBM chips from Samsung and SK Hynix. These are somewhat older HBM components. It's the HBM generation 2E, which is not the most cutting edge at this point. Now, there's a possibility all the companies that we reached out to said that they've cut off Huawei at this point. They're not doing business with Huawei. But in the past, Huawei was able to buy from them and was able to stockpile from them. So that may be where they got some of these components.
So China's Huawei, we found evidence of other nations' technology inside of their server designs, essentially. But the other part of the reporting and the story speaks to China not being able to supply these core components themselves from their own domestic supply chain.
That's a very good point. Yeah, if Huawei stockpiled these components in the past and is now using them as they sell into the market, as they sell these Ascend 910C chips into the market, there's a suggestion that they can't get those from domestic supply. And if they can't get them from domestic suppliers right now, that suggests that maybe they're going to run out at some point. So that's one of the concerns about whether they'll continue to be able to sell these chips. As we wrote in another scoop a few days ago, Huawei is trying to ramp up their